Yo, 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 good morning, everybody. Welcome to the midweek section of the Fivers live stream. My name is Richard, and one of these two sides.
Yeah. There you go.
There we go. Is Sir William the Account Conqueror. How are you this morning, my friend?
Like all fantastic leaders, my conquering has been conquered, nearly.
Ah,
All greats in history must find their imminent or impending doom. Dude, my account's taking a bit of a hammering at the moment. I'm back down to 5.5% down.
oof.
Yeah, man, it's just like it's one of those things. I'm not too sort of heartbroken over it, but it's just draining me. Like this account it's the longest I've actually had an account in such purgatory
Disarray.
almost. It's just in the middle doing like not a lot. Like it's not in profit, then it's a negative, then it's in break even, then it's a negative. Like the first P1, P2 was nice. I floated around drawdown for a bit, passed. Then I went into some deep drawdown, passed. Then this time I went into profit, deep drawdown, break even, drawdown, break even, deep drawdown. Now this is where I'm at now. So yeah, man, it goes to show, like, I've managed to do this all on stream on like absolutely every trade I've taken on stream, and my other accounts are fine. My other accounts are actually taking a bit of a hit. They're currently idle at break even, but I think one's at break even, one's in a little bit of drawdown. But nonetheless, they're still healthy. They're still doing well. However, because I limit myself so much to only trading on stream, it's quite difficult to trade when you're going through that sort of bit of a lull stage. So yeah, it's taken a bit of a hit at the moment, and
Yeah.
honestly, I think
Everything's on full view. That's another thing. It's
yeah,
like everything's in full view. It's just like if Will screws up a trade or if he takes a L, everybody's like looks at Will. They're like, doesn't Will know how to trade? Then it's just like, well, you've done everything from
yeah,
the getting the
literally,
account, passing phase one, phase two, getting to where you are right now on it.
yeah,
It's
man,
all
it's
100% live. And if people don't believe us, they can go back to the old
yeah,
LLTF streams. So all of the information is right there.
yeah, man, it's been a journey. It really has been a journey. And look, it ain't over. I haven't blown the account. I've gone from 7% down and then back to break even. So I'm only 5.5% down, but it still feels like a lot. It still feels like
Yeah.
it's just feels like a big weight on my shoulder right now. I'm like trying to like really sort of lug over this weight over the finish line, and at the moment it's just there's no finish line yet. But we'll see. We'll see how it goes. I've got to keep stripped to my strategy.
I appreciate the fact that you're still willing to, just go at it.
Yeah, man. I'm not giving up on this yet. There's still time.
Yeah, good, dude, good. Um, I have been having a little gander at the market. Yesterday's price action was relatively good across the board, I think. Coming out of Tokyo session yesterday, maybe I should just bring my screen up. Yesterday across the board, like coming out of Tokyo, we had this is a 50 EMA, and then this shadowy one is just a 20 EMA with a EMA of the 20 EMA. Anyway, so it just shows a little bit of volume. So just coming out of yesterday, this is EU. EU had this very nice downward trajectory. We came down to a little bit of rejection, but then eventually started pushing lower into the New York session. Going into New York, we kind of balanced out this bottom section. If you go towards the left, I've removed everything, but if I go over to the 4-hourly, you'll see that it was a while ago, but we had this small little area of let's call it like short-term consolidation here. Not a lot of like action happening around November 19th to about 25. We've been stuck in this kind of like little area. And anyway, so this basically is where we came to test yesterday. We just wicked into it. Rejected very nicely off of it. Like if you can see on the 4-hourly, this candle over here is a very, very nice rejection. We basically closed very close to where we opened up on that 4-hour. Very nice large wick below, small little wick above. And then we re-attempted to try and push. Oh, that's a P. We re-attempted to try and push lower here, which just didn't happen. But now today it seems as though we're a little bit sideways again, even though this is on the hourly and it was only the Tokyo session so far that has been taken into play. But EU right now, after a nice sell-off yesterday, well, I say sell-off, but like just a downward trend on EU yesterday. Now we've come into a little bit of a consolidation during the Tokyo session. So it's going to be interesting to see whether or not this was in fact the low, and that we're going to now try and push bullishly, which begs to be seen. The same with GU. GU as well. Yesterday, coming out of the Tokyo session, very nice sell-off. We made the low, re-attempted to make a new low, took a low, but then immediately started to push bullishly during the New York session. Came back down ever so slightly, created a low, or created the low of the day so far, but then we already swept the high of New York yesterday as well. So very interesting for me to see as well where this is going to start going. I would love to see us not break lower than the Tokyo lows today, at least for the initial portion of the New York's the London session. Seeing as we've swept the high, I would like to see us try and push a little bit up to maybe try and get to the highs of yesterday. If you go onto the daily on that, you'll see that it was at least very strongly bearish from Monday. So this was that Monday gap that we had already filled. But I would love to see us not take these lows and rather come and try to take the highs first. And then during New York session, maybe then potentially see us push lower again. Because if it's kind of stuck here in the middle, there isn't much that I can do if we're kind of like just stuck here, you know? If we're going to be ranging between 2 points, it's kind of difficult for me to trade ranging markets. I would love to get into trending markets. So I would love to see it try and trend its way up to try and take the highs of yesterday before it comes to take the lows. That's what I would love to see.
Yeah,
UJ?
I don't know about EU and GU at the moment. It's a bit hit and miss. However, US 30, I'm already in a buy and $200 up as of literally a couple of seconds ago.
US 30. Very interesting that you would want to be into US 30 right now.
Yes. US 30 looks textbook to me right now.
On
I mean,
15?
look, I could be completely wrong, but no, on the 5. Could be completely wrong. However, it looks beautiful.
Okay, so if we just zoom in a little bit on the 5-minute, we have small little area of consolidation right over there. We have one low, which was created there. We have a secondary low, which is also the low of the day so far. Mm-hmm. We've got the high of the day, which is all the way up over here. So this being the layer, this being the high of the day. We've already created a singular higher low between these 2 points. And where's that? There we go. that local high over there, which was, let's call it a lower high, had already been swept, and we have now created yet again a new high up over here. So this is higher high, there we go. As well as a new higher low. Okay, so consolidation gets swept on the 5 minute. Also, these local highs over here also got taken out as well. But just wicked, basically. Not closed above. So what are you aiming for? What do you hope? The Tokyo highs?
Ideally, yeah, pre-session highs would be nice. Yeah, if we can go for pre-session highs, that would be le magnifique.
Yesterday's highs is all the way up over here, which is 48,851-ish. So we're about $500 dollars away, which is quite a bit, to be dead honest. Let's have a look at the 15 minute if there's any bases or like rejection points.
Yeah,
So we do
the
have...
the NAS looks nice as well. I want to see if we can get a NAS.
We do have one base, which was also an area of interest. Maybe I can just largen this a little bit. As a area of support / resistance, this breakpoint I think looks decent. Just from Monday, basically. Monday's low. Yesterday, during the London session, we tried to break through, retested, pushed a little bit lower, retested yet again, pushed a little bit lower, pushed through, and now has come to retest it here right now. So overall, not bad. I mean, on the 5 minute, it does look good. Even on the 15 minute, it looks decent. What I'm not happy with is the size of these candles over here. At the open of London. They're a little scary, but the fact that we have higher lows, higher highs, does paint the idea that we're going to try and push up. So let's do a channel. Let's see how this channel... Where did you end up getting in?
Let me have a look. I got in 48,34,9.55.
So right over there. Stop loss, I'm assuming, at the low of the day.
Mm-hmm.
So what, 48,210-ish?
Stop loss, bang on, 48,210.72.
And then take profit at 48.54. The highs of the day.
Close. I've got. I've just put a quick stop loss up. I haven't properly looked into the stop loss yet, but I've just got 48,782. However, yes, it'll be higher today. So
700.
Yeah.
48,700. Okay, so you're aiming for yesterday's highs.
Yeah. Now, obviously, I'm not sure whether I'll hold to yesterday's highs. If we can be like extremely bullish, then I'll consider it. If not, I'll just if I can mitigate yesterday's losses, I'd be a happy chappy today, I think.
Okay, so this is basically what you are looking at right now. All right. I would be very, very, very confident in this trade if we can at least come and retest the Tokyo high and then pull back a little bit from there and then continue up, maybe during New York session. Given that we've had this sell-off yesterday and then a reattempt down here, it does feel a little bit more like there could be a little bit more movement in it to try and push higher. However, if I go over to the 4-hourly, this is still quite bearish in my opinion. We'd broken this higher time frame channel that I had up for the longest time. You can see it's like way back when this one started. And this was the first time that we actually broke it, and that was on Monday. We retested it and then started to push lower. And this, to me, from yesterday, felt like just another retest, a lower one, basically, in relation, even though it was equal test. So we kind of like tested this area over here. But it is still a lower high in relation to this previous high that we had all the way up over here, as well as that one. And it's also a lower low in relation to the previous one. So this is just on the 4-hourly. So higher time frame seems a little bit more bearish, in my opinion. Lower time frame does seem like there could be a potential to try and retest before maybe going back down again, considering that you had this nice strong attempt over here to try and push price higher.
Yeah.
I would just be careful, mate.
Yeah,
I
no, of course. Yeah, this
definitely,
I'm only comfortable taking this trade due to the fact that I'm able to watch it, and it's really early into the session taking this trade.
yeah,
I've got an invalidation zone at 48298, and for me to stay in the trade, I want to see 484223. So we'll see how it goes.
48223.
Which is the break above. So the invalidation is
48.
48298 is the invalidation,
Yeah,
which is
this low.
the lows.
Yeah,
And
and
then
then
my sort of confirmation for continuation would be 48422.
422. Okay,
Yeah.
sorry. I heard 48224,
Oh, no.
which
48.
was all the way down here. So I was like,
Yeah.
okay, fair enough. All right. So far looks okay.
The
Bit
pre-candle,
concerning.
yeah, the previous candle being on the 5 minute was stunning, but then we got one last test on this newer candle. So we're consolidating a little bit, but look, we'll see. This could end up just being a scalp trade if we don't get the higher confirmation, or it could just be a losing
Yeah.
trade. Who knows? You know, it's still according to my strategy, which is good. It's still a strict strategy at play. So as long as I'm following my strategy, I don't care the result. Yeah, EU looks like it could reverse from here to the upside, or continue from here to the upside. If I just scroll the screen up, you can see we've got this consolidation here, which we've tapped into beautifully, and now we're starting to react to the upside, which may be an opportunity to get in. But it's a shame this isn't happening on the 15 minute, because then I could drop down a time frame. But I don't want to drop down to the 1 minute. It's just consolidating. I'd need to see something at least here, break above, failure to break below these lows, pull back, break and retest, continuation maybe on the 1 minute. But I'm not keen on 1 minute trading. GU's okay. Gold's looking quite nice. Gold's starting to show form to be a little bit more bullish, but even so, if we go up into the higher time frame, we can still see it's just got that consolidation. Okay, we did have that sort of test below, but we didn't fill this gap here, which is interesting. What have I done? Can I go back? No, I can't. There we go, that's better. EU, yeah, just a bit drawdown. NAS is coming down. NAS is coming down. It's looking okay. I quite like the look of NAS. Although there is a possibility we can come down to here. S&P, haven't really looked at the S&P. It's consolidating. Not keen on the S&P. Ooh, okay, NASDAQ starting to look good. Yeah, USD is not. Yeah, we'll just see how it goes. I've got barely any risk on this as well, so it's not too bad. It's like $200 risk.
If we do continue rejecting off of this small little lower end of a channel and try and break this base that we have over here, then I would say, yeah, good, awesome. The problem for me right now is that we have the low down here, which was off of a base area that I had established previously. We do have a 15-minute base over here that was rejected last night and was retested now. So I would, for your trade specifically, I would want to see this area over here hold water and continue to try and push price up. Even if we do eventually reject again over here, at least you have like a short form, low hanging fruit kind of like trade that you can take. That I think would be great. And then what I would like to see is this short little channel that we've created now start expanding. So start doing something like that and then start pushing up higher. I would love to see that on EU, and then the same on GU as well. I would like to see, even though yesterday's New York high was already swept, I would like to see these lows down here respected and price to start establishing a new upward trend, ideally. Also with the same idea that we start expanding this upward range a little bit, that would be great. On EU and on GU. But once again, same idea on the US30 is that on the higher time frames, we are quite bearish on both EU and GU. So if I go over to EU as well, quite a bit. With EU, yes, we've had this rejection on these lows down here, which is great. But I would like to see it follow again, like really, really push up strongly from here, which right now I'm just not seeing the conviction just yet. But that might come after news, because we do have news today.
Yes.
We've got ADP non-farm employment change as well as ISM services PMI. Maybe that is going to be the like catalyst to like start potentially pushing it up. But as of right now, these big dropping candles that we have here is not a good sign for me in terms of higher time frame for a bullish structure just yet.
Yeah, if I'm honest, I kind of prefer to see some selling pressure coming into EU and GU now anyway.
Yeah, I agree. I want one more test of these lows.
Yeah, thing is, I can't find, even on the 15-minute EU and GU, I can't find a reason to get in on this. So I think we're going to have to wait for price to develop a little bit more. Yeah. A bit like what I was discussing yesterday, a bit of consolidation, a break below, pull back to put in a lower high, then a lower low, lower high, entry continuation. I think that's what I'd want to see on EU and GU. Right now, if anything, it's at quite a nice buy position.
This channel that we have had established since the 26th of February, we have just broken above, but we have returned into it yet again. So my question is, how deep can this pullback be? If it gets to these like low points over here, which was the Tokyo lows, it kind of would fall in line with the idea of rebounding off of the 75% marker, which is what this is. This is the 75%. This is the midpoint. This is 100%. This is the 25, and this is the 0. So that would be pretty cool. And then try and push up again from there. But I just feel like there is a lot more space to be taken down here before we continue up. But once again, begs to be seen. We'll wait for EU and GU to kind of like play out. I think just short term, lower time frame, it's very, very slowed.
Yeah, I'm just catching up with some more comments. Okay, so NAS. Okay, EU has tested that low. Sorry, US 30 tested that low. Yeah, there you go. EU's dropping. In fact, EU's dropped now below that consolidation, which is quite nice.
Here's a question from Pete Weber asking, how many are to get back into the green? I do assume that this is directed more towards yourself, Will.
I've got to get about 5.5% to get back into the green.
And then that 5.5% in terms of R, you generally risk about 1% per trade?
About 0.5% per trade.
All right, so 11R. So 11R to get back into break even / green percentage, Pete.
Yes, indeed.
Trading Journey Daily is saying today is all sideways. Yeah, but like we just established earlier, we did have this like sell-off of yesterday, and generally after a deep sell-off, we get a little bit of consolidation, either a bit of a pullback and then a continuation, or a bit of consolidation and then a breakout to try and continue lower. So in this case, we're currently stuck in this consolidative section, and that consolidation can be slightly bullish. So it doesn't mean that just because we're consolidating that it's exactly the same highs and same lows. We can have a bit of like consolidation that's doing that. So you're making a little bit of highs, you break a little bit lower, you make a low, you try to push back in again. But if you zoom out, you'll see that it's not directional. It is very sideways. So as it stands right now, if I just hide this, you see we had, when was this? This was from Monday on EU. We had the gap, which wasn't filled. We already traded a little bit lower than all of these lower points across the previous week. And then eventually when we did break lower than this point over here, which was right there, we did come back to try and test it, try to push lower, consolidate it a little bit, push lower, try to consolidate. So right now we're sitting in consolidation after a nice push lower on the hourly at least on EU. So as we stand right now, you're correct. We are a little bit sideways. I would be very careful though with a sudden break to the top, considering that we are quite bearish. A little bit of consolidation. It might be very short-lived attempt to push up because there's so much consolidation and price action just above for it to come and retest again. So price can come back into an area of consolidation of yesterday and then start getting more momentum to try and push lower. It's all going to depend on whether or not this is in fact the low that price really wants to push up from. If we keep making higher lows and higher highs, by all means, it might have reversed then. My biggest concern is just the sheer longevity of this downward trend that we've had, and there's a lot of price action that needs to be broken on its way up to really say, yes, we're back into bullish territory on EU, specifically referring to EU now. Just having a little look here in chat. I see Jimmy is very upset about
Yeah, just a little
payouts.
bit.
So, Jimmy, I'm just going to be straightforward with you, my friend. Myself and Will, we're the live stream hosts. We have zero control, zero on payouts. That is support. So, reach out to support. Go and harass them for answers, because unfortunately myself and William would not be able to give you any answers whatsoever, because that's not our department. And I see there's a bunch of people that's jumping on with the same as well. K4PO saying, can someone contact risk management so I can trade my funded account, please? You can do that yourself as well. You can do it from the hub. You can talk to support. That is not our area whatsoever. Good morning, unbiased trader. You saying I won't get my account?
Well, if it's in processing, then yeah, of course you'll get your account.
Yeah. Who's saying you won't get your account? Who do I trade with now? Okay, I'm just going to go ahead and say this. Listen, guys, everybody that's in chat, let's just establish one or two like baseline things. The live stream hosts have knowledge about the accounts, how they work, how they operate, and so on. But we have no control over when you get a payout, when your account goes live. You can ask us, we can try and guide you, but we will almost always direct you towards support, because they're the ones that are going to give you the most concise information and be able to give you what it is that you're asking for. That's the first thing. Second thing is, try not to take what is being said out of context. If someone is saying, they're struggling with a payout, and you come forward and say, oh, you're saying I won't get my account, that's not what we're saying at all. Remember, hearsay from people in chat versus hearsay from us is not the same thing. So if I tell you that, don't worry, just go and talk to support, do that. Instead of saying, but people in chat are saying, I'm not going to get my account, because that can be seen as misinformation. Always talk to support first. Let support be the ones to dictate what information you are going to receive from us. I cannot control that, and nor can Will. So I know that I can see that Jimmy is very upset. And I'm seeing K4PO14 is also jumping on the idea that you're not going to get an account. Dude, this is unnecessary on your part to get all riled up about something that we do not control.
Yeah, literally. I will say as well, Jimmy, you're saying here, then don't work for the team who are not working properly. Prop firm business is a team effort. 100% agree with this, but I would never go to the janitor talking about how someone is bullying me. I'd go straight to HR. I wouldn't talk to the janitor, and I also wouldn't, I wouldn't go to the boss and say, this guy over here isn't cleaning my urinals properly. I'd go straight to the janitor's management. So therefore, there's different sections in a prop firm, and clearly you need a little bit of educating on how business structure works. So someone, I'm only 24 years old, granted, but this is coming from someone who's grown up in business ever since a spawn. So I've watched all sorts of different industries thrive as well as collapse. I've watched how different companies run. I've traveled all around the world talking to businesses, getting to know business people. I go to cigar events, I go to whiskey events, I go to wine events where I speak to like-minded business people, and all of them have management of sections. So guys, management of our stream section, which comes under the class of entertainment and streaming and content creation, is this man here, this fantastic, hardworking, good-looking gentleman underneath me. He is management. He is our boss. Now, if you want to speak to support, that's a whole different situation. It's a whole different section of the company. Now, if I don't know if you're in business or if you know many people in business, but if you go speak to successful entrepreneurs, they have sections and subsections to make sure that the big boss, the CEOs, the founders, the CEOs, they're not stressing over the janitors doing their job. They're there making sure the business is running as a whole, which, in all fairness, guys, there is a lot of demand going on at the moment because there is so many of you being successful traders, but there's also so many of you maybe not necessarily following the rules, which is causing the management team of the analysis section, like the sort of risk team. Maybe they're having to do their job a little bit harder as well, because maybe due to the volatility with the war breaking out, maybe people are trying to utilize on that and maybe over risk, maybe FOMO. So therefore, they're having to work harder. Now, unfortunately, we are not the risk team. So, guys, please just bear in mind, we're here as entertainers, as presenters, as analysts who love our job, love talking to you guys, love participating, love having a banter, but we also love talking about charts, fundamentals, volatility, and all others. So, guys, when it comes to vibes, when it comes to chatting with us, please keep it I want to say PG. Please keep it nice, because at the end of the day, unfortunately, we don't have control over that. I would be equally as frustrated as you guys as well, but there's no point in going up and punching the janitor because HR isn't listening to you. Guys, look, go speak to support. We cannot do anything about that. And maybe if we could put my voice on repeat, so every time someone spams, we email them this message. So guys, please speak to support. Now, I know this is probably riling you up even more because you're probably thinking, but that's the simple facts behind it. Guys, look, this guy is working incredibly hard at making sure the YouTube and the streaming side and the content creation side is to perfection. That is his job. I am working very hard to make sure that I'm keeping up my end of the deal, which is my side of content creation and success in the streaming. LJ, everyone else, Dirk, Anastasia, when they come on, they do the exact same. So, guys, if you're not enjoying the stream, then have a go at this guy. If you think the stream's crap or it could be better, or maybe there's technical difficulties, or there's an array of issues that can happen for us to deal with, then you can you can come shout at me and I'll go shout at this guy, because I have control of that. I have the ability to knock on his door and say, Rich, shit's kicking off here. What can we do to make better? Because we have control over that. Everything else outside of that, guys, the Fivers is a massive company, a massive firm who is trying to make sure that they are providing the best service possible. Cut them a little bit of slack.
How are we doing, guys? Good
Yo,
morning.
Jay. What's good,
Good morning, LJ.
How are we? I gave myself a bit of a shave when we got the stash.
Dude, same.
Has returned.
I noticed. I
didn't quite
mustache
it. I literally had a shave. I just jumped out of the shower, but I haven't quite mustached it like you have.
No. It was getting itchy, so I was like, I'll bring back the hard stash for a bit.
I have to say, LJ, you're looking fresh, mate. Did you sleep well?
So funny thing with that.
Oh no.
I went to bed right on time, and then in the morning we had fire alarms going off, and I got woken up because they did no fire testing, and then I just couldn't get back to bed again. Because the thing is, I tried to go to bed much earlier because I was still being sick. So once it gets later in the evening, you start coughing, that whole thing, and then you can't actually fall asleep because you keep waking yourself up. So I eventually got to sleep, and I was very peaceful, and I got woken up very early today with fire alarms. So I got an all right sleep, but it wasn't my full 12 hours. So I still got like 7, still pretty good, all things considered, but I was really looking forward to that extended.
Were you looking for 12 hours of sleep?
Yes. I think I've only had 10 hours prior to yesterday. only had 10 hours sleep since last Thursday. So the 12 hours
No,
is
mate.
to like try and play catch up, you know? Right?
I love this.
So
LJ has
I've
come to cleanse the pool.
to clean the pool. Yes.
Yeah, shirtless, standing there with a nice long pole with a nice bag in the front, just like sweeping like debris from the pool, looking around with sunglasses on, glistening in the sun. You know,
I'm a man of many professions, as they say.
well, it's the economy these days, guys. Woo!
I will say though, I did hear in the background what you guys were talking about. Look, some of you guys, if you come in with that stuff, like yeah, there's always going to be a reason, right? We've sort of various times we've talked about this. There's always going to be a reason. So if it is taking time, it's being looked at. If you guys get pulled up for risk or something, yes, probably you are punching too many orders in too rapidly at too high a volume. It doesn't just happen just cause, right? So the same like the other guys were talking about, like I've been, with the fivers now for, it's almost coming up 5 years, right? So half a decade, like it's a long time. So yeah, like Rich and Will said, there's only so much we can do. The best thing is to talk to support. And if you believe you have a genuine case that validates how you've been trading, that kind of stuff, like you've got a proper strategy, you've got it marked down, written out, some kind of logic practice behind it that you can put into terms, either write it out on paper, send in a screenshot of that through the email, or else type it out in the email. That will help you greatly along the way, right? You have to understand there's a huge number of people and they have to try and manage every single person. So as well with you guys saying you're seeing some things in the Discord about this and that, you're only going to hear those loud voices as well, right?
Yep.
Everyone else that has not had a problem, obviously they're not going to be squawking, right? So that's not how you take in information. Now, if you guys want us to help you in any capacity that we can, right? And maybe you're confused and maybe have been waiting for a while and you want some kind of feedback. If you can tell us maybe how you've been trading, what kind of volume, what kind of lot size, what kind of, stop loss, that kind of stuff. Maybe we can point out in the meantime, whilst you're waiting, why this may have occurred, right? That's probably your best bet. So rather than just, coming in with that stuff, come in with more information. Give us some information of how you're operating in general, and we can potentially even give you feedback to try and help guide you to where you're not going to have these kind of problems, right?
Yeah.
It's important to note that it also depends on where you are looking for support. If you're only going into the Discord support section, so the support section on the Discord, you're going to get moderators, and then they will redirect you to the online support, which I believe is the best. Go to your hub. Within the hub, there is a chat bot at the bottom where you can talk to a support agent. That would be the best channel, in my opinion, to go and have your queries answered. Go straight into your hub. They have all of your details there. If you're going to do it via Discord, it's first going to go through a moderator. A moderator is going to try and redirect you to live support. It's always the best to just go straight through the hub. And if you haven't done that, there might not even be a ticket loaded to your account saying, I have a problem, please give me feedback. That's what I'm saying. So go to support via the hub. That is the best place to get that.
Yeah. So if you go via the hub, you should be able to go to a live chat, for instance, as well.
Yeah.
And then if you have, like you're saying, it appears you have sent emails, you should have some kind of reference number that you can provide. And if you want to talk to someone live because maybe it's been a bit slow, potentially the email has been missed. That does happen. Like everyone's human. There's thousands of these to go through. you can then reference that and it'll be able to be pulled up in the system and they can address it directly, right? So, but man, I gotta admit, Jimmy, some of your comments here aren't exactly. I can understand if one is frustrated and that kind of thing. Totally understand that. Totally respect that. But like we like since I've just jumped on right now, like I'm trying to help you. I'm trying to assist you here. And so if you do have any other questions of how that might have happened whilst you're waiting, you can definitely pose that to us, and we can walk through it, talk through it. In the meantime, like we said, go through the Discord. You've obviously got a Fiverr's account. Go through the Discord. You said you came from there. Go to the support channel that will bring up the specific link through there, which will take you to the live chat. You go through, there'll be a few automated questions, which are to filter where everyone goes, and eventually it'll come to talk to a live agent. And then you can bring up your reference number and all the rest. And then it should be sorted fairly promptly from there in whatever form, whether you need to wait for a follow-up email, whatever else it is, but you'll get the next steps. I mean, as when your first ever payout in 2 years, I tried all possible ways. I know, yeah, dude, I totally get it. Especially after 2 years, you probably put a bunch into this, not just time. You've probably expensed a bunch, and so if you do have that payout laying there, like you're finally psyched. You're like, yeah, I did it. You got through. So first of all, I would say congrats on that. After 2 years, you've now seemed to smash it, right? So that's really good. So take that as a takeaway first and foremost. But yeah, from there, it definitely comes down to how you're trading. Like, there's going to be a reason why it's paused. So go through those channels, like we said, and you surely will get it figured out. Now, again, not to completely derail the stream, we should move on to the charts for everyone else here. So hopefully that helps you out, mate. And
RM, I did see that you asked for the GU chat as well, or the GU chart, and that you are in a 4-hour trade already, aiming for the doji. I've marked up the area of the doji for you, but I don't know where your entry is. If you don't mind showing us. And then this comment, if you try to open the chat box on the PC, it doesn't work. Something that you can try and do is just make sure that you don't have an ad blocker of sorts that is blocking interactions from offsite, or in this case, the chat bot itself that's not blocking it. Just go and have a look at that. It's one of those potential things that could be a problem, depending on which browser you are using. So I would say that. Anyway, back to the charts. Bebo, we're going to move on immediately. I see Wasan is also in here. Wasan, we've already spoken about this more times before. Unfortunately, we cannot help you. And if anybody is in chat saying, "Oh, they're providing evidence," it doesn't matter if you provide evidence to us. I can't help you. This is not my area. Exactly. We're moving on.
To the NASDAQ, I have hit a 1 to 2 hour on the NASDAQ, stops at the low.
Oh, beautiful.
TP, a nice 1 to 2. I got wicked in really nicely. It was around here somewhere I got wicked in. So that was really, really nice. And then I was risking like 80 to $100 on this. It wasn't big. However, I took out with the US 30 as well, just due to the fact that, we got this nice candle wick here, followed by this 2 bearish candle push, really bearish, really strong. And then we just plummeted under. And I thought, even though we closed in a wick, I was like, okay, I've seen this price action before, It happened to me yesterday with GU. I thought, I'm not risking it. I'm not doing it. And then we got this really nice bullish move up. And then, as you can see, it took out here after wicking the low. So I don't know if I'll try and make it a little bit bigger so you can read it. There you go. So it took out here after wicking the low. So total US 30 and NASDAQ, I banked, thankfully due to no commissions, which is nice. I banked 470 USD, which is
Nice,
yeah.
that's good.
So made back half of the loss from yesterday, which is look, it's something. So I've technically for the week I'm only down $300. I'll take that. But a lot better than $800. And then yeah, that's pretty much me done right now. I've been looking, see what's going on. Gold. There was a nice buy opportunity on gold here. Rich, I don't know if you looked at this as a base, but this was a beautiful area here, as well as the fact that we got really nice wick rejection. So there was a potential you could have entered in on this. Don't get me wrong as well. We had the break and close above. So we've had
Give me one sec, guys.
Higher low. Yeah, no worries, mate. Higher low, higher high, higher high. Hopefully this can push in to be a higher high. And if so, this structural pattern here is textbook. However, I was in NASDAQ and US 30 when this was happening. So, of course, that was, given the fact that I'm in such drawdown, it was a little bit higher risk than I wanted to be in if I was to enter a third trade. So, according to my risk management plan, I wasn't allowed to enter in. However, there's a really nice gold opportunity. If you did take that, it would have, for me, it would have looked something a little bit like this. Probably gone for a 1-to-1 on this, ideally, but a 1-to-2 would have been nice, or come up for yesterday's highs. Pre-session highs.
Okay, fair. To answer your question of earlier, you were asking of whether or not I view that as a base. If you go a little bit more towards the left from that trade, so, oh mate, you're in Hong Kong now. I need to kind of like remember what is your time.
No. Give it to me in UK time. I've got my computer set in UK time.
Oh, okay. So 6:35.
6:35. Here.
Okay. That candle is a base, and if you pull it all the way through to the right-hand side, you'll see that roughly around 8:05, we had the first reaction off of the base. So the follow-up candles from there, yes, would be a continuation of the bullish movement itself. So what you marked up is technically not a base according to my definition. The way that I define the base would be there's at least 2 to 3 candles prior to that pullback that is bullish. So it would have meant that not only the 820 but also the 815 and the 810 candles needed to all be bullish candles for that to count as a base, even though that initial 835 candle, I'm saying it's a base, but it doesn't have the 2 candles. It's because it reacted off of a established area. So
right with you. Okay, yeah, sure, that makes sense.
So a very long wick before it's come and tested a previous area of interest. Like if I go onto the 15-minute, you'll see that, or if you go over to the 15-minute, let's rather say, you'll see that we had the open of the day. Go to the 15-minute, mate. There we go. All right. So if you just see after the open of the day, we had a bit of a gap, and then 2 bullish candles, and then 3 bearish candles, and then 4 bullish candles again. That is a base. That is a no, on the left at the open of the day. So 2300. Right, okay. Yeah. So that three candles, the three bearish candles that you had just after the open of the day, that is the established area. And if you pull a line all the way through, you'll see that roughly at the 6 o'clock candle on your view, you had that big bearish candle with a nice long wick below it. That is the reaction on the established area.
Yeah, fair.
So then the push up from there would then, yes, exactly like that. That would then constitute the reaction. And then you can say, okay, cool, this might be a 5-minute base because it's a reaction after. But generally, when it's already in a trend, then you need 2 to 3 candles consecutive, then a pullback or a base, and then a reinitiation of the long.
Yeah, fair. That makes sense. Okay,
yeah.
We're putting in a potentially a lower high. But this would be a stunning setup. I would have taken this setup had I've not already been in US30 and NAS. GU is looking bullish. Okay. So is he. Okay, yeah, nice. EU looked quite nice after the reaction of this. We had a bit of a pullback first. I liked this reaction, and then we had this bullish price again. Then we came back down for a 3 wick rejection in this this area of interest. Then we finally had the push up. We finally had that bullish push up, breaking these highs here, or this sort of consolidation low. So that was quite nice. But again, for me, I'm a little bit more bearish on EU and GU at the moment. But who knows? Who knows?
Yeah. No, I agree.
Cam Bam asking, how's your account, William? I took an $800 loss yesterday. But I just made back $470 today. So we're about 5% drawdown.
I mean, it's still not bad. You still have another 5% of drawdown left, and this is not the first time you've been into drawdown with this account. So this isn't new territory for you. You know what you need to do, mate.
I'm very comfortable where I'm at in price right now. I'd rather be in the positive, of course, but I've clawed back 7% drawdown before, so it's not something It's not something I've never done before. I'm very comfortable being this uncomfortable.
I see Cello is asking, account I got to the last stage of my evaluation and I blew my account yesterday due to things that happened yesterday that made me not really be in the right mindset. And I was tired, so I forgot to monitor my trading account, and next time I looked, my account was over leveraged. I fell asleep on top of everything. I realized I should have possibly not been trading. Cello, usually those are the kind of days where you can seriously lose an account when your focus isn't entirely on the market. Best thing to do in future, when you realize that you're a bit tired, or that you realize that maybe you would not be making the best decisions in the market, the best thing to do is to close down your terminals without entering any trades, step back, go and rest up, come back the next day, or at least when you start feeling energized again and ready to react with the market. Because the issue with stuff like this is, like, if you lose an account based on a trade that you took, if you over leveraged or something like that, you're not going to get a pass. You're not going to get a freebie account saying, oh, sorry, we understand that you've experienced this kind of drawback, but it's still viewed as you took the trade, you made the conscious decision to take that trade. So if you do lose an account, it's on you. Let's put it like that. It's not a nice thing to hear, I know, but it's the reality of the matter. It's that sometimes you need to make the decision to step away, and you need to do what is best for your trading journey. And in this case, if it means that today I have a headache, I'm not feeling well, I didn't sleep well, back is sore, I'm struggling, there's a lot of noise around me, I need to kind of either find a way to zone in, or I need to say, you know what, today is just not a trading day for me, let me step back, I can try again tomorrow when I feel better. Myself, personally, when I have not slept very well, let's talk like 3 hours or less kind of like sleep, I know that I do not make good decisions in trading. I know this. I've backtested data of this. Not even backtested. I have like live trading information. I have journaling where I've logged this, knowing that I don't do very well when I'm tired when trading. So on a day where I know that I'm not in the best frame of mind, physically, mentally, just best thing to do is just step back. Don't trade for the rest of the day. Try and get some good sleep, and then try again tomorrow.
Yeah,
I
cool.
guess
Dude,
I
it
should have
sucks.
stepped away. Yeah.
Yeah.
Sorry. Yeah.
I was just going to say, man, I was just going to back up there. Look, man, it sucks, but at least you've managed to acknowledge that. A lot of people
Yeah.
would go through their entire career not acknowledging that and then getting frustrated at the markets and then, blaming other people for why their accounts are blowing
Yeah.
up. So
Yeah.
it's good that you can actually acknowledge that you're going through this stage. You're going through a cause of accountability, and it's the hardest part is to be accountable. But the fact that you are accountable, make sure you've made a log of it. Make sure you've journaled it, or you've put in a diary, or you've put in your trade journal, whatever you want to do. That you have got this emotion, and this has caused, or this emotion, or this reason for the emotion has caused your account to blow up, or a loss, or whatever that may be. Make sure you log that, so if it ever happens again, instead of second guessing, you can go back, refer to it, and say, yes, this is what happened last time. Make your emotions data driven, or make your outcomes based on your data driven emotions, if that makes sense.
Yeah. Andre is saying, I've managed multiple times to recover a 5 to 8% drawdown, but how often does it happen to you guys to go into drawdown or to lose accounts? I'll start. I lost an account just, 2 weeks ago? Also, silly thing that happened. Onus is on me. It happens. Going into drawdown, I think I go into drawdown every single account that I've ever had. I've gone into drawdown at some point, whether it was my first few trades or it was after taking a bit of profit and then pulling back a little bit. Going to drawdown is a normal thing. I think people need to get away from the stigma that you always need to be in profit. You're going to have swings. It's peaks and valleys, mate. It's peaks and valleys. So you're gonna have drawdown. I've been in drawdown in pretty much every single one of my accounts that I've ever had, bar maybe one or two where I got a really good start. One thing to remember also is that you don't control when you're going to have losses. Losses are a part of your strategy. So if I know that my strategy has, on average, 3 losses in a row per my backtested results, where those 3 losses are, I won't know. And the maximum amount of losses that I've had in theory on my backtested results is not a guarantee that in future I'm going to have the same. They can be spread out. I can have 3, let's say 6 losses in a row, but still have an average of 3 losses consecutively. Even though the peak is 6, the average is 3 across all of the trades. So I've started accounts into drawdown where I started trading a new account, or I've just taken profit, just secured a payout or something like that, and then I start on the next phase after scaling, and then I'm immediately into drawdown. It happens. Yourself, Will?
Every account bar one I've had quite severe drawdown. I had one account that I had 0 drawdown, and the reason for 0 drawdown was just I he-hoed it, and I literally got a crop out, whipped it on the ass and said, let's go. And it just happened to go in my direction. And then I ended up being like, cool, profit instantly. And then I ended up, what would have been a drawdown had I not have over-risked that trade, it ended up being what would have been the drawdown, So I pulled back a little bit and then continued up, and then passed the account, got paid out. I actually paid for me to take my partner to Loire Valley in France back in September. I streamed all of that. So if you're wondering that, can traders really travel and trade? like, okay, yeah, fair, I'm in Hong Kong, but I'm technically living here now. Whereas in Loire Valley, I was traveling around. I was in a different location every single day. But that was all paid by this particular account, which I just heave hoed. That was 0% drawdown. Every other account I've had and passed and been paid, I've gone into quite significant drawdown. I think the least drawdown I've gone into on my account has been 3% before recovering it back into profit. Every other account has gone into like 3, 4, 5% drawdown. And then my biggest one has been 7.5% drawdown, which is the account that I'm trading right now, which I managed to pass and then get into 3% drawdown, 7% down, back into break even, and now 5% down. I like what we said, Rich, about, traders must understand that there's going to be drawdown in your accounts. Trying to make sure that there's just profit is a very negative way, ironically, a very negative way of looking at the market. You need to understand, like you said, peaks and valleys. Peaks and valleys, do you say? Or I call it peaks and troughs. Peaks and troughs. You have a moment up and you have a pullback. You have a moment up and you have a pullback. So just try and make peace with the idea that even if you have a 90% win rate, at some point you're going to take a 10% losing streak.
Yeah.
And over 100 trades, you may win 90 trades and think I'm absolutely untouchable, or you may win 10 trades and then lose 10 trades in a row and you're like, oh, how can, or maybe you win 1 or 2 trades and then lose 10 trades in a row. At some point over the course of that 100 trades, you're going to lose 10 trades. It may be in a row. You don't know when it's coming. So just make peace with the fact that you cannot have a 100% win rate and just risk manage. You're in it for the long run and you're in it to protect capital.
Yeah, exactly. This is a question here from GN Roda saying, why not have an EA to trade as EAs have no emotions? And I love the fact that LJ has just popped up because I know that LJ... Oh, no, dude, all good, all good. I know that LJ has a fair few EAs that he has, used in the past and, so I feel like you're uniquely qualified to answer this. So why, LJ, is it not a good idea to just have an EA to trade for you when an EA has no emotions? What's the downside? Wait, let me rephrase. What is the positives of having an EA to trade for you versus the negatives for having an EA trade for you?
So the positives, we'll start there. Positives are you don't have to be at the computer screen all the time and managing and monitoring and having that anxiety kind of in the background with that. It'll do everything for you. If you get onto an EA that works really well, it can go very nicely for a period and you'll get that kind of, I hate this term of passive income, right?
Because nothing is passive.
You do need to still build it. And even when you do have the EA, there still will be, this now starts going into the negatives. You will still have to monitor it. You will still have some background anxiety because it's just a random bot doing its own thing. So you do have to actually still check in on it regularly. Unless you're running something very highly sophisticated, you've paid up massively for data, like high top quality data. It's either that or you're running something very simple, which is just meant to be something that might just beat the market per se, right? And so you're not looking for gains that are going to produce income, but they might just produce relative investment return, which is quite healthy and no one would complain, right? So it depends on what your goals and that kind of thing are. So if you're just trying to do that, that is much easier. It's much easier to achieve like a 30% kind of return or something like that over time, over a year. Very difficult to produce the kind of returns month on month that you would need to live off unless you already have a massive capital base to work off. So at that point, you probably got some past trading record, and you've developed the bot, and then you've got outside investment, and hence you get a portion of the total, right? That's really the only way to live off it. If you're just looking at it for something as supplementary, like maybe you work, you're completely happy with your job, no problem, no issues, but you just want to kind of boost your income to the side, since you can't go to your employer every week and say, hey man, can I get a raise?
Yeah.
What about today? What about today? Oh, tomorrow. Like, I did this thing. Can I, So that is one way to sort of take control of things, especially with, globally, everything going on. We've had inflation for some time. House prices across the globe are pretty heated, all that kind of thing. People are facing certain pressures. If you weren't invested earlier, now you're trying to play catch up. So it very much makes sense if you want to do that. Those are the positives. The negatives are that they can go manic or just fail, or you had too much curve fitting, as it's called, which means the algo is too specified for a certain regime. Once that regime shifts, the algo falls apart. And the trouble is, you could have been running this thing for 3, 4, 5 years, and you can end up losing 60, 70% in a day, hours, less than a week, just because of something like the geopolitical shocks that we've had since last Friday, right? Where everything moved synchronously at once. It was pretty much a sell everything, right? So any hedges, any correlations, everything breaks down. So we saw gold up, but then it's been way off, right? Stock market's off. Dollar up in some cases, dollar up down in other cases. Other currencies up, down, this, that. We've seen the Kospi today, so the Korean stock market, come off another 12%. When all the other markets looked as though we were kind of done, and then it's just gotten hammered. So it depends how distributed that bot is in how many asset classes it's looking at, or is it very hyper fixated on a certain asset class? Because that can also be a defensive thing where it just trades gold or it just trades the NASDAQ or something. But understanding when to turn it off, you are going to have to keep up with some of those things, which means you're almost at the computer, at the desk, doing it anyway. It's the same way that with banks or quant or hedge funds or whatever, these guys still have jobs. They still turn up to the office every day. They program all this stuff, but they have to sit there and babysit. So there's pros and cons, and especially when something like that happens, your emotions are still going to come into it. I guess you do have one thing where you can just press off, which I guess cuts it all. You could also argue the same thing with your own trading, though. You could just press off and walk away.
Yeah, kind of
but most people find that very hard. And if you're purely relying on the algo, and say we have the geopolitical situation right now, and it's going to go on, we don't know, it might be a 4-week thing, or it could be a 6-month thing. Now, if it's a 6-month thing, you might have to reconfigure the algorithm altogether. And now you're trying to build in all certain bits and pieces. And you also start to become a bit disconnected from the market as well, because you're relying on the algo and you're not so in it in real time. So again, that comes back to the heavy data type portion, where if you're running that the whole time, which essentially you still have a full-time job. So it's they can definitely be great as a side thing whilst you trade manually. That's what I would recommend, to not just rely on them entirely, but have it as a side piece, then keep trading manually, and you distribute that risk, if we want to say, where you might be more emotional and the algo is unemotional. But at the end of the day, it all comes together. There's no passive income thing, just like Rich was saying. It's just
Yeah, dude. If you want
there's a level
income,
of activity.
chuck it into an high interest account and be okay with 3% return a year.
Yeah, that's literally the only one. Buying government bonds, and then basically being a pensioner. Right?
Yeah,
That's it.
literally, yeah.
So,
But other than that, yeah, there's no
Yeah.
such thing.
I have a similar viewpoint to you, LJ, when it comes to EAs. But in general, I would also add that fundamentally, when you look at an EA is generally created with a very specific seasonality in mind. So if I'm going to test or if I'm going to implement an EA into an account, it's usually a very specific asset during a very specific time and very, very specific rules. And that is the big issue. It's very, very, very specific rules. And we know from seasonality in the market that there are ebbs and flows to the market. It's going to go through cycles. We don't always know when these cycles are going to start, and so on and so forth. So you might have an EA that has very specific rules that you can literally set and forget, and it can print money for you over a period of, let's say, between 4 and 8 months, as an example. And then all of a sudden, it falls out of seasonality, and the market completely shifts its dynamic based on macroeconomic and geopolitical influences, which is also, once again, a very natural and normal phenomenon where the market goes through these like changes. So I really agree with the idea that there needs to be that human input into your bot, because you need to go and sit down and pay attention. When is the market starting to change to the point where your EA is no longer as profitable as initially tested or as it initially had been in the beginning? And that's the thing with EAs. They have seasonality to them. They fall in and out of seasonality very much like the market does. Where was the person that asked this question?
You're exactly right, because I've got some EAs that I've coded, which year on year since 2022, after the inflation shock, they'll print 200+% a year just on their own. Now, if you go 2014 to 2019, they're only about 30%, right?
Yeah.
And then during the COVID period, it's about 40, right? 2020, 2021. So very big differential there, obviously, once you go further back. So hence it becomes that curve fitting situation, which curve fitting just basically means you're trying to optimize the inputs for the algo per the current regime, rather than having it a cross-border type regime. And that's fine to do that for a certain regime, so long as you understand that you are doing that for this regime, and you still have to then have the whereabouts to know when that regime is potentially ending, right? And then you're probably going to have to rebuild altogether. It's almost like the buy the dip thing from, what do we have, from like 2013 to basically 2020, just before COVID, and everyone that just went with buy the dip worked great until it didn't. Just like crypto, buy everything until it didn't. Just like gold, buy everything until we dumped 20%, and then people over leveraged and I lost everything. So
yeah, and that's a typical thing. That is a very typical thing that happens. So I just want to. It was. Let me just get back. It was GN Roda. So and hopefully this answered your question. Emotions is one aspect of trading, and the idea is that you want to manage emotion, not remove it. So the thing is, emotions in general are there as a protective measure. It's your body's way of informing you that you're experiencing certain things. I mean, I don't want to go into the whole hormonal stuff of when it comes to emotions, like how cortisol and all of these kind of like stuff plays a role. But understand this, that you cannot exclude emotions completely. Yes, EAs are an emotionless entity. They're an inanimate object that is going to operate based on variables and settings that you have placed in. The emotional aspect is still going to come in when that EA does not conform or produce, let's rather say, the results that you expected. And then you are going to maybe start distrusting the EA, that kind of like stuff, but that's also besides the point. The point still stands that don't rely solely on an EA as a set and forget and just leave it to run forever. Seasonality plays a massive role in the profitability of an EA because it's set to certain rules or to trade according to certain rules that you deemed based on testing that you had done during a specific season. So I think that just kind of like sums up everything that LJ and I have discussed around this EA thing. It's best to have like a human hand in there and just kind of like throttle it, kind of like control how often it trades and when it trades, and to continuously do your tests and see whether or not it still conforms to your expectancy, or whether it's within a degree of variance of that expectancy. Simple as that.
Indeed.
Love this.
Sorry. All right.
Yeah, you can go ahead.
I was just going to bring up, I saw this. I was like, how do you make 1,000% on a 10K account with 1 to 30 leverage with 6 trades, referring to the contest thing with the fivers? Look, I would say most likely that seems like people that held trades over the weekend. You got the gap, they made a bunch of money, and also just in general, they're full porting the account.
Yeah,
right?
They full margin
right?
every trade that they take.
Yeah, and so what you guys see in the contest stuff, I mean, it's tough because obviously, yeah, there's some people cleaning up, but they're just going 100% in the whole time. And obviously, if you do that on an actual account, on a Fivers account, you're not going to get put through. This is not trading. You're literally gambling, but you didn't even bother to go to the roulette table and say, oh, I've got $200. I'm going to put down 20, 20, 20. You just went 200 all in, and then you didn't even bet on red or black. You just went 38, and then you lost, right? That's pretty much what they're doing. It is the most extreme risk taking that you can do. So don't take that as like an indication of proper trading, quite frankly.
Yeah.
You'll see a number of people on those charts, and you can check it a day later, and then they're gone because they've tried to do the same thing and they've just deleted themselves. Right.
Yeah.
So
I want to just mention this. LJ, you definitely know this. It's called bracketing. And if you go and consider probability of outcome, bracketing is a very important concept to take into consideration. So this goes back to exactly what we're talking about now. How can somebody make 1,000% gain with a 1 to 30 leverage? Okay, now imagine this. If you take, how many people are we on Earth right now? Let's say
7 billion.
Let's say 8 billion. Let's say 8 billion, just for the sake of argument. If you were to take a bracket and you take 8 billion people and you put them against each other and you flip a coin and you say, one of you always choose heads, the other one always choose tails. As simple as this. You have a bracket. So you have 8 billion people that one half of this, so 4 billion people, is going to do heads and the other half is going to do tails. You'll have a bracket. So you'll have the 8 billion people over here. The one section is going to do just heads. So that's 4 billion people. And the other section is going to do 4 billion tails. Now, of the half that took the heads, probabilities would state there's a roughly 50-50% chance that they would be correct. So you take one flip of the coin and every half of the people in the world calls heads, the other half calls tails. Let's say it's heads. This 4 billion people down here would be incorrect. Now you have 4 billion people left. The 4 billion people gone or immediately on a coin flip. Now you ask the same 4 billion people the exact same thing. Call heads, call tails, you want half. Okay, so one half is going to be 2 billion, the other half is going to be 2 billion. Guess what? 2 billion people are going to be incorrect. And you're going to carry on with this until you eventually get to one person.
Yeah.
There's going to be one person that would have gone through every iteration of this. Every iteration. They're going to keep going, and eventually there's going to be one person left. What do you call this? Do you call this luck? No. It's
Chance.
probability.
I call it
It's
Dirk. Good morning.
You call it good morning. It's just probability.
I said, I'm calling it Dirk. It's me. I'm the chosen
Call it.
one.
Okay. This
Yeah,
is Dirk.
Dirk is Warren Buffett.
Yes.
Dirk has been Warren Buffett the whole time, and he just wears like a
This is
costume
Dirk.
and a mask. And, yeah.
Okay.
No,
But this is the same logic that you eventually get someone like Warren Buffett having that
Exactly.
kind of success.
So the point
mathematically,
that I'm trying to make is, if you go back to these people that are full sending every single trade that they take, there are going to be some of them that are going to be this one person.
Yeah.
There are going to be some of them that are going to effectively get the coin flip correct almost every single time. Now, but here's the problem. This is an outlier, because this is not the norm. This is not something that is going to happen to the vast majority of people. As you've already seen, 50% of people are going to be wrong straight from the get-go. So it's like trying to call heads or tails while flipping a coin when these people are putting in these massive... They're essentially just going on the idea of chance. I'm going to full send a trade. I might get lucky. There might be a news event that pushes it in my favor, in my direction. Try and pay attention. Is it the same people that are always on the top of the leaderboard making these 10,000% or 1,000% gains? No, it is not. Why? Because it's gambling straight from the get-go. They are going in with the idea of full sending, hoping to get lucky. Exactly what LJ said. When they finally win their account and they try and replicate what it is that got them that account, they fail the account. They lose the account.
They flip the coin one more time, and then
they happen to be on this lower section where they were wrong. And that is the problem with that trading competition. It is purely for entertainment. And if somebody were to win an account, congratulations to them. I would really love to see what is the statistics on people having that gambling mentality actually passing accounts. I would love to see that information.
It kind of reminds me of somebody that I used to know when I was working for a Forex broker as the head of sales there. And there was this one crazy dude from Germany who was always trading euro dollar, but it could never be enough leverage. And then he would, if he by coincidence would be on the right side of a trade, he would like add up the margin that became free as the profit grew. He would invest immediately into more lots. So pyramiding his way up or down in the price. And 19 out of 20 times he crashed the account with this. But there was like in 3 years, this one occasion where he actually managed to turn 500 euro into 100,000 euro, but only once.
Yeah.
And then he withdrew all the money and bought himself a Porsche. Used one, that is, of course. And like I actually did the calculation then, and he lost more than 100K to earn 100K in total. So it's like, but he was like, he got this one lucky shot, and I'm very sure he blew it all away again and eventually sold for Porsche to continue to trade.
Dirk, you're German. It's a Porsche.
Yes,
Porsche.
sorry, I'm trying to be
a little German.
International. A Porsche.
Come on.
A Porsche and not a Volkswagen.
It's a Volkswagen.
Like everyone else calls it just like Porsche, right? But it's Porsche, right?
Yeah,
Porsche.
It's the wagon of the
I
people. It's the Volkswagen.
Volkswagen.
It's
what German likes to do, no? You build new words by just putting together.
I know, dude. Your words are ridiculous. They're just so straightforward. It's
German is very easy to read.
On that note, guys,
our grammar drives everybody crazy, including native speakers.
I'm gonna have to shoot, guys. I got a couple of bits I need to get done before I jump in a little bit later. So I shall see you in about 2 hours' time. If you want to check out real quick the US 30, we are having some really nice bullish move, which is quite nice to see. Same with the NASDAQ. NASDAQ is looking really nice, but already hit TP on that. US 30 I took out, but that is looking really nice as well. So yeah, all looking good. But for now, I'll love you and leave you, and I shall see you in about 2 hours' time. So peace.
Cheers, Will.
Cheers.
Awesome.
Cheers, man.
I'm
I like it.
I'm gonna do the same as well.
Yeah, go for it.
Playing the recovery trade. Also.
Yeah.
Go for it.
Yeah, I'm also just.
Oh,
going
you're
to
heading
hop
out as well, Rich?
Yeah,
sorry.
just. Yeah. I'm gonna hop out as well. I'll see you guys in roughly 2 hours because we will be swapping with you guys.
Swapping
again,
back. Yeah.
rotating.
Will,
I mean,
we can hear you in the background, but no one else can. So now it sounds awkward. The
So
chat's probably like,
now we
why
have to
did we
kind
go
of
quiet
pretend
for
there
that?
was nobody in the background saying anything because of our audience.
yeah. Ghosts, guys. There's voices. We're schizophrenic. We're hearing voices in the background. Anyway,
Schizophrenic, amongst other things.
yes. Oh, I'm not crazy. I'm not crazy at all. Like get my hair all up over the.
Over my mental health.
What do you want from me? Anyway,
Jesus
I'll see,
Christ.
I'll see you guys in a moment. Have fun, guys. Cheers.
Bye bye.
See you soon, Rich.
Hey,
How we doing, Dirk?
so it's us
How you
again.
doing, man? It is.
Pretty good. I'm a little bit tired. That's why I need an extra coffee today because I've been. You know how it is. I got this idea yesterday evening, and when I sat down and quickly wanted to code it, and it became like a session until 3 a.m.
Yeah.
Until my wife came to the living room and asked me, "You sure you don't want to come to bed? You have to get up in 3 hours again." I said, "Oh yeah, maybe I should." But yeah, this is how it is. It becomes an obsession every now and then.
Look, I had the semi-similar deal. I had fully planned and tried to cancel everything I had for today to try and get 12 hours sleep last night because I need to catch up on sleep. Got woken up early today by fire alarm testing. And then I just couldn't get back to bed. I was like, oh, God. I still got reasonable sleep. It was like 7 hours. So for my consideration, that's not too bad. But man, I didn't get anything on the weekend because I had family stuff Saturday and Sunday. So,
by the way, have you moved apartment already?
No, still looking. So,
yeah.
The trouble is actually finding because the availability here is, I think it's now 0.7% availability for apartments.
Crazy.
And I don't even know if those numbers are actually accurate for, like real-time updates because I swear it's definitely way less, right? But yeah, so it's whether I just, take a random spot versus somewhere I would want to be or need to be. Main thing being internet, because there's a certain blackout portion in the city that just has terrible internet and the rest is all great.
Okay,
right?
that blackout portion you cannot move to, obviously.
Yeah, there's it's a weird spot where it's both the most expensive housing in the city and then also some of the cheapest with certain, in part because some of the properties have been held by people for much longer. They don't necessarily need the rent to cover the mortgage per se, that kind of thing. So just give me 1 sec. Sorry, I just saw my euro long trade is very much in profit, so I'm going to close
Let's switch to your screen, man. And if you want to show it. You haven't even shared your screen.
Yeah, my bad.
Yeah, markets are really rallying, risk on suddenly again this morning.
Yeah, I was going to say just before Will left, I like the risk on trades there. So these just got tapped in. They were just below. Okay, now they would have got tapped in, but we dipped down a second, so I just exit them basically just here. So I split that into 2 trades. The first one through here, just a bit earlier,
Mm.
with stops below here, we had this kind of relative trend line coming up through there, and then once we came down into here, dipped through it, created that wick, I entered a second position to add to it. We've come up to here very nicely, so that has netted me 3%.
Wow. In such a
So
short
that's,
period of time. That's an awesome trade.
Yeah, it's not bad. I was looking for some kind of where was that? Oh, that was here, wasn't it? Last night. So we were talking about losses on with Rich and such, potentially seeing the euro come a bit higher. First of all to 26, and then some kind of impulsive move up to 116.64. Obviously, we didn't get that, so I was looking to go to bed last night through here. We didn't quite kick on. So after we hit that peak, I jumped out on this candle down here, which was because I wanted to go to bed. That turned out very nicely because we took another dump lower overall on the euro.
But still, I mean, wow, 3% in such a short amount of time. That's really nice. Very good.
Well,
trades.
I mean, we got some good pip movement through here. I mean, from these lows, that's 92, and then this guy 116.11, and we peaked up here at about 43 where I took it. You know, so these are some good collection.
Some good connection indeed.
You know?
There was a question just now. Before I forget it, I quickly would like to answer it. Dick, a few months ago, I recall you talking about a project you were working on, looking at max pain threshold for options expiry. Exactly that, yeah. Did this evolve? It did not. And I thought at first it was an edge. And I actually started live trading it also on an evaluation account. And I noticed that the live trades always were very different from what they should have been according to the logic. And now that can always be because it was a complex system. So I thought, okay, need to go do some bug fixing. But it actually turned out that I was relying on wrong data. The wrong data specifically meaning I was using Y finance data for analyzing the for back testing the whole thing and optimizing it. And the problem with Y finance and Forex data is that they often, I know that now, I didn't know then, use mid-range candles. Meaning, like I was calculating an edge on mid-ranges when in reality you cannot enter for mid-ranges. You know, in hindsight, you can always say like, oh, you know, I entered at the mid-range, but it doesn't work like this in reality. So once I actually fed real bid and ask data into that backtest system, the edge completely disappeared. Like really, it was like 50% basically random a coin flip, and not 50% also in a good way where you can say I can live with 50%, which I usually can, obviously, if I have an adequate risk-reward ratio there. So absolutely, at least for Forex options, no edge in that. So, you know, one of those projects I dumped probably like 50, 60 hours in, which turned out to be like, okay, didn't work.
What context, like entry exit type rules did you have?
I tested various. The edge I found on that wrong data was like that price tends to move towards max pain 4 hours before an option expiry. So in a nutshell, basically also a little bit what you are, not in a mechanical way looking at, obviously. This is where I got that idea also from, hey, that would be worthwhile testing. But it doesn't work. It's really random. I also tested then again, like to look at how far is the max pain level away. Like if you, for example, have a large option expiry that's like already 500 pips out of the money, you know, it shouldn't wait as much as something, you know, that's like at the money or just 20 pips out of the money. And I really tried all possible combinations to my knowledge where there was just no edge in it.
Because that's what I was going to say. I feel like I mean, I'd have to try and think about how you break it down. The discretionary part of, for instance, the NASDAQ stuff that I do. Like,
and that's interesting, no? It's like
obviously works, but
it works.
I would have to.
But you cannot like
there's a timing
formalize the discretionary part into a mechanical system?
Yeah, I think you might be able to, but it would be tough. There would be some, because often there is a portion of this that is the sentiment, macro, fundamental type, headlines push that eventually comes out, which shifts us one way or the other.
I mean, I didn't scrape it totally. Of course, the code base and everything still exists within a GitHub repo, so I could like continue working with it. My idea of modifying it would be to have some kind of sentiment, like you just indicated as well into it, that you have, for example, a scraper scraping news sites, Reddit, Twitter, and so on, and by certain keywords that give you an edge. Is price likely to move towards max pain, or is the sentiment different from where max pain is at the moment? If you have like today a very bullish sentiment at the moment and your max pain is much lower than the current price is, then actually doing the opposite because of a sentiment could be the right way to go, to move away from max pain. But these are these things. It's very computational heavy also, because we are there in a sphere of machine learning already. The problem is with machine learning and time series data, which prices obviously are, that machine learning is not very good. So prices itself do not really tell you anything about what is price going to be in the future. This is why you need the sentiment data also in there. And you need large databases of this. It's not enough if you have like a year of data and half year of sentiment or something like this. You really need 100, 200, 300 gigabytes of data in order for example, transformer algorithm, which would be the go-to for this to actually find an edge. Otherwise, your machine learning is always going to end up, or most of the time going to end up, to just look at what was the candle yesterday, so the candle today is going to be the same. It's funny. It's often when you have this kind of system that look good on paper, but it's not. It's just like copying what the market was doing yesterday.
Yeah, we were talking about this a little bit before, about particularly like some of the emotional side of trading your own strat manually yourself versus trying to program it algorithmically, and the reliability, the pros, cons, all that kind of stuff. And hence that was one of the parts I was saying, like, if you really want to do it properly, you need that mass swath of data, and that means you're going to have to pay up large sums of money, which particularly, obviously, if you're just starting out trading, you're not going to be.
Really, you even need like a super good GPU, which are mega expensive at the way, because you need a GeForce,
you need the compute
NVIDIA
as well,
because you're most likely going to use Python as a coding language, which works for machine learning much better with NVIDIA than it does with AMD. I have an AMD graphic cards here in my setup, so I couldn't use it. Means like I have to go and rent GPU power, which is not the problem. You can do this with Amazon, but I did it in the past. I also found an edge in the past, but the upfront was very expensive. I spent like, I think, $9,500 just, to get the model to write. And obviously this is not something, especially if you're a trading beginner, you're willing to do. Totally understand.
On the chance of something.
On the chance,
hopefully, hypothetically, and you've never done it before, and like, maybe. Right. Yeah.
And it's like, it's of course always also frustrating when you think like, oh man, I poured like 50 hours, 60 hours into a project like this, and then I stumbled over an easily avoidable mistake. I'm not going to make the same mistake, obviously, in the future anymore. So this is something good for me coming out, but I could have cut it short. But this is how it is, If you are like running your own business, also sometimes you spend a lot of time, a lot of money on things that tend to not work out. And I always have to remember the last boss, so to say, I had in my life, who said, you know what, Dirk, I don't care what you do as long as you don't make the same mistake twice. You're allowed to make mistakes, and it's in where we are within trading, especially also option trading. It's normal. You try 10 things and 9 of them turn out to just not work. as long as the 10th one is something that is actually worthwhile progressing into a trading strategy, then you're still net positive by the end of the day.
Yeah, I'd be curious to think about the on the FX side, if there's some way I can reform like a secondary, like qualitative factor, which tells the algo like yes or no, right? Some, because some days like we look at the NASDAQ positioning with the 0 DTE options, I'm like, no good. Other days, I'm like, yes, yes, yes. And it does have a very high strike rate of yes, but there are definitely some days where it's just like, ooh, no way, right?
Yeah.
And so I think I wonder if you stripped out that portion, it might bring up the results overall, and potentially on certain FX pairs might be better versus worse, and also depending on the, like, if you have like some kind of regime filter for like the dollar in general or something like that. I could definitely think about it more and try to
go for it. I mean, if you can think of
discretionary
something
period into a mechanical instruction,
translating that into code, I can always do that. That's like the more easy part for me. But it's like, this is one of the things. I have this idea how to improve it, but then I have like 3 other projects I need to take care of as well. So it all boils down to time then again, no? And of course, I would love, to create something like this and actually show live here, guys, this works if you put enough dedication in it. But it doesn't make sense, if I share like my long-term trading strategies, at least the one that I'm mechanical, although I'm also more discretionary when it comes to my long-term investing, because it's just not something you guys out there need, for your evaluation accounts, for your funded accounts here with the Fivers and so on and so forth. So I'm really trying to find something, that gives you a little bit of an edge on a shorter time frame. And it's very challenging. And I think it's getting more and more challenging because thanks to vibe coding, a lot of people are doing the same now again. So the alpha tends to disappear more quickly. So maybe actually going forward, this discretionary element, which makes you as a trader, LJ, very successful, obviously, is going to be the edge because it's so hard to measure it in a mechanical way.
Yeah, that's what I've thought about whenever, like, because we had this swing of obviously the mechanical stuff outperforms to a degree if you manage to get everything right. But then again, it becomes this thing, if everyone's doing it, it declines again.
Yeah.
And then you're going to have that slight human edge, funnily enough, actually comes back into vogue.
Yeah.
To front run certain things and have abstract ideas and unpopular or uncommon ideas, but if they have a solid foundation and just hasn't really been caught onto yet, then yeah, you've got edge there. I will say, Dirk, I will have to jump out for a minute in a sec. I've had a bunch of calls today. I've got to address something else as well. But just before I do, look, I will say Jimmy and Woz. I'll just say your name as Woz. Dude, we went over this stuff with you guys a number of times already, all right? We've said go into the Discord, go to the support channel, go through that, go to the link that actually goes out to the Fivers support on the website, and it'll bring up the little chat bubble in the corner. You can explain your issue. It'll eventually keep going through the prompts and say, do you want to talk to a live agent? Talk to them, present your case number. You guys are saying you sent emails or whatnot. Talk to them. They will get on it, right? You also have to realize that each component is separate. So like the support team, the risk team, they're doing their own things. They're operating, managing the market right now, especially with everything is going on, right? So if you get a quicker response from the support team, there might be a slightly delayed response from the risk team, right? Be patient, okay? I can see that you guys are saying that you have from at least what you're telling us, being patient and trying to do this stuff for some time. But continuing to type in chat here is not going to do anything, right? We're not responsible for this stuff. And like I said before, if there's a reason for something, like if something has occurred or there's a delay or your account has been paused or you've had some kind of email response, there will be a reason. So I've heard you guys typing a lot of stuff, but you haven't presented what reasons have been given to you already. So if you want to present that, or you want to present how you're trading, what kind of lot size, leverage, in and out, time frames, stop loss, what ratios, how are you actually conducting your trading? And then maybe we can give you some insight to that whilst you're waiting for your emails to be responded to or otherwise, right? I've tried to say this a number of times. You guys have been literally going on here in the chat for an hour and a half now, right?
Yeah, I don't know what this is all about. I'm like looking at this with one eye right now at the moment too. Obviously, can understand there seems to be a lot of frustration about whatever problem there is. But guys, honestly speaking, we cannot help you. Yeah, we are not employees of the Fivers. We are doing this on our own time here. Because we love to do that. We don't have any access like to any accounts or something on the Fiverr, so we could look for you, what is going on. Going through the support is really the only thing. And honestly speaking, if you keep spamming here like this, it is more for me that, you're doing this because you like to spam. And there's another reason really going on.
Look, Jimmy, you're saying like, okay, talk to your boss, right? You're saying the Discord is giving you the same answers. If they're giving you the same answers, then you've got the answer. Go with that and then wait, brother. Yeah. Like, it's as simple as that, right? Spamming stuff into the nether of the internet is not going to help you, okay? We've given you all the channels to go through. The Fivers team is very accommodating. They will hear you out. Like I said before, if you believe you have some kind of case for your position, write that down in a Word document or write it out on paper or something like that, present it to them, and then it will be worked through. But continually spamming this stuff is not going to help, right? It's not going to help. So I don't know what you're doing, which tells me that even though we've explained this to you that many times, it seems, I don't know, you must be doing something else. Because if this logic is not getting through, then I'm not sure what we can do to help you, man. But this is not the place, okay? So as you've seen, we've not restricted you from chatting or anything, right? But you need to just like chill out. If you want to sit here with the charts and engage in the conversation with everyone else, stick around. But right now, like, this is my final instance to you because you're still going on. Beyond this, that'll be that. We've given you all the resources for you to go and address, and that's that. You're now ruining the stream for everyone else. Okay? So it's not just about you guys. There's a lot of other people here who actually turn up for the content, for the charts, for the evaluation, for everything else, for assistance in their own trading journey, all that kind of stuff. So, my brother, we appreciate you. You will be sorted out, but please, you need to slow down. Okay?
Please. Exactly. You said you have to make a move. Are you going to be back later, or?
Yeah, no, I will. I won't be long. I'll probably just be, I don't know, 5-6 minutes, something like that. So if you want to run down what you've been seeing.
Yeah, I'll go through some charts. I'll go through some other stuff that I've been working on, which might be interesting for the viewers here. And then we'll see you in a couple of minutes.
Easy. Cheers,
whenever. Take care. See you.
That's right. I'm just getting slammed with a phone call. So
go for it.
Yeah, I'll be back.
Yeah. Bye. All right, guys. Good. So we want to continue talking about actual trading here a little bit. I have a couple of things I want to show to you. It's like one of the things I have been working on which you see here in the background, is something that might be interesting for you guys as well. And you guys know when I present like my own brainchild indicators on here, I usually make them available for free for you guys as well. And this is going to be no exception. So I know many of you are, for example, very interested in grid trading. So I thought to myself, grid trading is actually very challenging. It's hard to earn money with grid trading, in my opinion. But because the challenge always is to kind of judge what is the current market regime. You know, are we in an uptrend? So it maybe makes more sense to have like a long grid trading strategy. Are we in a downtrend? Would make more sense to have a short grid trading strategy, or are we somewhere neutral so you can play out sell orders above the price, buy orders below the price? And I've been working on actually a trading view indicator to do this, which can help you with grid trading. And don't worry, I'm not going to talk very long about this, but I think it's very interesting, which can help you. For example, now I applied it here on a 30-minute chart in Bitcoin, and you can define a look back period. I choose 336 bars now to look back because that's a week of data. You can define which grid you want to analyze. I have a neutral grid now. You can define how many grid lines minimum and how many grid lines maximum should there be, and you can define what is the fee per trade. And what this tool is going to do then is it's going to analyze for you what would have been the best grid settings, for example, now for a neutral trade over the last 336 bars. So 1 week of data, that is, since we're on a 30-minute charts. And the logic behind this is, or my reasoning behind this is, and this is not back tested yet, guys, this is still work in progress, that if you can find a positive setting, and this one was a positive setting, so this one would have made a P&L of $35,000 over the last week because it trades per grid 1 Bitcoin. So the logic would be this optimized setting should work for the future week, or there's a high probability that this setting should also work for the future week. So you can tell it, for example, to project forward where the new grid levels should be. And now this price scale of the new grid levels still differs from the actual price scale here of Bitcoin. So it's a little bit confusing. As I said, this indicator is still work in progress. So it will tell you now projecting that same grid or the spacing of the individual grid levels into the future should give you these sell orders and these buy orders. And then you can translate those into actual sell and buy orders, for example, with your broker, or if you're trading euro, dollar, whatever, with your Forex broker, with your evaluation account. Still work in progress. So there's still a lot that I need to adjust. And but if you guys are interested in something like grid trading, you know, click on the link below. You'll go get to my YouTube channel. I'll record a video soon about this indicator there as well and how to get it. Don't worry, it's going to be for free. And so yeah, you might want to have an eye on that. That being said, I want to move over now to the actual charts. Let me just quickly get the correct screen, which is, I think, this one. Hold on. Yeah, this one we want. Yeah, here we go. And yeah, what shall we start with? Let's see. I'm trying to scroll here through all the answers. Good question here from Foreman. I'm going to come back to that one. And actually, I can answer that one as well while you guys think of what you want me to analyze right now. So risk per trade, I am personally doing is usually 0.25% of my account balance per trade. Now, you can always argue, like, is this too low? Is this too high? I know many guys out there, including LJ, he likes to do something like 1% per trade, but this is very, very individual. Now, I'm more on the conservative side, which is probably something you automatically become as you get older. So for me, kind of the Goldilocks zone is 0.25%, because like this, you know, it still doesn't feel so bad if you have like a series of 4, 5, 6 trades in a row that hit stop loss before take profit. If I would use like 1% or maybe even something like 2 or 3%, in my opinion, and the way I trade, I very quickly maneuver myself into those mental traps of having a hard time accepting that maybe you're down by 10% and you have to get yourself out of this way. But by the end of the day, it's really up to you. Everybody is different when it comes to analyzing risk, when it comes to the willingness of taking risk as well. So let's see, guys. You are still going on here. Really, can you please stop it? It's. I mean, I think LJ has addressed this now really fully. We cannot here as live streamers help you with this. You have to go the way through the support, and you will eventually be helped. I've never had a support ticket myself. I'm a client of the Fibers as well. I have evaluation accounts. I have funded accounts. Whenever I had an issue, yeah, I had to wait sometimes a little bit, but eventually that issue was addressed. So, yeah, we have Bitcoin. Unbiased Traders says Bitcoin up by 6%. It's a bit crazy actually today, right? However, I still feel for Bitcoin like that this is not a dead cat's bounce, so to say. Because we still have quite some leeway until we reach what would be a price range where I think it would be worthwhile to play a short position on Bitcoin again. So first target here is another about 7.8 to 8% higher than our current price level. So we're talking about potentially some prices between 77 and 78,000 US dollars. This is where we would hit our 8 weeks moving average. I'm on a daily chart, but this is a 8 weeks moving average. And potentially, if we close before above that, we could actually see price going another 20%. So maximum, in my opinion, to something like 86,700, because that would be the pullback to our good old bull market support bands, which have turned into bear market support bands as we are in a bearish structure. And this is very, very typical for Bitcoin, what we are seeing right now. I can promise you, should we really in the next days or weeks see price slowly pulling up to the mid 80s again, that people are going to get very excited. They're going to get a lot of FOMO again. You're going to hear things like, hey guys, we're going to 126K now again, or 200K, something like this. We are not. This area, anywhere between these two bands, is an area, if you want to swing trade Bitcoin, in my opinion, where it's good to sell Bitcoin again, because we are in a bear market. And I see this is my third bear market in Bitcoin now, and the pattern is always the same. You have 3 years of positive returns, and you have 1 year of bear market, which is the case in this instant now, for example. And hold on, give me just a little second. All right, sorry guys. And so yeah, this is my view on Bitcoin, at least at the moment. We can go over some other charts with the same kind of mechanism, because looking at what the current trend is in relation to where we are in price is like always the first thing I like to do when I try to analyze the markets. Let's have a look quickly at stocks, because I think that picture is quite interesting at the moment. And we can add our standard deviation bands here also again to get a better picture. Let's look back the last 250. And it's very interesting what we see right now in the NASDAQ, because overall we are still in this period of consolidation. You can see, for example, here how difficult it was for the NASDAQ to get above this area of where we have a bull market support band. In the case of the NASDAQ, it is still a bull market support bands, and we have the 8 weeks moving average also trading there at the moment. So in order to really see the long-term bull market in the NASDAQ or in tech stocks, let us call it like this, resume, we would need to see a good close above this whole area here, which would mean a close somewhere preferably around 26,000 US dollars. Then I would become more positive again. Does that mean, we are going down now? Not necessarily, but at least for the long-term trend. So for this whole structure since 2027, we need to be a little bit more careful. Now, that doesn't necessarily mean that we're going to see something like this, what we saw last year, actually around this time, that we dump like by 10 or 20%. But I wouldn't be surprised. And this fits into the overall stock market pattern we see in the second year of a US presidency always, that we have kind of the kind of more difficult markets where we go sideways in a volatile way, or go a little bit up, then come down again, or even see price action more to the downside. So that could for certain be the case there as well. Let's quickly look at gold as well before we go into more real-time scalping type of setups maybe. So first of all, gold obviously still very strong, and it's really fascinating, guys. I've been talking about this chart, and let me click away the standard deviation channel here over and over again, because since this whole super bull market move started, which was, in my opinion, the case after we crossed 2000, so in basically 2 years almost ago, it was February 2024. Look at this. Every time the price came down to this area between the bull market support bands and the 8 weeks moving average, this was always a great time to buy. If you want to play this more aggressive, you could have bought at any time almost. We touched the 8 weeks moving average. So I stand by what I've been seeing for months now. First of all, I'm only looking for long positions in gold, because look, if you look at a chart like this, why in the world, where's the reason to short this? The reason maybe would be that you can brag like, ooh, I was able to sell at the highest price, but the probability of you making profit with a trade like this is, in my opinion, very low. So instead, why not buy every time we see something like this, that we at least touch the 8 weeks moving average, or if you want to play it more conservative, until we touch the bull market support bands. So that would be the case at the moment if price would go down to around 4,500 US dollars. If you want to wait for the 8 weeks moving average, we are trading around 4,920. Take into account now that this week's closing for those two indicators has not yet printed. So probably what's safe to say, and this is very nice, that this 8 weeks moving average probably next week is going to be somewhere around 5,000, which is great. That's a great zone. If we dip down there, you have the support from the moving average. You have this beautiful round number, 5,000. So that would be actually something where I want to buy. I don't want to play games like trying to catch the top and stuff like this. I know you do that, LJ. Welcome back, by the way. I tend to always burn my fingers if I try to short gold. So I really want to wait for those instances where we dip down to the 8 weeks moving averages, or even somewhere in the price zone here between the 8 weeks moving average and the bull market support bands, because then I can have very nice risk-adjusted returns. And I don't need to hold on also for months and months and months in a position like this. So the swaps all eat me up. Would be more practical, of course, maybe if you buy physical gold then, or you trade something like, in Germany we have something called etc. gold, which is a gold traded or ETF that you can buy, where you don't have a high overnight financing cost, which you tend to have if you want to do this with a Forex broker. Silver, we've also spoken many times about this, LJ and me. For me, it's not the trade I want to do.
I was, how we were talking about Jane Street the other day?
Yeah.
As well? So I've got it on my iCloud. I'll try and get it up. Jane Street is now the largest holder of the silver ETF shares overall.
What?
Yeah. I was like, oh, that's interesting.
That's bound for disaster.
Yeah, I was like, here we go, right? At the same time, I looked at this and I was kind of like, to be honest, I'm not surprised.
Yeah, that's great.
I mean, the price action has been very curious, I will say.
Mm.
You know, and I know there's definitely been a lot of chatter around the whole Jane Street type thing more recently as well. But even in this past week and the week before, they've jumped in very heavy. So I'll try and find keep going, but I'll try and find this.
Yeah, sure.
This piece
Question from Stack. I suppose this is pronounced 79. Can you show us how to configure bull market support band indicator? Yeah, so this indicator you can find for free on TradingView. Just type in the indicator search field bull market support bands, and then eventually this will pop up. It's important here that you put the time frame to 1 week. Don't use it as I suppose you can also use it on smaller time frames, but for me it works good as like a long-term tool to determine like is price at the moment exaggerating very much to the upside or downside, or are we somewhere at an equilibrium? And if you want to build this manually, you can do this as well. So because it's basically just a 20 weeks simple moving average and a 21 weeks exponential moving average. You can do this as well, but since I'm lazy, I use a ready-made tool if there is one, which is the case here. So, and if you combine this also with the standard deviation channels, for example, this can also help you. If you see then, for example, like we see on gold, that maybe price aligns at the moment the bull market support bands with a -1 sigma, that can add like more layers of confluence also to your decision making. If you not only want to kind of depend on a set of moving averages. Nothing wrong with this can work, but of course always nicer to add more layers of confidence to your own analysis. Did you find it?
Did yeah, I'm just trying to log in and download it. Hang on. I think I've got it here. Okay. It's pixelated as, but okay. We'll see how it goes. Hang on. Can I jump over to my screen?
Jump. Please jump.
It's not letting me. Are you trying to do something in the background, Remy? Maybe? I don't want to mess it up. That's all. So I can't seem to click my screen.
I could click on your screen, but there's like a studio. Here we go.
All right, that's fine. Yeah, so I had this off my phone, so that's why it's a little bit pixelated.
You got that from Bloomberg or what?
Yeah, so this was a screenshot from Bloomberg, from something else I found on Twitter, basically. But nonetheless, all you need to know is that Jane Street is basically the biggest holder of SLV through Q4. And apparently they've added going into Q1 this year as well. So SLV is the largest basically ETF for silver, outside of buying direct like spot silver or futures or something like that, right? So yeah, I just find it very interesting because you can see the other guys like BlackRock, Morgan Stanley, Bank of America. These are all going to be longer term holds in larger portfolios as like a small percentage position of invest, like basically pensioners pretty much, or long term focused holders, right? So Jane Street coming through here with that. We've seen Jane Street having a bit of activity in what was it, India?
India.
It was India, right?
Yep.
Yeah, India. Yeah, and then they basically got banned essentially from trading in India. And I think like over the past week, we've seen a bunch on Twitter around, or just and generally across the internet around their involvement in crypto.
Yeah,
as well.
they are good in spoofing the markets,
Yeah.
which is highly illegal, by the way, in most countries. But that means, like,
Yes.
for example, you influence the actual future market for gold or silver in this case, and then you could, for example, abuse brokers that also trade this, which have a little bit of delay in the price feed, for example. Or you corner the market with volume that options expire at the price you want them to expire. This is what they did in India, I think, if I'm not mistaken. So
Yeah.
like sometimes they had like 70 or 80% of a whole trading
Of
volume.
the all liquidity.
Scam, yeah.
Yeah. Exactly. Yeah. So anyway, this is the point for you guys is basically just be very careful in silver right now. I mean, Dirk and I have talked about silver being kind of dead as far as a trade from here. I think it's going to be pretty much 60 to
Yeah.
basically 60, 65 on the fringe to 80 to 9, sorry, 85 to 90 on the fringe. So your core base is basically that $20 range from 65 to 85. But you'd be much better off just focusing on things like gold, something like that right now.
And isn't it funny? Like when I was young, I was always thinking like institutions like Jane Street, investment banks in general, you know, they are like really, really good at trading, you know, when in reality they are not. They are just good at abusing the gray areas and black areas of where probably we as individuals would go to jail very quickly if doing the same.
Yes, and they just get a fine.
Yeah, they just get
It's
a
the
fine.
same. It's the same with the gold markets. From all the way from the majority from 2011 to 2019, all the way up to there, gradually started to drip off because regulators basically caught on to what they were doing, and they got a number of fines the whole way through, basically almost a decade. But they kept doing it.
Yeah.
They'd find another little tweak way to get around it. And, you know, you had Citibank, Bank of America, Deutsche, Goldman, JP Morgan, all of them getting fined constantly. But they get fined X, but they made Y.
That's the problem with that.
That,
Really.
Yeah, they don't. Yeah.
You had it in
doesn't-
gold. You had it in interbank interest rates, for example. That was a thing
Yes.
when in Singapore, where really that like this club where the interest rate traders of the banks, they would meet at night and they'd have drinks, you know, on the bill of the bank, obviously, and discuss, you know, okay, where are the interest rates going to be tomorrow, and how do we pre-position ourselves for that? And everybody gets like a share of the cake. It's insane.
Exactly.
Really.
Exactly. I was going to ask you before I dipped out. So, what is your current thinking on where things are now as far as the whole fiasco, let's say? Obviously, today coming into Europe, we're definitely seeing a bit more of a risk-on type attitude,
Yeah.
a bit of a unwind. We started to see that yesterday for a period and then came off into New York, and now we're rewinding that. And obviously, we had these kind of headlines.
Yeah.
So we've had kind of a mix. So we've seen some of the infrastructure bits and pieces being hit, right? But at the same time, we've had these kind of headlines from Trump saying, if necessary, the US will begin escorting tankers through the Strait of Hormuz as soon as possible, and also giving them insurance, right, on those tankers.
Yeah.
Which that's one of the primary reasons right now they're actually not going through, because no insurers will give them war insurance
For sure, no, that's
at this current time.
what
Right,
is taken out of insurance normally, you know, in the policies.
So what is your thinking? Because obviously there's some extreme scenarios, and hence we've got the tail risk type stuff coming through. That's what markets basically price for. That's what we saw on Monday and through on Tuesday. You always got to price for the tail risk event, not necessarily what is happening right now. So given we've had a bit of dust settling. What might you think?
I mean, I was surprised. You remember on Monday when we were streaming, I said, like, this is actually really good what we are seeing in the early European hours already. We had quite strong bullish moves. So it seems like the market didn't care. I was surprised that we got the sell off then later on in the way we got it once New York joined. However, I mean, yesterday we saw the opposite again. You know, we kind of managed to recover a bit from the lows we saw without the day. So in my opinion, we have at the moment the situation where we are somewhere in the middle ground. I said it earlier when you were away, for example. Is my screen actually showing right now? It is. Okay, good.
Yeah, it is. Yeah.
I'm always a bit confused with a two-screen preview here in our software. So if I look, for example, at the NASDAQ, I said earlier, in order to really see like the bullish momentum gain edge again and to move towards prices like 28, 29, 30,000 later this year, first we need to get back to 26,000, because this is this area where everything is kind of clumped together. If I want to use the bull market support bands, the 8 weeks moving average again. But I think we can do that. As I said many times before, however, we are in a period of time in the second year of a US presidency that usually is a bit more difficult. So it's not uncommon to see volatile moves sideways at the moment. However, long term, these are always buying chances, in my opinion, again. So in a nutshell, like for intraday moves, for example, today, tomorrow, Friday might be a different story. You have to see how that develops, especially the evening session there. I would rather be interested actually in looking for long positioning there in risk on assets. And I mean, this is by the end of the day, if I switch to a lower time frame than the daily, so let's maybe look at the hourly. This is what we see over and over again. As soon as we have kind of these dumps to the downside, you know, it's always used for buying then again. So it seems like there's more than enough capital on the side within institutions that are actually using this to buy up stocks again. I kind of have a feeling when I look at fund managers that people are afraid that they might fall for the same trap we saw last year, where we had this extreme dump down and then the V-shaped recovery, which led a lot of fund managers sidelined. I personally know like of two who are still trying to catch up with this. They're probably going able to do that, but that really missed like, you know, using those levels to buy again, because they kind of thought like, okay, the world is ending now. And this is an expression of liquidity. And we see that on a smaller time scale as well. I mean, maybe you guys remember in October where we also had this one extreme day dipping down. It's always bought up almost immediately again, like on a smaller scale. So my educated guess now would be that we see the same again. However, in this overall structure, which I still think is true of, you know, prices moving for a prolonged time more in a volatile sideways range, like 5% to the upside, 5% to the downside, or maybe 10% to the upside, then going down by 5% again, which can be an extremely difficult market for traders, especially beginner traders, to deal with. Also a good chance, actually, because that means you can trade contrarian strategies intraday, which I know a lot of beginner traders like to be the contrarian, not trend follower. Yeah. So something like our play might have a renaissance again.
You know, I like that as well, right? You know, very often, even though obviously I'm fully informed with the trend, I'm not just, you know, I'm often trading both, but I'm plenty happy to take a big short on gold when we hit certain levels, right? You know, that kind of thing.
Go for it.
So yeah,
I'm too old. I'm too slow for that, probably.
So yeah, I agree. So because I think it pretty much comes down to this situation of the 4-week versus the extended. It's kind of 3 month to 6 month plus, right? Now the Strait of Hormuz. I still don't know if I pronounced that correctly.
I always want to say the Strait of Hummus.
yeah. But I don't know if I pronounce it correctly, but either way, you guys know what we're talking about. So there is also this. So we've had the 10% increase in oil, about basically a 10% increase in gas. The thing is, this mainly one of the primary plays that are going to be hit is obviously Europe with that.
Yeah.
Right. So that's why we've seen the euro come way down. Now, this would roughly translate into a 0.35% move for inflation from my sort of rough calculation. So 35 basis points. That would then kill the kind of, which I don't necessarily agree with, trying to hike rates or switch interest rate trajectory.
Yeah, I mean,
based
to be
on
fair,
energy.
we saw
So-
inflation yesterday
so
also
simply-
coming in Europe, 1.9%, which is still below 2%, but it certainly gives
Was-
the ECB a reason, not to lower interest rates, sadly.
Yeah, and then same with the UK as well. So we're looking at potentially 2 more interest rates from the Bank of England. So hence the negative pressure on the pound. If that comes through, that will also reverse that. Now, the pound I've also written through here is actually quite a nice defensive, which, as far as the stock market goes, that's definitely a place to hide out, which we haven't seen right now. It's had selling nonetheless, but that may flow into the pound as well. So you have a triple whammy of 50% of its weights in defensives, and this goes between weightings in oil, aerospace, and defense. Right, this is 50% of the market weighting essentially. So the UK always becomes like a somewhat defensive player in these kind of aspects through here. Now, the main thing though is to look at if we're looking at Europe, because then in the worst case scenario, we could see euro dollar below 110 easily, very quickly, very, very quickly. So we had the Russia-Ukraine situation, and that also saw natural gas prices well higher. Right now, we're only 10% higher, nowhere near the Russia-Ukraine situation. But if this does spill out into a longer type form, plus the oil type situation, there was 5 million barrels of disruption initially. Then eventually 4 million found its way back onto the market. And so it was basically only a 1 million barrel disruption. Now, with the Strait of Hormuz, if we see this actually fully locked down, it'll be about 15 million barrels, which is roughly 15 times bigger. And that's pretty much what the market is looking at right now. If in the event that this literally doesn't work out somehow, oil straight to 100, straight to 120 and beyond. Given it's such a huge risk, I don't think we'll actually get there. And I think that's what you're seeing as well, Dirk.
Yeah.
Obviously, from all parties, from every single country, they'll have every single interest for that not to happen. So it's probably not the base case, but it definitely is possible right now. And there have been some oddities in general with how the operations have gone, just with how Iran has responded. But I think the market is still leaning to, look, at the end of the day, the big boys are going to direct the ship.
The question about Iran is also how much backing is there in the population still. I mean, everybody saw the celebrations, at least that's what was posted on media. If it's true, if it's not, of course, I cannot say. But I think it is true, honestly speaking, as a personal note here. Like, they basically celebrated like crazy that their leader was executed by the USA, which is in a way a crazy thing already. But I think it shows like the sentiment and the backing or lack of backing the population has for the current regime in Iran. And I think under those circumstances, and even without the case of two very strongest military powers in the world, one of them being the USA, the other one being Israel, basically saying like, guys, we can do that anytime again to take out military targets, and you cannot do anything about it, so maybe play it safe, put aside your ego. it's just so long that a country can maintain its stance of of that we are going to answer with like our full force, and you are going to regret that you attacked us. No, and I don't want to go down the road now of justifying any attacks or anything. Doesn't matter. Doesn't matter for us as traders. We need to analyze what is likely going to be the effect on the markets, as much as that pains me sometimes in circumstances like this. But I don't see any scenario, honestly speaking, where we would, at least for a longer term, see an oil price like at $120.
No,
I
which is
just cannot imagine this.
yeah,
Because it would,
exactly.
like you said, it would basically, at least in Europe, like kill all economic output. We already have, you might think like an inflation rate of 1.9% is very low, but you also have to compare that to the GDP, which in Germany is like at 0.1 or 0.2%. So we are actually in a kind of deflationary environment here in Europe. You don't see that if you go to the supermarket, sadly, but of course, those prices are just one part of the equation. And prices like this would basically kill Europe, kill Germany. I say Germany, of course, always like in the same breath with me saying Europe, because I'm a German, and also because it's the largest economy within Europe. And same for the USA. I mean, they are not that dependent on that oil as much as we are in Europe, obviously.
USA will be okay. They've got a lot of oil right now.
Exactly.
They've turned up
They have
everything.
Venezuela.
Nat gas, and Venezuela, right? But yeah, so if you think of it that way, yes, they arguably are in the best strategic time for them to do this. Now, it doesn't quite seem that they were the leaders being ramped in, but Trump definitely has pressures on him. Obviously, we got the midterms, everything else. No one wants war, even his own base, the Republicans, like just no one does in general, right? So I think he will be very much on the path of trying to wrap this up pretty quick.
I think
the other portion is, like you were saying with Europe. I mean, if this actually kicked off, that'll be 15 times bigger than the Russia-Ukraine situation. And if we go look at nat gas right now, let's go to the daily. Let's get rid of this stuff. So this has pretty much been our little blip here, right? Which basically looks like nothing in perspective to this was Russia-Ukraine times, right? So this is nothing right now, but if somehow we kicked on and we started pushing beyond here, it would start to become a problem. It wouldn't be as massive because I guess obviously Europe is roughly going out of winter per se. We're not going like into the depths of winter.
It would be different situation maybe, exactly, if we were like talking now, we are like end of September or something. Like in Germany here, the winter was quite hard. We're luckily now getting warmer temperatures again of like 10 to 20 degrees. And it was all over the headlines this winter. Oh, our gas reserves are almost depleted. What are we going to do? What are we going to do? So totally different story. If we were now end of September, I think we would have seen much more of a reaction in natural gas to the upside. Absolutely. And I shared this here earlier, unbiased trader saying he's seeing a full regional war. Iran versus US, Israel, Gulf region oil, 150 to 200 global recession, massive moves in commodities and defense stock surge. This would be the largest energy shock since 1973. Of course, that's always a possibility, that things escalate outside of anybody being able to handle this. But the one thing always that is for me different to the stuff we saw in the 70s, the energy crisis, the energy shock back then, is that we have an interconnected global economy now, which we didn't have back then. When I was going to school back then, globalization was this buzzword always, whether you liked it or not. But this is what happened. We are all interconnected. So there's only so much war that countries can afford because it's going to negatively affect their trade relationships eventually. And by all means, when we talk about negative effects on trade relationships, Trump has done a pretty good job in pissing everybody off already. So they can afford to only go that far. This is why I also think it's quite amazing to see the type of precision they managed to do with their military strikes. I mean, it's the first day of war, and the leader of the country dies already. Great. Has been crying
Yeah.
for war all these years, and when he dies on the first day already. Talking about Iran, of course, right now. But it's really affordability, and nobody can afford oil prices of $200 per barrel. Nobody.
Yeah, no, literally no one can.
Yeah.
Like that would break everything. Like it to the point where it wouldn't happen. Like just literally wouldn't happen. And you've got a million other players, and then you've got Iran.
Yeah, exactly. Yeah, exactly.
Right. China's not going to get involved. Russia's not going to get involved. No one else is going to jump in. Right. Russia's already tangled up. They'll throw their little probes out as they do and try and push people's buttons. Same with China, having a bit of tit-tat, trying to show some aggression and then trying to say, oh, we're here for peace at the same time. They're trying to play both sides. Now, the other thing with China, like they've been stacking up oil for some time, and they've got roughly 100 days worth. So the max expectation, I would say, for this entire thing is not more than 90 days.
Yeah.
Just mathematically, possibly for global trade, everything. Long before that, China would step in. So I'd say it'd be way earlier. And China, obviously, say if we go to the 4 weeks, which is what Trump is sort of expecting, China would definitely be starting talks already to try and get something to calm down or put their own forces in there. It won't be necessarily public and voiced, but it will calm some things, or they'll talk to Russia or talk to someone else or yada yada. So to be honest, I don't think this will actually last very long.
Yeah.
For the exact point that it can't. Like it actually just physically cannot. So right now, everyone seems to be pricing basically for that tail risk. And even now, we've seen some recovery today, but I still keep hearing so much talk of this is bad, it's worse, it's going to keep getting worse. I don't think so. I think I want to take the other side of this trade. People are calling for the dollar to fully come back. I'm like, huh? What do you mean?
But this is what we always see, in times like this, that like people like to paint the worst picture there as possible because it sells good, and it's more a headline like war in the Middle East escalates, oil soon at $200, gas prices for your car at over €2 per liter of diesel, for example. And
you haven't heard.
It's more clickable than.
How many times I've heard people say that to me today. They're like asking me like, "Oh, should I go fill up my car today? Like, is it gonna be like 4 times as expensive for the next like 6 months? Like, should I buy cans of oil?" I'm like, dude, chill out. Come on.
It feels like the pandemic all over again, where in Germany you couldn't get toilet paper anymore because for whatever reason people thought like it's good to hoard toilet paper, not canned water, not canned food or whatever, no toilet paper, because it doesn't matter if you starve, as long as your ass is wiped clean.
Yeah, I swear, any of you guys in chat, if any of you did that, what were you doing? Honestly,
why?
What are you doing?
Why were you doing it, please?
We had the same deal here. We had like Thai restaurants trying to sell toilet paper.
No way.
As like an additive when you get your pad Thai or something. And I was just like, what is this insanity, right? And then they got stuck with literally like half the building of toilet paper that they've stacked up, thinking they're going to keep selling it on. It's, dude, no.
Or everybody was suddenly getting into selling masks, those protective face masks.
Yeah.
Everybody was an expert on this. Everybody tried to sell it.
Buy some baked beans. It's probably a better idea.
Yeah,
You know?
true.
But yeah, so I think we'll start seeing some kind of highs. I think we're already seeing it. And just like we've talked about with things like the NASDAQ, for instance, like we're seeing a very good rally through here. We have the 200-day moving average, which we came just above, right?
Mm-hmm.
Now, we haven't seen that pierced for some time. And obviously, as Dirk has definitely talked about a number of times, the 200-day, as far as particularly stock markets, is very much a bull bear, indicator. It's kind of the hard line in the sand, right? We've managed to defend that, stuck above it. Same with the S&P. We've definitely got a bit more height through there. I would say from here, we'd possibly see some buying. And it also goes back to this chart that I was showing you, Dirk. If we get this situation calming down, and we now also see the MAG 7 after the software SaaS stuff kicking off, plus we've had this fiasco.
This was the reason why I bought NVIDIA.
These are looking pretty cheap. Yeah, they're looking pretty cheap right now,
It is. Like I said, for me, it was kind of eye-opening when you showed me this on Monday. And I thought, okay, I'm going to switch some of my monthly ETF investments into directly buying. In my case, I would prefer NVIDIA. But, you can, of course, if you like Apple more or you want to buy a mix of them, all good. Microsoft is something I wouldn't buy because Copilot sucks. And it's true. I mean, so it's such an embarrassment, that stuff. Really, what are they doing? And so yeah, and NVIDIA is for me the case. Of course, no financial advice, guys. But NVIDIA, if you compare it, for example, to the NASDAQ, it's the same pattern. Anytime it goes down by like 5%, it's immediately bought up again. So I'm still, facing the blame for me selling my NVIDIA at 110 that I bought at 90 something. But yeah, that was last year's Dirk, who was not very smart.
Yeah.
This year's Dirk is going to be smart about it.
I think this year's Dirk is much smarter. I think that's a good idea.
Let me knock on wood.
Yeah, I was just going to show you some options charts. I brought these up on, I think it was Monday, or it might have been. Did I bring them up with you? It might have been
with me. Not no. We looked at the 25 delta risk reversals, but from your, the
from
sheet you are normally showing.
That guy. Yeah. So, it must have been yesterday. So basically, we saw a further push for deepening of euro-dollar selling from the option side, which we did see come through. The interesting thing is that, so it's basically both from the 25 delta risk reversals, which is basically people trying to price for essentially an opposing view on the market and where it's going to go through, or a continuing view deeper than where we are typically, right? Depending on how things are skewed. Regardless, we also saw which I thought this was interesting, Dirk. We saw a massive drop in the 1 month for the dollar yen. And I think this has gone deeper now, seemingly pricing in potential intervention risk, also because of that dollar rally, because of the current situation. So we definitely have a mix of opposing factors here as far as the dollar overall. We've been through that guy, been through that. This is obviously the shipping rates right now, which have surged. You guys can see they're basically
naturally
up to the moon. Not much else to say there. And this is also the gold positioning. So this is the final one I wanted to show you guys. So we had a number of you guys asking about why gold was down whilst we have this situation going on. So we did hit a peak and then we come off. Now, a bunch of that comes down to margin positioning. So as this kind of risk elevates across the board, you get margin requirements increasing. Also, you see other assets falling to a great degree. Therefore, certain funds have to take profit on profitable trades to balance the portfolio. And then there's also other systematic portfolios which have to keep a certain balance ratio, and it's just automated. So when a certain asset goes down this much, they have to trim some of that or increase one, vice versa. So that's pretty much what we've seen through here. So I think once we do start seeing some of these bottoms eventually from gold, it's not a bad idea to pick up, both from just the general trajectory of gold that we had already, plus you have the potentiality of the crisis, if you want to call it crisis. I don't know. The geopolitical situation progressing, getting worse, basically, right? So if this is not like a 4-week thing, it becomes like a 3-month or a 6-month thing. Obviously, the 3-month anchor point is what I'm talking about with the China oil situation. So we'll likely get pressure from there. Either way, I think gold is definitely one of the outliers that still looks very nice to buy.
Isn't that interesting with gold? Like, no matter what is going to happen, gold is to profit of it. Risk on environment, it's still going up, for reasons, risk off environment, it's still going up. It's like, what is going to break this trade eventually? Nobody knows.
Yeah, and it comes back to the bonds thing that we were talking about, right? So as we talked about in the past, like neither of us saw bonds as very favorable as like a defensive type asset. And we've seen the same thing through here. They haven't been. Like we saw yields rise despite the dollar actually climbing very nicely. So normally you'd see the dollar climb itself, but you see the yields come down because people are buying bonds.
Yeah.
Because typically when there's some kind of war situation, you want to go to the country that has the most weapons in their arsenal, per se. Right? At the end of the day, as crude as it may sound, that's kind of how it goes. So, yeah, we definitely have a very interesting dynamic overall of considering traditional balancing, put it that way.
Yeah, it's interesting. I think, like, if we look at the bond market, for example, especially the 10 years treasuries, like the sweet spot where things become increasingly bad for stocks is somewhere around 4.5% to 5%. We are still far away from that, obviously. We are not going to reach that also, but this is kind of where, like, traditional value investors like Warren Buffett think of switching away from stock markets. He did this, I remember, I think it was 2 years ago, he switched over to short majority treasuries because the yield was around 5% there, or over 5%. And then as an investor, you always have to obviously make the decision, am I going to get the risk-free 5% in yield, or am I going to invest this into the stock markets for an average of 8% return, if we look at the past 100 years? And naturally, not us crazy traders, obviously, but if you run an investment fund or something you would always say, like, I'm going to go for the safe 5% instead of a risky 8%. That trade still didn't play out as good because the stock markets performed like crazy as well. But this is like on a more fundamental levels, the thought process that is going on. Do not, like, as a trader, not on a daily picture, but an overall picture, you need to have an eye on the bond markets because they are probably the most influential thing you have an eye on when it comes to judging should I buy or sell a currency currently.
Agreed. And I think that's even for stocks, like obviously the overflow is often delayed into the stock market, right? There's like a delayed fuse. FX definitely reacts more immediately, per se. But I think, definitely the bond market is the thing that people sleep on, right? It's almost, it's the same way that like the, sort of like how the GFC happened.
And
where we had
it's
all
crazy, no, because
bonds. Like, no one looks at the bond market when that
it's
is
like
actually technically the
it's so huge
basis.
in comparison to the stock markets. You know, it's a multiple in terms of volume
Yeah.
on the bond markets in comparison to the stock markets, and still, at least, you know, regular traders, beginner traders normally never look at it. Maybe because it's so abstract, also because there's
Yeah.
like not the reasoning is not, oh, A happens when B happens. You have to think a little bit around the corner always. And
Yeah,
as you
you're
said,
gonna,
the cause and effect, there's always a delay between both.
Hmm.
One mentor of me said, you know, if you look at the bond market, you can always get a very good overview on how the general state of the economy is at the moment.
Yeah.
Yeah.
Agreed. So I always think of it, you do the bond market and the dollar, and obviously then they have an interplay.
Yeah.
Figure out the bond market, figure out the dollar figures out the bond market as well sometimes. And then if you figure out them, you can figure out everything else. Stock markets, blah, blah, this, that, literally everything. But yeah, people don't look at it because
but
it is kind of boring. It is
you-
kind of hard. You have 1 month, 3 month, 6 month, 12, 1, 2 year, 5 year, and then it's completely different out the long end of the curve. And then you got other countries, and then there's interplay between.
Oh, you have the yield curves inversed and stuff like this. But I mean, look at this. Just what we saw now on the 10 years, we've come up from around 3.93% to 110 at the top, and you can see how that translated also into dollar demand already. Because I can guarantee you, at 4+%, there are a lot of money managers out there, fund managers that think about, I have to buy 10-year dollar treasuries right now because I get over 4% as my baseline.
What's a good chart on
US 10Y?
US 10Y? Is that it? Yep, that's the one.
Yeah, but that is the without the R, because when you get the
that's what I was thinking.
Then you get the actual yield.
Yeah, okay, yeah, there we go. Yeah, that's what I was looking for.
That's the one I'm looking at as well.
Yeah. So yeah, basically we've had this big bounce. After, you guys can see through here, we were basically starting to break this lower level, right? For yields. So this is implying higher yields going forward, less rate cuts overall.
Which we are still going to break eventually, in my opinion, because we are on a path of further rate cuts. But yeah, you can see, we bounced off. Immediately, we saw the US dollar going stronger in comparison to the euro, for example. So there's an immediate effect. I don't know how they in detail correlate, to be honest. Would be worth to look into that to kind of, see when are extremes of the correlation reached to play reversals, for example, then. But yeah.
I was going to say it waxes and wanes. I feel like it's kind of like the same structure we're talking about. Like the correlation goes from 90% to 60%, like day to day sometimes, right? So it'll hold up for 3 or 4 days and then just plummet. And then you just, okay, never mind. And sometimes less, it'll be like 30%.
Yeah.
And they're basically moving inverse. And you're like, hang on.
Yeah. Well, it would be interesting to see, like, to research, like, the lag effect of that. Which correlation has a lagged effect of, let's say, like 4 or 5 days a week or 2 weeks onto what is going on with the exchange rate. However, we're talking about a very complex system here, of course, and this is not correlation, as I always like to say, it's not causation. It's part of explaining what is happening. It's not a reasoning for what is happening. There are other things, of course, influencing yields and exchange rates as well, as, for example, geopolitical events. What we see now in terms of yield is the effect of what is going on a geopolitical scale. So again, don't make the mistake to just, if you compare correlations between those, that you can use this correlation to actually forecast a price. You cannot. I think a while ago I made the example of, in the summer times, more ice cream is sold, but also more people are drowning in open water. So correlation equals causation means, people are dying more because they eat ice cream. It's of course not true. The denominator, the common one, is the summertime.
Yeah, and I think I've said to you as well, like if you want to make the most rudimentary model of, say, like a stock, you can use 3 or 4 parameters to get like a decent model. The most rudimentary model for like a currency / bond market influence is probably going to be 8 or 9.
Yeah.
Right. So, and that's for the basic, right? So, yeah. So that paints how much more complex it is. So sometimes you have, one thing going on, but there's also other things pulling stuff back, just like we see in gold. We've got this one major thing going on, and you see gold ran right up, but then we stopped running up, and now we came down massively. Because again, there's more influences in there. But yeah, ace 4 high, dude. I like this. Yeah, yeah. I know. I gave myself a bit of a shave. I got the stash going on. So I got the big fat caterpillar over here.
I actually thought earlier, should I make a joke about it or shouldn't I? And I decided not to make a joke about it. But in my mind, I thought hey, he's starting to look like a stereotypical Aussie now.
As long as you say Aussie, then that's fine. Then we're safe.
But maybe you're just preparing for F1 to kick off again next weekend, and you're like, a fanboy of Valtteri Bottas now.
Oh, dude, Bottas is amazing, dude. I love how so the thing I'm missing is like the mullet.
Yeah, the
right? I need to get the mullet. Yeah. Honestly, I love how he's gone full, like very meme, stereotypical, extreme thing with it, and he loves it, and he has fun, and it's great. It's so good to see, honestly.
Apart from being a good driver, by the way, as well, no?
Yeah. Oh, dude, he's a great driver. Definitely. I'm very keen to see how they go this year, and Perez coming back as well. So
yeah,
that'd be cool to see.
I think they make a good team also. Yeah, them.
Definitely. I think
let's see if Aston Martin is actually going to start. Man, what happened there? No, was that possible with Adrian Newey designing a new car that it
I think there's somewhere else in the chain of command that has not figured out that the engine is this big and the car is this big.
Yeah.
So
good comparison.
Guys, what are we doing?
I mean,
Adrian Newey is like, I'm doing the car, I'm doing the aero, like everything. You guys figure out the engine. That's fine. That's over you and Honda, and you guys get the other components, and you guys are doing suspension and this and that. And then he's like, so what do you mean the engine doesn't fit?
Let me ask you, what is your bet? Who's going to be which one? Who's going to win the drivers' championship, and who's going to win the manufacturers' championship this year?
Oh,
so we can.
I mean, it's really hard
in November.
Obviously, yeah, it's really hard since we have completely new regulations, right? And we haven't really seen what teams can do. So it's very hard prior to the first race. I will say this. I think Red Bull and Mercedes will be at the top.
Okay.
I think McLaren will be competitive. But I think they might actually be lagging a bit to Mercedes.
Mm.
And then as far as how they coordinate their team operations, they will actually struggle. I think Mercedes does much better staying cool and do whatever. And Red Bull obviously just don't really give a hoot. Right? They'll just drive and be like, whatever. And I think McLaren will start freaking out and trying to do this and that. I kind of feel like Ferrari will be much of the same of, what was it, 2023? When their cars kept setting on fire? Right? Right? I feel like they're going to repeat that same thing. I think they've got some tricks.
I think Ferrari has a shot at it.
Some tricks.
Honestly speaking.
Yeah.
I can kind of see Leclerc being the driver's champion this year.
Really?
I think he's doing so much better than Hamilton with his car. I mean, we saw that last year, obviously, again. And it seems like they got their shit together. McLaren, I don't think they are going to come out on top this year. Red
I
Bull, I
don't think so.
also don't think, honestly. Mercedes is kind of, it's suspicious that Toto Wolff is like playing understatement the whole time. You know, it's like,
Yeah.
not very. We don't.
So is Red Bull.
And so is
Like,
Red Bull, of course. Mercedes has extremely good drivers, both of them, and let's see how Kimi Antonelli is doing this year. Maybe he's going to be surprised.
That's the thing. I think it will be very competitive this
Yeah.
year, potentially.
I mean,
now,
talking
I
about
think,
good drivers, they are all good drivers, minus Lance Stroll.
Yeah. They are really good drivers. It's just the car. So, but I think we do have a couple teams at the top of the pack that have a legit good car that is probably pretty equal, I think. And
But
I
that's
think
the nice thing, you know, it's like new technology and you never know what's going to happen. It's probably going to be one of the more interesting seasons.
Yeah, and I think Hadjar will step up.
Yeah,
for instance.
I like that guy a lot, actually.
Yeah, he's cool. I like him.
Really
He's cool.
cool.
He's pretty chill. He's pretty calm. He's like a slightly more energetic Piastri. They're very similar, but he just has
Piastri
like
is very
more,
very
yeah,
focused.
it's more like
very...
Piastri's like this, like, and then Hadjar at least has like a smile, you know, like, but they're very similar. Just yeah.
I mean, in a way, so I would like to see also, of course, Piastri coming out on top, but yeah.
Oh, definitely. I would love to see that.
Would have earned it. Was a bit a bummer for him, like this the last part of his season last year. But anyway, so sorry, I know I had to ask.
Yeah, no, it's right.
No, we go into the race weekend. Was on my agenda, but let's get back to the charts.
I was going to say, yeah.
Can you excuse me for 2-3 minutes? Sorry.
Yeah, sure. That's right. No problem. We did have a couple comments through here as well. So Miko was asking a while before. Sorry, brother. I saw your question earlier, but guys, I have a totally off-topic question. I'm using MT5-2 on Mac. Does anyone know how to fix this? The charts keep scaling on my external screen when switching tabs. What do we mean exactly? Because MGN responded here. So if you got it fixed, I believe this is a question best asked for MT5 forums. They might be able to help you over there. I'm just not quite sure what you're saying. So when you're saying MT5-2, do you mean like a second terminal? And when you say scaling on your external screen when switching tabs, what do we mean? Because it will save the prior. So if you've been on a prior tab on a certain, say it's euro dollar or Aussie dollar or the pound or something else, it will save the prior zoom screen setting, if that's what we mean. Once you tab over. So if you have it on the, like, basically the full screen setting where it just shows one chart altogether and not like the multi-chart type setup, that might be why, I would say. But yeah, I feel like missing a slight portion there. So, but yeah, wait, guys, give me anything you want right now. Obviously, we had this trade earlier for myself on euro dollar. I'm now sort of sitting and waiting until New York, until we get any kind of further headlines, etc. We've had a bunch coming out of minor headlines per se, but we haven't had anything major just yet. There's a lot of things that are very by the by per hour right now. So you guys can throw anything at me that you want. overall. Scribble, how we doing? How we doing, brother? Good to see you. How you going with your trading, my man? How are we doing? Let me know where you're at. 'Cause I'm curious. Right, let me scroll up as well just to see anything else. MB, dude, this was ages ago, to be fair. I'm sorry, brother. But what do I think of pound dollar and US 30 both on 1 hour time frame breaking a trend to the upside? Do you think it's right for a buy and a retest? So I would say yes, overall, we're definitely getting the essentially risk on elements coming through the market. With this recent dip through here, say on the pound, you might have scale up to this higher resistance area. And I did also mention that if this situation goes on, the UK could actually be quite a nice place to sit, right? So the pound here actually has like a weird spot where it will outperform. We also saw that similarly with the Aussie dollar, both on Monday and Tuesday yesterday, where we haven't declined as much as other pairs because obviously we're in Australia and we're like over here and we're like doing stuff with kangaroos and things, you know. So I do like that. It depends where you get in.
What
'cause
exactly
obviously
are you doing with kangaroos? Is the follow-up
Hey,
question.
Doug. Hey, nothing. All right, we're not doing anything. We just ride them to school as
Nice.
instead of bicycles.
In the pouch or
No, on the back.
on the bag? Okay.
Too big for that. Come on.
So I missed it.
That's where you put your school books. Your school books go in the pouch.
Oh yeah, that makes sense. Yeah. Makes
Yeah.
sense. Yeah. Did
Exactly.
you just say something about pound sterling dollar cable?
Yes.
Because I missed that one, and I would be interested in your opinion about this as well.
So yeah, I think pound dollar probably has one of the most robust upsides versus the other currencies, and that also comes back to this position that I was talking about, where the UK overall, this is mainly regarding the stock market, obviously, but then that comes into the currency itself, plus the slightly defensive factor as far as inflation problems from energy.
I was thinking of selling some puts this morning with a strike of 130, 6 months into the future, but I was like, the
This thing,
intrinsic volatility is
the,
not high enough to justify the geopolitical situation. Let me put it like this.
Yeah.
So I was thinking maybe instead I should play it as a forward or as a spot position.
I was going to say I would say more spot positions. I think the current timeline of things is very much a gamble.
Yeah, exactly.
Now, we have the expectation that it will be sooner rather than later, because it kind of has to. But this is probably the first conflict we've really had that is not quite in Trump's control.
Yeah.
Entirely.
Yeah.
Right. So I think that is the risk factor and the tail risk that you have to price in with that. So I think that's where.
But it's interesting because I think when it comes to ATM volatility, I'm not sure if it's really already priced in, honestly speaking.
In what sense? Like
in the sense of the
recovery?
volatilities being too low.
Okay, so you mean just more general chaos, either way, in that sense.
Yeah. I think the chaos is not priced in. So I would expect like the 25 risk versus volatility to be higher at the moment than it actually is. I think at the moment the market is, and I know this is also our opinion, that it's ending sooner than later, but that this is the general market opinion as well, which would mean the actual trade with the more upside would be something like unbiased trader mentioned earlier, no, to kind of bet on an escalating conflict, for example.
Okay, I'm seeing what you're saying, or an escalating conflict, but with a difference. So not quite where people are thinking it's going to go, but we sort out some certain things, but other things get worse, right?
It's like if I compare this to
It's possible.
former conflicts, for example, you would always, if I look at the 3 months implied volatility, for example, at euro dollar or pound sterling dollar, for example, there was always a jump more to the upside there than we are currently seeing it. So, in my opinion, the market is exactly playing or pricing in what we were saying earlier. This is just a temporary conflict. This is going to end. But me being an option trader, I want to trade the outlier often, very often. So I
Yeah, of
think
course.
like
Yeah. Asymmetric.
asymmetric. So I think like maybe this is not the time to sell the option. This is a time to buy low delta options, for example, to play this outlier.
Yeah.
Because they are cheap. They are cheap, but the upside is immense if the little chance of this conflict escalating is really going to become true, which of course we don't hope, but just from a pure mathematical standpoint. Kangaroos got our banks nice.
Wait, hang on. Primal Light, dude. Are you Australian as well?
I would assume so, no? Otherwise,
Primal Light, are you an Aussie? Yeah, you said our. He must be. He must be. Where are you from? What? Just what city? Where are you from? Because we do have a good number of
here we do.
in here. It's good. It's good to see.
The
Sydney.
LJ fan club.
Sydney, brother. Nice.
How much of your population actually is concentrated in Sydney? Like 98%?
Dude, no, everyone's apparently moved up to Brisbane recently because our house prices have gone bonkers, and the entry level house or apartment, both house and apartment, are now more expensive in Brisbane here than Sydney.
Okay. Wow. Yeah. Interesting.
So not the top
another
level
one here
ones.
from Adelaide, or what is that for?
I would assume that's Adelaide.
Yeah.
Yeah, so Chris, you're from Adelaide. Dude, nice. Dude, we got the team in.
I still never going to visit you guys in Australia.
Aussie.
I don't want to be killed by weird animals once I leave my plane.
Oh, come on, Dirk.
And I always think also, when I always hated the flight when I was living in Singapore, going back and forth to Germany, I always hated, sitting in the plane for 13 hours. When I think then I have to change plane then and fly another 8 to 13 hours, depending on where you want to go to Australia. It's like, oh, come on. Not going to do that. No chance.
Look, you can live in Australia. You can get the first F1 race of the year.
Yeah.
And then you can go through to
I go
Southeast
to
Asia periods. Yeah, that's pretty good. Come on. Yeah, the hype, the first race of the year. That's pretty good.
Would be nice, but man, the tickets are apart from the air ticket there, because I definitely want to fly economy to Australia, and then the actual ticket for F1, in the package I want, is probably another like 10K or something for that.
Yeah, it's probably actually not the actual tickets themselves for F1. It's probably more the accommodation.
Yeah, that also.
Yeah.
Yeah, I couldn't even crash on your couch, since you don't.
I know. I'm up this way.
Yeah.
Like I'm a bit too far. So it's all right. We can drive for like what is it from Brisbane to Melbourne? Like 20 hours or something.
So basically, you can drive from the very northern part of Germany to the south and all the way back, and then you still haven't spent hours.
I also think 20 hours is probably conservative. I think
What is the speed
21,
limit?
22.
What's
But
the speed?
that's also continuous driving.
Yeah.
Right?
What's
So
the
you
speed limit
usually
in
have,
Australia? Like if you're out on the highway, 100
100 in
miles?
parts, and then it goes to 110, 120
Is that
in
miles an
sections.
hour, or are you actually
Kilometers.
kilometers per hour?
Yeah.
Are you using the metric system? Oh.
Yeah, of course.
Yeah,
We're not
I mean,
weird.
you are an
Yeah.
ex UK colony, so
It's not the US. Get
yeah,
out of
true.
here.
Yeah. In the UK, we have more like elbows and stones.
Yeah, well, that's the other thing. When people talk about like their weight in stones, I'm like,
Like,
what are you talking about, dude? What is that? Stop it. But yeah. Unbiased Trader is saying Strait of Hormuz will technically be shut for a long period due to insurance concerns, etc. Hence, cause big impact globally. I just hope it ends very fast, as unnecessary innocent lives are lost in wars. Definitely echo the latter part. Obviously, it's very. I mean, no one wants to see wars or disruption. It's very sad. I mean, I have various friends and people right in the firing lines of certain things that I've met over the years, and I've seen certain videos and all sorts of stuff, and it's not very nice, right? But yeah, so hopefully it is resolved. Now, as far as the economic position of this, I don't think. So this is This basically goes back to what we had from comments from Trump last night. So basically, 100%, the Strait of Hormuz has to be opened. No question. That is not just the US, not just the UAE, not just the local, I don't know, Asian area around there as far as their local supply of oil. It goes back to Europe, it goes to the UK, it goes to everyone across the globe, right? So there will be some kind of orchestration there. If not orchestration, some kind of agreement that we allow that to come through. Mathematically, it has to happen. Because eventually you also get players like China, which is kind of sitting in the wind, the side, which will say like, "Hang guys, this doesn't really work for us. We're on your team and trying to do whatever. Not cool." And then India is also the other big purchaser or purchasee of Russian oil, which they have somewhat said they will and they won't. There's been back and forth of purchasing more Russian oil because of this situation, but they're also very scared of getting more sanctions from the US, right? So even through that, there's a whole bunch of players in that region that are being drained. So I can't see this going on too much longer overall. That's why, like when we were talking about the 150 to 200 plus dollars in oil, I don't think it's
if that happens, I'm going to laugh and bicycle. But anyway,
yeah, it's probably just actually not possible, to be honest. Like stuff would just freeze altogether. Yeah,
but then, I mean, if it happens, we would have the case that basically nobody saw coming, the return and bounce back of inflation. No?
Yeah, that's one. And the other one, the other thing with dollar franc, if you looked at,
Dollar
because
franc.
I know we have our dollar yen
Yeah.
trade, which is it's brewing. It's still it's taking a little bit longer to maturity in the womb, let's say. But bring up dollar franc, and you'll see what I'm talking about.
See, I don't even have it on here. Let me quickly edit.
Yeah, I know.
I do have it on. Yeah.
You do?
Yeah, the never-ending trade of Swissy strength.
Yeah, but I mean, look at where we've gotten down to these bottoms, where we did have talks of intervention, that kind of stuff, and we did have a few peaks put through, and you did see the current account balance for the Swiss showing changes, right, where there's been an interest. Now, they did also comment that if we went deeper, they would get more involved. Obviously, because of the situation right here, we now have a structure where we are trying to press up on that technical structure, on the underlying support, to potentially move up finally.
The thing is,
So I think it's one of those things where you get, especially when you're trying to think about trades that hedge out the forward risk of a prolonged excursion versus a quick one and done situation.
I'll never understand, honestly speaking, why nowadays the Swissy is still such a safe
Honestly,
haven.
I don't either.
I don't even. It's not a large economy by at any scale.
It-
You know, if you are from Switzerland, I love you. You know, you are our dearest neighbors, but I still don't understand your version of German anyway. But also when we look at the national bank, you know, are they really going to
That's so
intervene
funny
very much,
because
or do they want to risk, you know, what happened back then in 2014, where
yeah,
they had to give up on was it a floor or whatever, and within a couple of minutes we saw the Swissy strengthening by almost 20%. I really doubt. I think it's one of those trades, you know, that's like historically accurate and nowadays still done due to lack of alternative. Maybe one of the alternatives actually is gold nowadays, but yeah, when it comes to currencies and you want to have a risk-off trade, what are you going to do? Traditionally, you would have bought the US dollar. Nowadays, it's like euro. No, cannot. You know, yuan cannot. Aussie, I mean, seems to be getting there somehow a little bit, but still also not. So it's like,
5 to 10 years
yeah,
away.
let's
I think
see if
we'll
we
get there.
can
But
hide
yeah.
our money and our treasuries somewhere in the Swiss Alps. But it doesn't make any sense anymore.
Well, it's because we didn't have the cross flows for the yen anymore, right?
Yeah.
So we had the yen as a risk-off type flows and attribute to the currency. Now, we completely abandoned that with the rates picture. Funny thing is, dollar Swiss, euro Swiss, whatever you want to look at, has the same picture. I mean, the
it does.
Swissy has negative rates.
Yeah, they do. Yeah, true.
Right?
Yeah.
Like,
I mean, look at this monthly chart. It's like
Yeah.
at the lowest point, it's the strongest that has ever been in comparison to the euro. But I'm sure the dollar chart doesn't look very much different. Yeah.
Yeah.
This is a monthly chart, by the way. So
Yeah, of course. Yeah. But regardless, if we talk about like near term time frame, still, I think, again, it comes back to that. Many countries have seen very volatile overall. You know, euro, we're like, okay, inflation, no rate cuts, this, that, whatever. Same in the UK, the US, everywhere. Even Australia, right? It seemed like, okay, heading lower. Now, suddenly we're increasing rates when no one else is. So I think as far as what's on the table to invest in that already has trust, I think it's pretty much just Switzerland.
It is.
Right?
Absolutely. Yeah. Absolutely. Yeah. For whatever
I
reason.
think, yeah, and I think Japan still has that, but just they've had such a mountain against them that obviously you're gonna shuffle. However,
Japan also has been in this spiral basically since the late 90s.
yeah, for
It's
so
like,
long, yeah. So we talk about $160 yen now. It used to be 70 cents.
yeah, exactly.
At one
Come
point
to
as well.
think about
Yeah.
like maybe one last thing. I'm always looking. I'm not trading stock options. I'm trading forex options. But one of the things you might want to have a look at is the VIX, so the volatility index for the stock markets, which interestingly is right now. We bounced off once again where we bounced off before, which brings me kind of underlines my idea of probably we've been through the worst. Volatility is coming down again, and volatility is always coming down when stock prices go up, or in general when prices go up. We're seeing that pattern again. It looks eerily like what we've seen last time in October 2025 and after this November 2025, that we have those, kind of reactions to the markets, and then every dip is used again to buy up risk on assets. And it seems like this is happening as well nowadays. There was an outlier that was last year, of course, where was a higher period of volatility in stocks anyway after 2020, naturally because of COVID. But normally around this area of somewhere between 28 and 30, if you look at the VIX, this is very often where we bottom out. And you can do a layover with the S&P 500 here, for example. So usually these spikes you see here are like you can translate them to the local bottoms of a stock market. So
I agree.
buy stocks.
I agree.
Now go all in with 1 million leverage.
No, dude,
be that person that Richard was talking about earlier. Be the 1 in 8 billion person. Just kidding.
Yeah.
But nonetheless, welcome back, Richard.
Thank you very much for having me.
No, I was just going to say
where the bankers hold their gold.
What was that, Rich?
Switzerland is where the bankers hold the gold.
Very nice, very nice. We have so much gold.
You should cast yourself for the next Quentin Tarantino movie, maybe.
And then what gets
replace
shot?
Christopher Maria Waltz.
Oh, get shot then.
Yeah. I was going to say
one of those.
I was going to say, Dirk. I think just like we were talking about the bond market, VIX is definitely something else that most traders don't really look at.
And it's such an easy thing to look at, no? It's basically
it's
like
obvious.
the fear and greed index for crypto, for the stock market, it's the VIX. Yeah.
It's very obvious. It's very aggressive. So outside of like an actual financial downturn, like a elongated recession type period where you might get like ups, downs, like constantly, which we haven't had, to be honest, since the GFC. It's been a long time because things are artificially moved around with the chess pieces on the board these days. So this is definitely a very, very good piece to look at. So like Doug was saying, so to push beyond here basically assumes you're fully on board that this is going to escalate beyond what we have now and potentially a longer endured type period, or some kind of, I don't know, someone gets a missile somewhere that wasn't meant to be or shouldn't have been. And I don't know what you think, Dirk, but right now I can't see that. I
No,
think
me
we're
neither.
pretty
Neither.
yeah.
I mean, like we said over and over again during the stream, no, I also cannot see that, and however, yeah, the outlier trade would be, you know, to abuse the currently low volatility to bet on the outlier primarily with options. You know, you would probably buy puts then, but it's very unlikely, in my opinion, that is something like this is happening. And with the surgical precision we've seen many of the strikes and what is happening there being executed right now, it seems also that on a military level, especially the USA, of course Israel as well, they are very determined on keeping this conflict as short as possible.
I agree. That's definitely. I think that's the exact point that you're saying. A lot of people are trying to see this as like a Iraq, Afghanistan
Yeah.
type situation. Not
Nobody's
at all,
going to do that
right?
anymore.
Not at all. At all. This has been very much precision, tactical stuff. You can already see from, like I was saying about China stockpiling oil for the past 3-4 months. Like they have intel that this is on the way. And obviously we were talking about this back in July, August last year a number of times. And even before that in the excerpts starting to bubble up. Right. So arguably this has been very well telegraphed and now we're just seeing the eventual outcome of it. So it's very different and it's almost it almost feels like the same way that people trying to compare the AI situation to .com bubble. People right now are trying to compare this to Afghanistan, Iraq type situation. I don't see it as the same at all. I don't know how you could, frankly. So
Exactly. So was that already 2 hours that like went by in a breeze today somehow? And but that's a good sign, you know. Had a lot of fun here, and it's time to hang over to hand over again to Richard and William. The hangover is going to come later today, then maybe for some of you, not for me for sure. But and yeah, you guys have fun. I'm going to have to go offline now. I'm going to see you guys again next Monday, same time, same room, same stream. Thanks for being with us here. Leave us a like, leave us a subscription, and I believe we have a giveaway also soon coming up where we celebrate 100K of subscribers, right?
No.
No?
They went to me already. That's fine.
The 100K.
Yeah, I won them all.
Ah, okay.
Yep.
Yeah, it's already gone. Sorry, guys, it's done.
Okay, so you are like the big greedy investment bank.
I'm the big
And
black
it's gone.
hole. I'm Jane Street, just making everything
LJ Street.
It just reminds me of the
LJ
South
Street.
Park episode. That's what you just said now, Dirk. Just reminds me of
gone.
that
Yeah, it's
South
from
Park.
South Park, exactly. Yeah.
And it's gone. What do you mean it's gone?
All right, guys, take care and see you again next week. Bye.
See you, Dirk.
Thank you very much,
Cheers,
Dirk.
man.
Have a good day. Oh, my
Who
apologies.
keeps on
I did
adding
not share
me
my
again?
Dirk, I will, whilst you're randomly here, whilst you're not meant to be, I will think about how.
Think about how?
No, he's
Hey,
gone
I'm
again.
back.
I'm just going to add you just so that the chat is not like, this is weird. I will think about how we can orchestrate the other parameters for what you were coding before.
Yeah.
I'll try and
You
I'll
can
see
also
if it
just
works.
write down your chain of thought, and then I'm going to try to translate it like to the best of my knowledge and capabilities.
Yeah. I'll definitely, because think it can be done, to be honest.
Yeah,
I
would
think it
be
has
awesome.
legs because we've obviously seen it does in other parameters. So I think it's just a matter of pinning that down. So yeah. Anyway, see you
All right.
later. Ciao, brother.
Bye bye.
See you, man.
Goodbye,
Adios.
Dirk.
Dude, see you later, Dirk.
Bad Dirk.
Dirk.
I was listening to what you guys were saying in the background a little bit. Only caught a little bit
I was
of
going to say,
everything.
did you pick up some trades or
No. I jumped in too late for that. For LJ to give us any like trade ideas. I caught the little like, you know, it's not like Iraq, you know, war of a few years ago. I got a little bit of that. That's what I got.
What are you
other
talking
than
about?
that, I got very little.
It's like the last 5 minutes.
Yeah, that's when I jumped in.
Rich,
Yeah.
you missed
yeah.
all the content, brother. What are you doing?
I did admin. I did admin work. A bunch of admin work. It's always the problem. Being in the background is I think I'm listening, but I'm like brain switches off, goes type, other things. And you hear something and you're like, oh, they're talking of, and then it goes quiet again, and then you just type.
Yeah, that's right.
That's my day, Ben.
I wanted to know, Will,
Hello.
how have your trades gone since?
Yeah, really good actually. Let me just.
I hope so.
Let me bring my
I would think so.
screen up. So
Because
gold,
I was
as you know,
definitely, first of all, yeah, before you go on, I was definitely positively aligned with what you were saying. So before you left, I was going to say, I like these trades very much, and I want to see
Yeah.
how they play
Yeah,
out. So,
they let's just say they all hit TP. Even the one I didn't take hit TP. So as you guys know, I didn't enter into this gold trade. However, full TP.
Nice.
Down to US 30. Again, it came up and hit a full TP. And then if I look at NASDAQ, which you guys already know, which delete all this to make it a bit clearer. There we go. Again, a
Full TP.
full TP.
Nice.
Yeah, which is awesome.
have you
It's
reclaimed the drawdown?
No,
prior?
not yet.
No?
No, not yet.
Dang.
No, I mitigated half the loss from yesterday though, which is a good thing.
Okay.
Yeah, which is it's okay. You know, I got to be careful on my risk per trade now.
So this trade right here on the NASDAQ, why did you only hold it that long?
That's a good question.
I mean, we ripped after that.
Yeah, we did. We literally did rip as well. Like we had some really nice bullish movement.
Do you not have like a conditional TP per se, right? Like
ideally, I was going
2,
to
3 type thing.
Yes and no. I was going to target up to this area here, but the way it sort of just consolidated over the morning session. Plus, I don't like to hold for too long. You know, I was just umming and ahhing a little bit. We hadn't quite broken above this, and then when we did break above it, we had a huge wick to the upside. As you can see here, we had a huge wick here, and then we had an even bigger wick here. And I thought, you know what? It's not worth staying in, so I manually exited.
So Will,
That's fair.
you didn't like the wicks, so you wanted it to close.
No, I didn't like that. Yeah, I wanted something a little bit more bullish. I wanted something like I didn't mind a wick, but I would have liked something like this, not like this.
But Do you mean the wicks in like the center point of your trade?
What do you mean?
What wicks are we talking about? Like the wicks in the center point of the trade once you entered?
Yeah, these here.
No, but lower.
Oh, these here. No, I love these. These are
So
very nice.
those are fine. Those are good. Okay, good.
Yeah,
Okay,
no,
good.
that hell yeah, they're perfect.
Yeah,
They
okay.
are three massive wick rejections to the downside there.
Yeah, I was going to say I was about to say they're perfect. So the top ones,
yeah,
still,
they're like wow.
yeah. So the top ones, you still have that on the downside, as well as some of the prior candles. Yes, there is some wick rejection
Yeah.
as well, but
Yeah,
the candle close is still higher each time,
Yeah,
True.
that's kind of like what I wanted to
very
get
true.
to as well.
right?
I think it was just the case that I was over 5% down. I was like 5.5% down at that point, and I was only risking a couple of $100 here anyway. It was like 80 to $100, so it wasn't a big trade. And then when I saw it come up to here, and it was the same time, I just sort of looked at it and I thought, I don't like this. I've made a fair bit back. I was like overall like $400. And I thought, you know what? Yeah, I'm just gonna take out. It got to the point where I was like, I'm happy with this. I'm comfortable with this, and yeah, I just decided to take out. I suppose hindsight, I could have gone to the higher time frame and thought to myself, right, okay, now that we've got the break and close above this consolidation here, where could we want to target? There's potential points of reversal here. There's areas of interest. There's also this high up here, which I was really interested in taking out. But it's we can all talk about hindsight trading. But I'd love to come on and say, guys, oh my God, look.
I'm
oh my God.
genius.
No, that's good. Like, dude, that's why we're asking. Like,
I'm a trading goat. I'd love to say that, but unfortunately not.
I'm a trading goat, but not the G.O.
Yeah, no, his goat is in like, bah.
Yeah.
just the one that runs around and like headbutts people the whole time.
Yeah.
Yeah, literally.
Yeah, what is going on here?
Honestly, I would, if I got to pick two like pets that I could have, it'd be a goat and a peacock. I would have.
Dude, yeah, fair. Why a
Like the
peacock?
goat,
Why a peacock?
because they just look cool
Oh,
and
fair.
they just
Okay, fair.
flaunt around with their
just
feathers.
literally
Just like,
peacocking.
yeah, they just look pretty and they just walk around and stuff. And then goats just do
noisy,
random stuff, and like the goat will be like on the roof or something. And be like,
That's such an
are you
Australian
doing?
way to describe a goat.
what are you doing?
I was about to say, LJ, you have so many critters to choose from in Australia, and you choose
Yeah.
goats
But if
and
I get
peacocks.
if I get the other ones, they'll kill each other. Obviously, right? So it
I
doesn't
mean-
really work.
I mean,
Does it?
fair. I mean,
You
a
trying to say
goat
you don't
that's
want a
sitting on your
kangaroo?
roof. Yeah, the goats that's sitting on your roof, whenever there's like, I don't know, like a predatory animal that comes up, the goat just like pile drives them from the roof. Head first.
I think a goat would probably survive a crocodile because they'd come up to them and do some like random flip. Right? They're so agile. They're just like, boom.
I just,
Right? Dude, they'll get away from a crocodile easily. Right?
I don't know, mate.
Do you know the
Crocs are
funniest thing
built
is?
different, mate. They've been around for millennia.
Yeah, I think the I don't know. The goat might survive.
No,
I
it
think the
wouldn't.
rest of my
What
farm
planet?
would die. I'd probably have some ducks. I like ducks. Ducks are
Yeah,
probably my
yeah.
favorite animal.
I would not have known. I
cool.
mean, duck race, little quacker on your table. How could we have
Fair.
possibly have known this?
Fair.
Hang on. He's got a little swimming.
Like I said, you've got a little quacker on your table.
Dude, he's gangster. Dude, he's
Quack.
fully gangster. He's
Gangster cowboy duck.
yeah.
Dude, I'll tell you what. Give it a year, and then LJ, you'll have to fly to my place. We got a lot of developments going on, but I said to my family, I was obviously living out in Hong Kong, very metropolitan, very city living, and it's made me miss my country life a little bit. And going out in the winter shooting, going out and just enjoying the countryside. Now we've got a massive development going on, which I can't divulge into until after May. I'm actually having to fly home early to assist this. However, I said to my dad, I was like, Dad, look, I'm going to go to a farm market and I'm going to buy myself a couple of cows. I'm going to sell off my sheep that I've got now and buy bigger, fatter ones that are going to be better for meat. I'm going to get a couple of ducks. And then do you know what my dad said to me? He goes, "That's a ridiculous idea. Don't be so stupid." I was like, "How is that a ridiculous idea?" He's like, "Because of this, that, and the other, we won't have the room." I was like, okay, yeah, fair. And so I forgot about it. I was like, "Oh, that's a real shame." Oh well, maybe I'll have to speak to my dairy farmer mates. Anyway, a couple of days later, my dad goes to me, "Will, I've decided I'm gonna buy goats." And I was like, Why? And he was like, we're gonna buy some goats and we're gonna have it in this particular paddock for this particular reason." And I was like, "Okay, how about alpacas?" And he goes, "No, that's a stupid idea." I was like, "What the fuck?"
Yeah,
like,
of course. Dude, alpacas are just ridiculous. Like, goats have skill. Like, have you seen some of these goats on a mountain? And you're like,
yeah, mate. In all fairness, yeah.
Okay, but who's gonna win a staring contest with an alpaca, mate? Nobody.
Fair.
They have
the
skill.
alpaca.
Yeah, have a staring
You can
contest with
walk
an
an
alpaca.
alpaca. So, imagine someone coming to the land and being able to walk an alpaca.
Rich, we're humans. We have guns. It's fine. A goat.
Dude, I said staring contest. Like he'll spit in your face. That's what alpacas
Yeah, I know,
They're
and
do.
then-
gonna shoot an
They're
alpaca.
not nice.
No, they'll charge you, don't they? Alpacas will still charge you.
Dude, goats are
Yeah.
nasty.
So
like,
who needs a guard dog at home if you've got an alpaca? Imagine, not only is he going to chase you around your yard, you won't get in, but he'll spit in your face as well.
I mean, that's
Dude,
fair.
ultimate
I mean,
guard dog.
that's definitely like that's a good, like, bit of a like disrespect that is like,
Yeah. Have you met Jim? Who's Jim? My alpaca.
yeah,
Go talk to my alpaca.
Yeah, you can't get any kind of recompense for that. They're just like, oh, my alpaca spat in your face, and you go to the police.
Oh,
and
mate,
like, well,
man, sorry. That's what alpacas
Yeah.
do.
So I grow up, dude. Like, having said that, though, goats are nasty, man. Goats are not like they look all.
I know
cute
they're
and
aggressive. Like,
They are. Like,
they're chill and funny, but they're also aggressive. And
So
I will
bad.
say, like you were saying, Rich, with the alpaca thing, have you seen the Australian that meme,
no.
that clip? I think I shared it with you guys.
You shared a few. I'm just not sure which one you're referring to right now because there's a few Australian memes. So you're gonna have to be a bit.
But
more
surely
specific.
you've seen the alpaca one. No?
Oh no, dude! I'm gonna have to go and search for that one.
Okay, you put it. Okay, all right. I'll try and find it then. Anyway, we can continue. Sorry, but this is a good video.
And so you're
so
gonna
I
have-
just had to. I'm sure some of you guys will know it. Primal Light will probably know it as well because we found out Primal Light is also from Sydney as well. So
Miko
And
saying
they're
he loves
cheaper than-
alpacas and they're cheaper than cheap. I love that. That's pretty good.
Yeah, dude, goats are. I haven't got much experience with goats, but they are pretty cool. Like, you can get like the little ones as well. They are quite cute. My nan. My dad grew up on a farm for generations, and my nan was actually dragged from one side to the other side of a field by a goat, and it ended up actually mangling her leg. And I know I shouldn't laugh, but yeah, it was, dude. That goat just absolutely mangled her. And it was a little goat as well. Like, they're nasty.
I had the same thing, but from 3 guard dogs on a friend's farm. Or it wasn't a friend's farm, it was the neighbor's farm on a big, like, 20-acre block. And I was like, I think I was 7 at the time, and then got mauled by each of them on my femur. And then since then, I was always like, dude, I hate dogs. I hate dogs.
maybe don't come to my land then.
That's the main reason I like cats. Now, obviously, I was young then. Obviously, now very different.
I was about to say,
But
cats
back
have
then,
cost
I
you a
was like-
fortune, mate.
I guess
A
both
dog,
have.
dude, a dog bit you once, but a cat cost you a fortune. So there's levels
That's
to this.
true.
I think I'd take the dog.
Right?
Some may have said that LJ's experience with cats was a catastrophe.
No, bro, you're better than that.
I don't think so.
That is fair though. No. I think that's fair as well. I think it's a large enough number.
Sample size.
Yeah, yeah.
Let's just put it like this: the cat was consistent. The dog was impulsive. The cat was consistent. That's all I'm saying.
Primal like dad jokes.
Unfortunately,
we've got them here as well, guys. The
you cannot escape
including
the
dad jokes.
Yeah, you cannot escape them.
What are we thinking about the market at the moment? I'm a little bit.
I was going to say. So we know what Will's been trading. What about you, Rich? Where
Not
are you
a single trade,
at
mate.
right now.
Nice.
I
None?
have not not a single trade today, mate. The moment I jumped off of stream, I had some admin stuff to do, and there's some stuff with the streaming platform that we were doing that I needed to go and work on as well. So, like I said the other day, ever since taking over as the live stream manager, my workload has gone from, I come on stream a little bit, I get to do some trades in the morning, and then I get off of stream, all gravy, and then I can continue all of that stuff has been kind of like condensed into like a 20-minute time zone in the morning where I can sit in front of the screen, have a proper look at what's going on, and then potentially look for trade. And then I'm like, okay, well, it doesn't look right now, I'll wait. And then while we're on stream, I'm like busy doing admin work at the back as well. And I'm like, there's a lot of planning stuff that I'm busy with. And then it's just like, didn't get a trade. Yeah. I just didn't. So I got a trade not yesterday, day before, on NAS, which was pretty good. No, yesterday. Yeah, I got a trade yesterday. It was a sell on NAS. I know. That was gold. Where the hell am I? Yeah, I got a sell on NAS yesterday. But that's about it. I have not had much opportunity. But look at me complaining. Yeah, we did the same thing yesterday.
Well, I mean, dude, you've been doing well since you opened up the new account, right?
Yeah, the new account has had a singular trade on it, and that singular trade is a 0.5% winner, and that was yesterday's trade. So it's not the end of the world. It's there, so it's okay. We can live with it.
What do you think of gold for a potential sell? I'm just watching gold potentially setting up for a nice little sell opportunity.
Maybe if it comes back.
I need a retracement first.
Yeah, I was going to say, I think what we had is probably the extent. So I'll show you guys this. All right, hang on. All right, so this is the difference when we came into Monday of positioning for gold, right? So we saw massive liquidations overall on the CFTC, right? Now that comes into the margin requirement increases. I mean, just like we saw with the fibers, plus losses from other major funds in markets in general. We've seen this liquidation across the board. I would say from where we are now, we're probably seeing most of the drawdown for the time being. Not to say we wouldn't go lower later on. However, from here, I'd probably see something of a higher tick up, potentially back to that 52.60 type area before potential returns. So right now, quite frankly, I wouldn't really want to long gold, wouldn't really want to short it overall. I think there's other assets that are much clearer, particularly with the currencies. Right, the currencies are very nicely structured. So, like I took this long through here on euro dollar, come up to the 200 moving average on the 15-minute. And we're pretty much playing that across the board. So both for the Aussie, we've had underlying support. Aussie has had a further kickover because of the commodity aspect. We've had the pound as well. We do have more upside, much more clearer. Dollar yen also, you can see we're starting to capitulate and move to the lower end. Gold is in a very weird prospect. I would say long gold overall. It's just from what point? All right, so if we look at some of these moving averages on the 15-minute, we've got the 50 moving average on the 15-minute. I've been looking at the 1 hour for some time. My base position would be about 51.50 by the 10-hour moving average overall to go long right now. I look to about... I mean, first point of call, you've got the 52.60 or so, and then beyond that, 53.27.
I mean,
what do we reckon? I mean, it's hard. We're very much in a kind of like I was talking to Dirk before. We're market right now is basically assuming we will have a sooner resolution,
shorter, resolution
rather than later, right? So markets are recovering somewhat. But
look,
yeah, do you want to trade with it, or do you want to wait for a headline and that to be inversed? You know?
Personally, I conform to the idea that even though we had on gold yesterday, we had a very lovely sell down, a sell off effectively yesterday. I'm not too sure that today is going to be the reversal. But that is only because I seem to feel like the response that we had is usually followed up by some like level of subduedness. You have the reaction, and everybody's like, okay, but hold on a second. We were impulsive now. Let's kind of like see what happens. I also put the 200 EMA up here as well, this red one. And we have come and kind of like just tested it with the 50 EMA being a little bit, was expanding and now it's contracting ever so slightly. But the upward move is so slow in response to the selling, the volatile sudden, I want to get rid of some of my gold assets and kind of have some, just have some liquidity available to myself because now there's a war. And then it's just like, okay, I understand there's going to be that sudden drop off, but then I feel like there should have been a little bit more steady of a increase afterwards, considering the fact that now everybody's like, oh, but we're a little bit risk off now, so let's get into something that is a little bit more, how can we put it, like safe haven, when gold is not really a safe haven asset. That's what I feel like was supposed to happen, but it didn't, or at least it's not happening in the way that I would have thought that it was going to happen, if that makes sense. I'm very on the sideline. I'm very interested in knowing what's going to happen, but very disinterested in trading it. Yesterday was very clear cut, very, very strong movements pushing lower. This made a lot of sense. There was a very clear structure. Today, not so much. Today has been, we're moving up, but it's very slow. Deeper pullbacks in relation to the movement. Not as concise as yesterday. But then again, it's like volume on the day versus volume on the next day. Volume yesterday was very, very nice. Volume today is just very slowed. And I kind of like wonder if that's just not like the wait. It's that waiting game. We're waiting for more escalation, or we're waiting for resolution. It's. I don't know if anything of what I just said now makes any sense.
No, it does. So basically, what I was saying with Dirk is basically we're waiting for the next port of call, like some kind of headline, some kind of escalation or de-escalation, both ways. Currently, we've had a bunch of important but slightly more minor headlines both ways.
Yeah.
But nothing that sets the meter one way or the other. Right now, Dirk and myself both believe this will be figured out. To be honest, it will be very, very unlikely that this kicks on. Right, beyond the expected time frame.
Yeah.
What do we bring up here? What is this?
So this was news that came out like 2.5 hours ago, saying Iran operatives made offer to discuss terms of ending war. Now, caveat, obviously we don't know particulars, but this could also just be completely fictitious. We don't know. But it's based on information like this, where there's like, they're going to make an offer potentially to discuss ending the war. That's possibly giving everybody pause. Like, hold on a second. Was that a bit of a rash reaction that I had yesterday, trying to, sell all of my assets? Well, not sell my assets, but like kind of be a little bit more risk off, that kind of like thing. I don't know. And I feel like the market sentiment is the same. People are just unsure where they want to kind of like put their eggs into. I don't know whether or not people are just reading a bit too much into stuff like this, or whether or not this is going to be the driving force.
Well, you got to think about the market participants, right? So if if you're trading day to day, very different. Now, if you've got a fund that has many billions of dollars, right? You're not trying to price in what's going to happen next week. You're trying to price in the tail risk of what could happen in 3 months, right?
Yeah, a little bit longer term.
Yeah, and that's basically what we're seeing. And now we've seen that push. Like we saw indiscriminate selling across the board yesterday, the day before. Monday open, we did have the gap, and we saw some of the gaps close on certain assets. Other assets rose higher and then fell
Yeah.
back. Others didn't make it there at all.
Yeah.
Now, that comes back to you trying to assess the forward future of what's going on. So right now, we have a very mixed picture. And a number of these funds have certain prerogatives, certain fiduciary responsibilities that they have to measure up to. So that's why we're seeing the activities that we do right now. But I don't believe this will continue. So, yeah.
Yeah. I guess time will tell, really.
It feels very much
interested.
like the, well, not very much, but somewhat like the Trump tariff situation, right? Where everyone's like, okay, Trump tariffs will create massive inflation. Inflation prints go up, producer input prices go up, consumer prices go up, across the board. That's it. We're done. Never mind. We didn't see it, did we?
I mean, we
waited for months and months
Yeah.
and months. And I also said, going all the way back to June, I was like, we're not going to see it. And everyone's like, yep, we will. Inflation will be higher. The Fed won't cut. Didn't see it. There's no
I mean, what
real...
we did see is short-term changes. We saw panic. We saw panic selling. We saw stock market taking dips, but then recovering effectively immediately. So the long-term effect of it was completely either invisible or just there was no long-term impact.
Exactly.
The thing is, what we're seeing right now with the war is the fact that there's very real stakes on the table, especially with, let's say, the idea of oil being a driving force behind commodity prices, being a driving force behind people's ability to earn, make a living, transport, all of that stuff. Like everything is basically linked to your ability to transport things. And I don't know if that will push certain rates to get adjusted. But I feel like the comparison is a little bit skewed versus the tariff impact versus the war impact. I think the war impact, although now we're not seeing a crazy amount across the currencies specifically, the gold sell-off is interesting. The tariff stuff I always felt like was more of like a bit of a game of chicken, you know? Is he gonna? Isn't he gonna? What's the impact gonna be? So I'm just as a participant in trading, but also as a sideline person, kind of like looking at this and going like, okay, I don't understand everything, but some of it makes sense. Let's see where this goes, where that goes. I'm conflicted because I would like to participate, but it's not doing what I would typically associate with like wartime experiences. Like gold is not doing what I thought it would. And then it's putting doubt in your mind. Like, okay, but what if this is one of those games of chicken again, as it was with the tariffs? So it's all very confusing stuff.
Yeah, so I think, like, obviously the situation here is Trump doesn't have quite the same influence as he has had with other pieces, like with the whole taco, Trump always chickens out type situation. So with this now, in part he does because the US is the biggest dog in the kennel, put it that way.
Yeah, that's a good analogy, mate. That's a good one.
Yeah, I was trying to find a way to put it. Yeah.
A lot of barking. Lot of barking.
Yeah, but I mean, the thing is, there's definitely risk on the table. The trouble is, the risk is too much across the board. It's almost the same way that when we had COVID, like eventually everyone sort of came together. Not even out of want or desire, like you have to, right? I think we'll have a somewhat similar picture here. Kind of have to. Even China eventually has to get pulled in on the same front as the US if we did want to do some long, elongated situation here. Which, obviously, if I can figure that out, they definitely can. And they're going to be like, okay, well, let's not waste all that money, political capital, hurt our social sector or feeling around people, whatever you want to say. They'll basically pick that up and they'll join the thing and try to end it, right? And so that's where the US basically gets force on China. China then comes back into the picture. US gets a double win. The other players in the Middle East get whatever they were looking for from the beginning of this altogether. And it still puts pressure on Russia and puts further pressure on players like India, whether they actually buy the oil in the back end or accelerate that after this. So that's what I mean. It's very complex. It's not just a straight up thing. It's very difficult. There's great deal of nuance. Like, 3, 4, 5, 6, 7, 8, 9, 10 different trails that all go out and coalesce. So
it was interesting. You were just looking at Euro USD, Rich. I'm just going to bring my screen up real quick because this is kind of what I want to see on Euro USD right now, especially after we had this this sort of price tried to move up, failed, put in a lower high, failed even further, breaking that structure. Now we're at this point here. If we can get a pullback and continuation, I think there's going to be a really nice opportunity for sells.
Yeah. The fact that on the hourly, I've just got the volume up as well now.
Yeah, I was going to say, if you look at the double wick rejection on the hourly as well, we closed that in 13 minutes.
Yeah. So if I just move all of this out of the way, and then you can maybe see the volume profile a little bit better. Yeah.
Just give me one sec, guys.
Yeah, no problem, mate. Yesterday we shot through this section just very quickly. Today, obviously, we had a point of interest over here. So this reaction over here seems as though we're kind of like just attempting to see whether or not there's any more orders kind of like sitting here. As you can see with it was a very, very sharp, quick move out of that area. So this, like on the hourly at least, we've got 11 minutes left and then this candle closes. Bar something really crazy happens, I don't expect us to either take this high or even close above the wick on the hourly right now. And then it gives me the idea of, okay, what if we've kind of like run out of steam here? Because we've attempted once, twice, 3 times now to try and push above this point, and it's kind of like halted. And you can see it on the lower time frame. You can see that stunted movement. Obviously, not nearly the same as what we had yesterday with like nice volumetric movement. So it kind of gives you the idea that being in this area where we had all of this gap effectively. So all of this here was moved very quickly through. So price coming back to it, kind of like breaking some areas, like over here, highs of yesterday's New York session, retesting that area, breaking through convincingly, but then kind of like falling short, not coming close to test this area up over here. I do feel as though there is a potential for us to maybe start pushing a little bit lower, bar we fail to break this. Because it's right in a small little area of interest with yesterday's or day before yesterday's lows of the day. We have a base area during the Tokyo session and then a nice, very strong volumetric push down. I would have loved to have seen it move up close to this area and then reject lower. But the way that it's rejecting here right now does make it feel like potentially there is a chance that we can try and push lower, maybe come and take this area over here where we seem to have the majority of the volume of the day as well as yesterday. That's at least what I'm like thinking, what I'm looking at. So I don't know if it'll happen immediately, even though this does look nice. An issue, though, is that we've basically made an equal low there and we have not broken that low yet, if that makes sense, on the 5. We still have this high over here. We've made a lower high, but we have not made a lower low, and we have not broken the previous low swing either. So I think it's a bit preemptive to go for a sell right now, in terms of what I'm seeing. Don't know if you agree, but I do like the idea of sells. I think you're muted, mate.
Yeah, yeah, I am. Yeah. EU's nice. I think GU's nicer, and it's a better opportunity.
Yeah, straight up. High,
Yeah.
new low, broke recent low here. Makes a lot more sense.
So I've got a pending limit on GU about 33,758.
Beautiful rejection.
Yeah.
Straight in this area of interest from the previous day on the volume, as well as a, let's say, an order block trying to push price lower. Yeah.
Yeah, it looks stunning. So just gonna wait and see what happens there. But I don't know if we're gonna. I don't know. Maybe if it continues lower, I may look at moving my limit a little bit lower. But
where are you looking to get into?
About 33,758.
758. So okay, so on this candle.
Yes.
So somewhere over there. Stops at the high. Looking for what? This area over here. So let's say, let me just hide that. Somewhere over here.
Yeah, if I can get lower, I can get lower.
Somewhere over there.
I'm gonna try and go for a 1 to 2. But I think it's left without me. Hello, are you there? Oh no, have I just died? Wait, no, has Rich just died?
Oh, there we go. Sorry, guys. I think I lost internet for a second.
I thought I had it. It went silent, and I was like, no one's talking.
No. I think
so
it was me. Yeah, I think it was me. Yeah, mate. I think it may have already started moving. I mean, you can put a small order in. Minimal risk.
What I'm thinking.
Try and get a 1-to-1 or like a 1 negative R. Maybe try and steal like $200, that kind of like thing.
Yeah, I'm looking around 33,626. If we can pull back to that area, which is the sort of the retest of the break of the consolidation,
like this,
which may be nice. Yeah.
And then what have your stop loss still at the same area or just the previous swing?
Probably previous swing. Discretion would be previous swing. Hard stop would be previous. The initial.
The highs.
The highs.
It is almost 3 o'clock GMT plus 2, and we do have news. We have non-farm employment change quarter past. So we have about 27 minutes before high impact news. Maybe it's a good idea to either not enter, or if you're going to enter, a very small limit.
Yeah, if this leaves me now, I won't be entering, just because I don't think I'll be able to hit where I want it to hit within the time scale of the news coming out. So probably leave the order open for another 5 minutes, and then if it doesn't tap in, which I know it's not going to, I'll look at closing. But it's just left me. However, look, I've had my trades for the day, so even if I missed this entry, that's okay. But at least I have banked profits today, but it would be a shame if this leaves me now.
Dude, look how nice. Drop.
I know, textbook.
Base. Drop. 5 minute though. 15 minute non-existent as yet. Not a drop base drop yet. I mean, imagine if you had gotten in like right there. This would have been a 1 to 2 hour trade, almost. So, yeah, that would have been lovely. Even though the stop was slightly something like that, you could have actually aimed for slightly less than that swing point, which is in line here with this base area. Them's the way it sometimes goes, mate.
We have had the break on Euro, so if we can close, it's a nice opportunity.
Yeah, had the low break there, lower high, another lower high. Yeah, that's pretty good.
Yeah,
that's pretty good.
Thing is, though, it's going to be half an hour before news, which then disarms my whole trading strategy. So.
Yeah, no, agreed. And unless you get yourself an account that is allowed to trade through news, and then you just go ham. Something to think about.
Maybe.
I was actually thinking about that a little while ago. I was thinking about the idea of getting myself an account to play around with in news only. Well, not in news only, but like not have the limitations of news, and just say, you know what, if it breaks, so what, and then just go with it.
Something that you're comfortable trading 2 minutes before, 2 minutes after news, or thing.
Yeah, just kind of like you're allowed to hold through news. Let's do that.
Yeah.
Yeah, so news itself, the non-farm adapted, or the ADP non-farm employment change, I think it's going to have a lot less impact today than what it normally would have. I don't know if people rightly care today. What do you think? Wish LJ was here for this.
I was gonna say this is more of an LJ thing. Honestly, I think there's bigger things going on than the NFP release at the moment. So I think it's going to be a little less volatile than it usually so.
So
12:55. Yeah, no.
Yeah, so that's why I said GMT plus 2. So 15:15 GMT plus 2, which makes it 1:15 GMT.
It's not from the UK.
Yeah, which is not 2 hours away. It's in 20 minutes ish.
Yeah.
So non-farm picking up. That's why I said GMT +2. Yeah, I'm in South Africa, so I'm on South African Standard Time, which is GMT +2.
Yes. Oh man, you looking nice. Although it's starting to wick, so. GU. Oh, bro, look at GU. It's
tanking.
beautiful. It is absolutely beautiful.
Beautiful. You see, I stepped away from GU and EU for a while because it was just not conforming to the way that my strategy normally would have. And then I completely focused on NASDAQ, which has worked fine for a while. But now EU and GU is starting to come back to the way that I used to trade. It's forming the same kind of like flow that I used to love about GU and EU. So it gives me FOMO for EU and GU. When I look at it, I'm like, man, let me go and dig out my old EU GU strategy and see whether or not it holds water again. Because for like the past year almost, it just did not do the way that I expected it to to kind of like go.
No, that makes sense. Yeah, that's fair.
G Block Val version is saying, in my dashboard, Forex Factory is saying news is 3 p.m. GMT and on TradingView. So are you sure? Because we have the same Forex Factory calendar for today.
Let me have it.
There we go. Sorry, there it is. And Forex Factory is always in your regular time.
So this is saying 9. Yeah, this is saying 9:15 my time, which is 1:15 p.m. And as you guys can see, it is 9:01 right now.
Yeah.
So yeah, it's about 14.
So that's why I'm saying, G Block, make sure that you go and confirm that your time is exactly as it should be. Yeah, exactly what Matthew was saying. Yeah, no, fair. My bad. At 3 and 13:15. So yeah, 1:15, not 3. It would definitely not be 3 o'clock your time. It would be, and in this case, ISM for my trading is 5 p.m. in the afternoon. So that would then be 3 p.m. GMT. So London time or whatever, it's 3 p.m. But the non-farm employment change is in 15 minutes. So for everybody else, if you're trading the high stakes program, do remember the 2 minute before, 2 minute after rule. We do have a question here from Kendrick saying, what's your objective when you're going to take trade? Well, I am not going to take the trade on EU or on GU because we have high impact news coming out in 15 minutes. I'm not sure about Will.
No, I'm staying away now. I was going to take a GU trade, and it is now coming back up to my entry, but due to the fact that we've got news now in literally less than 15 minutes, I'm going to be staying out.
Yeah, I've never done well with news trading. I don't think that I don't think I have to trade news, but I would love to, for, as they say, for giggles, for shits and giggles, get account to just kind of like see how it can go. But I don't want to fall into the same hand. I don't want to fall into the trap of like gambling my way through an account and then that being a successful account, and then I feel to myself like, oh, I should be gambling, because it's netting results. I don't want to do that.
Yeah, exactly.
Fair idea. Talk about news.
Good day,
Yeah.
mate.
Good day, mate.
News. G'day,
News.
mate. G'day.
Putting out a shrimp on the barbie.
Shrimp on the Barbie, mate. Shrimp on the Barbie.
Yeah, Scribbles, this is exactly it. This is like, that's what I'm saying. I'm FOMOing with the idea of trading news
Yeah, exactly.
because I see movements, but then at the same time, I don't want to create these things, bad habits. So I'm really
Yeah.
trying to not fall for that like outsider's perspective. You know, you're standing outside the store, you're looking into the store, everybody's having fun. Let's go inside, let's do the fun stuff that they're doing. I don't want to.
Yeah. I've considered it, man, but like you've just pointed out, you know, it's building bad habits, and I just didn't want to take that risk. Also, can I just say, LJ, you literally look like you are one mullet away from being an Australian stereotype.
You get the downdraft back there.
Yeah.
I know. Look, I got the stash. Got the stash
stash.
today. That's good.
As the
But yeah, look, I heard you guys were talking about news before.
Yes.
Look, today it's kind of hard to see how we will take that because there's a lot of variables. Even when it does come out, whatever upside, downside we get, it's contingent on the current situation. And it's like a multiple effect on that. Now, obviously, I think today it will have more effect, rather, because we have sort of calmed down. We're generally waiting for the next large impulse from the current situation, whether it be another missile strike or Trump tweeting or something else or whatever. So to be honest with this, I would say stay out. In normal conditions, yes, with the numbers we're looking at, I do expect them to be more positive for the US, right? I don't know if that will translate into a sustained dollar move, however. I think that may end up being a dip, and then we get risk on moves and a reverse of the trades that we have had. So therefore, dollar unwind, even though it is dollar positive news, at least
Overall,
until we get the next set, which is going to be much more important, which is the ISM and the PMI coming out later.
Yeah. Final services PMI, which is it's a yellow folder. Has it always been a yellow folder? Oh, it's the final one. It's the revision, basically.
Yeah, it depends which component we're looking at. But yeah, either way, that will be probably more impactful than the actual ADP itself.
Yeah, I don't know about ADP. Like in the past, it has always felt like ADP, the non-farm employment change, was like this big market mover, or at least
for a period.
For a period, and then it has not
Before
been the
that,
same.
it was
nothing.
Yeah, well, yeah, typically, like it doesn't have a high correlation with the actual NFP.
Yeah.
Right. So in the past, it's sort of something as like an indicator, and it goes on to affect the estimates for the NFP later.
Yeah.
But people kind of put it to the side. Now it's come more into vogue per se, because we had the government shutdowns and we didn't have the public payroll numbers.
Yeah.
Right. So
and then
that's
this one
why
became the substitute. Yeah.
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 And so even though now we don't have the government shutdown, we have a stronger trend of the ADP versus the non-farm payrolls, which right now for the past number of months have been distorted. So the same deal, people definitely still look at them, and there are different calculations, and it depends if you want to get really critical as far as like AI disruption and all these kind of things. So I think probably over the next 6 months to 12 months, it will become more important, because it's probably going to show the first signs of some of that true AI disruption, if we get that. But for the near term, majority of hiring has been through government and public sectors, and then like healthcare, that kind of stuff. So the NFP, and for the longest time, forever, has always been a major standpoint overall.
I think you're 100% correct that it was that substitute for lack of information due to the government shutdown, and the reliance on information to make decisions was kind of like at an all-time high. So normally something that did not really garner much response from the market had much higher impact due to the lack of information that we were receiving. So everybody was just kind of like grasping and saying, okay, well, this is a forerunner information. This is going kind of like alluding to this information over here. Let's dissect this information and then react upon it, because everybody was just, wishing for information. But now kind of like, since that has died down, or at least the government shutdown and that kind of like stuff, not as impactful anymore, this new information. But I think it still warrants a reaction to either say, you know what, I'm either going to wait to see if this is actually still a red folder, or I'm just going to not participate at all. Kind of like step back.
Yeah, so I think we'll have some reaction, but just not anything major. Like I said, the ISM and the PMIs later will be more impactful. Even then, like, they will have a reduced factor, because now we have a new situation which going forward would impact where they come out, right?
Yes.
And overall, like, part of the other reason that ADP is less important, obviously the NFP has more of a government component. So if they're hiring, that means the government is expanding. They're doing that because they're getting more money, higher tax base, which basically means GDP up. They can afford to do that, right? So that's why we primarily focus on the NFP in the most simplest terms that I can give to you guys. Yeah, right now it's a point of taking everything with a grain of salt, because you don't know how the market itself is going to react. Are they going to care about the data, like we were talking about earlier yesterday and Monday, that we've had the reaction? We know what is going on. Yes, there's going to be ongoing situation, but we also have quite a swath of data coming through from the US and the like throughout the week, which might be the major mover. Now, I think if we have any of these headlines, I think the market will move on that, because right now we're starting to price in that it will be calm and this will be resolved. So I think right now, given the current touch points, we will have a higher reaction point to whatever data is coming out. If we get some other headlines from, say, Trump, or general geopolitical headlines from Israel, Iran, UAE, whoever it comes from, later on tonight, that will probably dwarf whatever key data points, fundamental data points we have coming out. overall. And so the point is basically to be like happy to pull the trigger early. It's the same as the Eurodollar trade last night that we were talking about, right? I had 26, 116.26 as the first take profit point, and then 116.60, right? Now, obviously, last night I was also trying to go to bed early.
Yep.
So I think I ended up taking out
12
at
hours.
yeah. Where did I jump out at? Give me a sec.
Yeah, you got in lower than me. I got whipped out and then it ran off. I was like, brilliant.
On EU.
Yeah.
Yeah, so once it started, I think we hit the peak of 116.15.
I think you were in somewhere 115,870-ish, somewhere around there. And then I remember you said that you would be willing
Yeah,
to pull your stop loss down.
I was at 851. That's where I entered. So I was looking at
51.
first take profit, or the primary take profit, I should say, was at basically 25. And then potentially, if we got a further run, we'd go up to about 60 to 64 ish. Right?
Yeah, I removed the drawings this morning, but you had you were aiming for the Tokyo lows. I remember on EU.
Yeah. So yeah, and I had the two take profit points, which we've ended up having that 26 earlier today as the peak level, that kind of stuff.
Yeah.
So last night again, when I saw that coming down, and we did have the run up, but it just wasn't kicking. I jumped out at that at 116.04. Right, so still a good trade. It was basically a 1.8 to 1. It was also primarily because I wanted to go to sleep.
I mean, fair to want to sleep, mate. Fair.
Yeah, but then the point is we then went down to 115.30. So if I had the kind of consideration that we might have further push through whilst I went to bed or through New York, I would have held it. But looking at the structure, we didn't have that. So the point is to be willing to jump out of some of these trades very quickly if you have to.
ADP non-farm employment change came out 63 out of a expected 50 from a previous 11K, and it had diddly squat.
Zero impact
reaction.
There we go.
What? Well, a little bit there, like the candle after, but the actual. This is on the 1 minute chart, by the way. So on the 1 minute, it did diddly squat. So
yeah, it's still nothing. Yeah.
Yeah. So it goes back to what you were saying with you would have thought that it might have had a reaction given how things are going. However, given the larger picture with all of the extra stuff that's going on, you did not expect it to have much of a reaction at all. ISM, PMI is definitely being the little bit more probabilistic, mover out of the two. So once again, even though it's a red folder news and you have limitations on the high stakes accounts to trade this in terms of the 2 minute rule before and after the news, this is kind of like where I feel like the revision needs to be done on, let's say, Forex Factory site, not on the Fiverr site. I mean, like Forex Factory site to kind of like, if they have enough data to kind of like see whether or not the volatility increases or decreases during certain time frames, they can be like, okay, well, this is now no longer really the expected market mover that it used to be for X amount of time, and then kind of like revise. Maybe make it an orange folder instead of a red folder, you know?
But it can be. Like if we got a negative ADP, right? Or like a much more positive ADP, then we might have had a move.
But that's like what I'm saying. Like, isn't that then? Doesn't that then become an orange folder? Because it could move, but there's some caveats. There's like if it's much higher than a percentage or
I
whatever.
see what you're
like,
saying. Yeah,
yeah.
ADP in general should probably be more orange, to be honest. Like
Yeah.
in general, like there's probably like 4 in 36 months. That's really that important, right? So on that front, yes, I can see that. It used to be like pre-COVID. Since COVID, definitely not relative.
Anymore,
To
yeah.
be honest, it's not really indicative. We've seen positive ADP, we've seen negative NFP, or vice versa, where we've had negative 50k ADP. Everyone expects NFP to be down, and then we get 180, 200k. So on that front, I do agree. ADP is probably not that relevant, and it comes down to that how they calculate the admissions. You could also say that though about the NFP with the revisions that we've had.
Yeah,
each year.
I was about to say probably not NFP, but the revision itself. Yeah.
Yeah. So, and then the question is, at what point do they get people come together? Okay, this is rubbish. Let's reconvene. Think about how we calculate the numbers, and then they get to a proper number. And now all of a sudden, it's important. But yes, ADP I would say is probably more orange rather than red folder. Normally, we don't move more than 5 pips
Yeah.
on euro dollar. Like it's very rare. The only times we've moved more than that was when we had the government shutdown, so there's no NFP altogether. So hence, that's the only number we have to go off.
We had a nice 7 pip movement during the whole 5 minutes of news.
Beautiful.
Beautiful. Pong asking, when will there be a giveaway? There will be a giveaway on the 11th of March. So next week, Wednesday.
I was going to say, yeah, that's literally next week.
Yeah, so literally 7 days from now, next week, Wednesday, during or just after LJ's section and just before Sol's section. Where'd LJ go?
You had to go take a call.
Ah,
Either I
right.
just got bored of our conversation, thought, I'm out.
Yeah, probably. And anyway, so yes, we are celebrating 100,000 subscribers here with the Fivers. So it is a way for us as the Fivers to give back to you, our community, in a fair manner that is completely based on chance and randomness. So on the day, on Wednesday, next week, you can join us, and then there will be a link for you to follow. That link is going to be your registration into the competition, and it's this one's going to be a little bit different than normal. This one is going to be a YouTube exclusive. You will only be able to participate via YouTube. So you can't go and participate anywhere else, only via YouTube. So you have to be here on the day. We also have some nice, let me just kind of like bring it up. If you go to the Fivers website and you click on this 10-year, this very beautiful little 10 over here, 10 years of funding you, and you click on that and you scroll down a little bit, you'll see a an advent calendar of sorts. And on this advent calendar, every month there's going to be something. Obviously, July and August and through the rest of the year, we still need to add them. But there's
Do we
going
get
to be
chocolate?
something. Say again.
Do we get chocolate?
LJ, you are getting chocolate, mate.
I
You.
hope so.
All the
hope
way
so.
down under. Yeah. Dude, you're actually joking now about the whole chocolate thing, but like I saw an advent calendar like yesterday when I went to town, and it was a Christmas one, and I was like, it's been a while, hasn't it?
Does that count as late or early?
Yeah. Do you think I'm joking? Like, dude, I go for some chocolate.
Give the man some chocolate.
So
Damn.
LJ, I'll send you some chocolate and some biltong.
Dude, how
about
else
that?
am I going to feed the crocodiles to keep them away from me? Right? I gotta-
Biltong. You can do that with biltong, mate.
chocolate. Mm.
And plus, you can anyway. Let me not go into that field whatsoever. Anyway, back to the advert, the advertisement that I'm doing right now. So every month we are going to have some sort of giveaway within the live stream. This month we have the performance coach release, and along with this, we also have the 100K giveaway. So that's the two things that you're getting this month: is the performance coach course, which is Richard Wells, who will join us again tomorrow. During LJ's section. That in of itself, I think, is worth every second of going and registering to it. You guys will get a email with a link. Register from there. Right now, they're still busy working on getting all of this stuff uploaded and in place and all nice looking. But I am giving you advance warning that once it goes live, you will all receive an email. I will also have us drop a link in the description box as well as the chat box long in advance for you guys to go and register for that. And then, yeah, those are the two giveaways pretty much that we're doing. This is also free of charge as well. Like, you don't have to pay to participate in the performance coach course. All you need to do is
you
go through
guys
the Fivers.
have a Fivers account, I believe.
I was going to say, yeah, as long as you're part of the Fivers, of course.
Yeah.
Well, we will leave that information to Richard Wells to confirm in its entirety. But
Yeah, I think there's a portion you can definitely join in with if you're not quite part of the Fivers team.
Over
Like,
the
you have
finish
a
line.
double account. But to get the full degree, I think you need a Fivers account purchase. I think we went over that yesterday, Rich. Like, I'm being hesitant here because I'm pretty sure I'm right, but you can now maybe kind of like
no, mate. Like I'm not gonna try and say no, you're right, I'm right. That kind of like thing. I'm just gonna say okay, I might be misinformed or I may be misunderstanding. Anyway,
I think that's correct. But regardless, dude, you guys need to jump onto Rich's course. Definitely, absolutely amazing, 100%. Dude. This guy is beautiful. He has put in so much work, so much effort as well the whole way through. So, any guys, dude, I know each of us are going to be going through it regardless. Like, I've been trading 13 years. Like, we've all been trading for ages, and we're still going to take that up. So whether you're a newer trader, you're just beginning and you've just started here, or you've got a bit of experience, you've had a couple of payouts, that kind of stuff, maybe a year, 2 years, 3 years, 4 years, 5 years in, or maybe 10 years. Either way, jump in, take advantage of that amazing value. This guy is brilliant. So definitely jump in.
I 100% agree. I am full-heartedly going to use that. Sorry, Gitterbro saying my Forex factory does not have red flag news. It says Triumphs is speaking. Well, this is today's Forex factory calendar date today, so the 4th of March. It's It's got
They
red
may have
folder information.
filtered red news out by mistake.
Oh, yes. So what you can do is you can click on this filter button over here, and you can go and ensure that these ones are selected for all of the currency pairs, and then you just say apply filter, and it will give you everything. So just go and make sure.
Yeah.
However, I don't see Trump speaking today. Let's look at
Maybe
tomorrow
refresh the
morning. No, I've already done
I-
that, mate. Like if
I
you
was
do
gonna
this,
say,
refresh
so-
this.
Get it, bro.
I think
Oh.
the main thing.
Not talking to me, talking to Get Bro.
I was just going to say, so I think the main thing, as far as you guys with accounts that can't trade during news, definitely go to the Discord. It will be posted each day with the events that are blacklisted, right? So it will be in the high impact news section on the Discord.
Yeah.
Those are the events you can't trade if you're on like a high stakes or whatever. 2 minutes before, 2 minutes after. Now, important thing though is not just to rely on that as far as your own personal trading. Sometimes other events do pop up.
Yeah.
And it is good to look at Forex Factory and not just those guys. Look elsewhere for who actually aggregates certain news events. Because you might miss a bunch of stuff. So I think we've talked about in the past as well with Financial Juice, right? For you guys for live updates in real time, financialjuice.com. Don't have to pay anything. There is subscription services plus like a Squawk like voice thing you can hear, but you don't have to pay for it. So that is one of your best platforms to actually get updates on real-time news right there. Now, as far as the major red, orange folder news, that kind of stuff, just cross-check with multiple websites because sometimes they are missing.
Yeah.
That's all I'll say.
FOMO trades, FOMO futures. I'm not going to bring up your first comment.
I looked at it and I was like, what does that even mean?
Just know that I giggled quite a bit when I read your comment, mate. But this one I can answer. Why do you have the black candle outline? Is there a reason? So which candle are you referring to? Did you read the top comment, LJ?
Yeah.
The one just
I think
above.
it's the yeah, I did. Yeah.
It's
I think
pretty
it's
good.
the blue one.
This one.
Yeah.
So visually, I just like the black outlines. So I can show you what it looks like. Where's candles? There we go. Symbols. If I had the borders the same color, the wicks kind of get lost to me. So I like the black outline.
Yeah, I think a black outline helps the color pop anyway. I think it stands out quite nicely.
To be honest, I do like your color set. To be honest,
Yeah, it
It's
is.
pretty,
It
isn't
is
it?
like in the teal. Whatever you want to call it.
I don't know
Aqua.
if you've noticed. But it's kind of like a favorite color of mine.
You
So,
obsessed?
Dude, no, I'm not obsessed. What are you talking
Huh?
about? No.
Never.
Yeah.
Oh, this
Okay.
one. Is this what you're referring to, FOMO futures? Ah, the bottom support, when you marked that candle, I was just wondering why or how you chose that support. Oh, okay. That makes a lot of sense. All right, I'll quickly run through that one. If I go over to the hourly as an example, and I just remove this, I just want to let's just clear up some of this space, and if you look at the hourly, there we go. We had this whole area of consolidation over here during this morning section. Just on the hourly, it seemed a little bit slow after a massive, sell-off. So if I then go down to the 30-minute, you'll see that this section over here was the last attempt for price to try and push lower before we broke these highs over here with this movement. So if I go down to the 15, you'll see it a little bit more clearly. Let's remove those first. If you go down to the 15-minute, you'll see it a little bit more clearly. Once again, this was the low of this downward move. Then we started to try and push higher. There was one attempt to try and push price lower. We started pushing up, another attempt to try and push price lower. And then eventually we broke the highs over here. Okay, but if I go down to the 5-minute, you'll see that we had a reaction off of that last attempt, pretty much. So what I could have done is I could have taken the very last candle, the entirety of the last candle where price tried to push lower. So this whole movement here, before it started pushing up. Now what I had earlier is I had this area over here marked up, basically. So these two full candles over here before price actually broke this high over here with this movement. So once it had already reacted off of that and started pushing up, I removed this one. And then the next logical one was this area. Then we had this reaction over here off of that zone, pushing price higher, breaking this high as well. So what I then do is I just look for the last time price fully tested the zone. And there wasn't anything else. So I have to pull it forward to say, okay, this is, if price were to come back down, this is probably the first area for it to test before it potentially moves back down to an area like down here or an area like this one that I had previously. But what makes this one different is that it was a much deeper test. This was a much deeper test. So as price comes back down to it, it does react. Now, I'm going to be honest with you, when it does react, I go back to the left, and if it does react like it had over here, I do go back left to see what it did react off of, if I have a nice strong reaction like this. And that's usually when I go back and say, oh, okay, so this reaction that we had here was the initial, we're going to push price higher, but then this reaction here was kind of like the subdued minimalistic test. And this is the more convincing, okay, we're definitely sure we want to push up from here. That's basically what this means. So I hope that makes sense to you, FOMO features.
So is that kind of what you're saying? Like a break of market structure, but on like a nearer term time frame, basically.
Yes.
Like you're seeing something new develop on that recent relative structure.
Yes. Yeah. And I always go back and say I call it established zones. You can call it whatever you want to call it. I just call it established zones because to me, price has established that it doesn't want to push lower from this point. It has established that it wants to push up higher from this point. And I can only see that once there has been a reaction. In this case, we pushed higher, we broke a recent high, we came back down, we tested off of it, and then we pushed volumetrically off of it. My expectation is, in future, if price does come back down to this area, that it's going to have either a similar reaction or it's going to garner a bit of a different response, in the sense that here we had a bit of a back and forth on that candle, and then, because you guys know I like talking about it like as an arm wrestle. During this session or section, there was an arm wrestle, and then eventually the bulls completely overwhelmed the bears, pushing price higher. When price came back down to it over here, same reaction. The bears are just tired. You know, that next round of arm wrestling, they're tired. Price pushes up. But now it's been a while. It's been an actual while before price has come back down to it. And we established quite a solid attempt to push price lower there. A strong reaction. So what I would then do is I would then normally go and mark up the last attempt that price made to try and push higher and mark it as well. But this is still in play because we already had a singular reaction previously, and now we're getting another reaction, hopefully. So that's
So
kind of
who
like
is
how
wrestling who? I don't get it. Who is wrestling who?
So on the one side,
wanna
you
wrestle?
have the bears, and on the other side, you have the bulls. And the bulls and bears are locked in eternal conflict. Eternal. And it's a constant back and forth, back and forth.
We need the UFC for traders, right? Like a trader
Dude, they
UFC.
did actually do a traders boxing match. I'm pretty sure. I hear something.
Can I just say that I will refuse to go against Will?
Oh, come on. Rich,
What do you
dude,
mean?
you've been to 100, 110 now, aren't you? Right?
Yeah,
Wasn't it
I just
that?
refuse. I just refuse because...
You're already there. You already made it, didn't you? You
Yeah,
already
yeah.
won? No?
I've made it. I have good enough arms and stuff like that, but
You're in
like
form.
he's got hip flexors, mate. That's what Will's got. Will's got hip flexors. You know, like
I think you've gone mute, Rich.
that's unfortunate.
I've gone mute. I can't hear
I was
anyone.
gonna say LJ. I think it may be you because I hear
Yeah,
him fine.
I think it's you, mate. Like,
I don't think
Anyway.
there's anyone muted.
Hang on.
yeah,
Because LJ, I can hear you. I don't know. I'm talking to you. You probably can't hear me. I was gonna say I can hear LJ, but I don't think he can hear us.
I think
I
we're all
didn't
mute.
actually read this. I didn't actually read this. FOMO feature saying I gotcha. So basically, you mark that out because you notice a change in delivery and notice that it stopped making highs or lows in lower lows, and now start making higher and higher lows. So generally, it's a reactive point. Just as it reacts off of it, I want to see if it reacts again when it does come back down to it. It's like bulls seducing bears.
I like it.
Okay. If you guys want to
Oh, I
bring
can
in
hear
that
you guys
context.
again.
Oh,
I'm
is
back.
it because
God
is it
damn.
because your
I think
headphones
my
was
headphones.
like-
Yeah, I think they died. I was like,
Oh, fair.
my bad. My bad.
You
I was like,
just watching Richard pivot.
either way.
Samir, welcome.
What's up, Samir?
Hello, hello
Yo,
guys.
How are you
Samir.
doing, Samir?
I'm on the screen.
Samir, you look good.
I'm on the screen.
I'm on the
I was
screen.
seeing the
I am
tabs here.
here. Nice.
He's sitting
Hey,
there
guys.
shaking his
How
nose.
are you
Dude, we're
all?
here. Welcome. Welcome. Welcome.
Welcome.
Thank
Samir.
you.
Have you guys been?
Awesome, man. How about you? You guys?
All gravy, baby. All gravy.
Loving the activity right now, I must say. It's been good. Very up.
That's
Very
amazing.
Down, very up. Very down. Perfect. So,
It's whether or not you actually capitalized on any of the movements.
I'll be
Yeah.
trading NYSE today, so let's see what we get. For you guys, was you involved in any kind of trade today?
Sadness.
I don't know.
Okay, Rich, nothing, and Will.
Will, do you want to show your trades, mate?
Yeah, go for it.
Do it.
Bring up my screen.
I was going to say,
So-
before you run through that, Will, I will have to say
Yeah.
bye. My headphones are dying. It keeps dropping out, guys. So
Yeah,
I will
no
see you guys tomorrow. Ciao bien. Adios. Tomorrow. See you guys then. Ciao for now.
Take care, LJ.
Oil.
Cheers,
Bye-bye.
cheers,
Bye-bye.
LJ. Have a good one, mate.
Dag nou.
Tot
So I was
wederziens.
looking at. Huh?
Tot wederziens.
So I was looking at GU as a sell up in this area here, but then news came out, so wasn't well, news didn't come out here, but news was coming out, so wasn't interested in this anymore. Plus the way the candle moved up, that 2-candle push up, that real bullish move, I was like, no, dim dioch, not interested in that. EU, as you can see, not a chance, not interested in that, just pure consolidation. Gold was really nice. I didn't take this due to the fact I was in NAS and US 30, but this moved perfectly due to the fact that we had this nice bullish move up. We had
Will,
Asia. Go on.
sorry, Will. I need to jump out quickly. Just want to say goodbye to everybody. See everybody
Yes,
tomorrow. Yeah, I've got a quick meeting. See everybody
yeah,
tomorrow.
no
Have
worries.
a good day. If you haven't already, like, subscribe, all of that jazzy stuff. Next week, the 11th giveaway. Join us for that. All right, guys. Cheers. Love you all. Bye.
Nice one.
Take care.
Peace.
All right,
Bye bye.
Rich, take care.
So as I was saying, we had this consolidation, breaking close above, really nice. Pull back, three wick rejection right in this sort of base area here. Turns out it wouldn't be a base according to Richard Butler. However, it was a really nice sort of base area in my eyes. And then I would have been targeting just above here it would have been on the highs for a 1 to 1.46 R. Now that hit a perfect TP, which was nice, but again, wasn't in it, so it was a forward tested trade. As well, guys, I actually placed this trade on this morning's stream. Very much like NASDAQ, so this I actually did take. This was a beautiful trade, absolute textbook trade. This consolidation, sweep these lows, so continuation up, breaking and closing above, pull back into this nice imbalance area. Plus, we had a fib retracement as well. 3 wick rejection, continuation up, pull back, further rejection. I was in this and I did endure the drawdown, but it was okay. Continuation higher, break and close above, and then oh no, this is US 30. Okay, so there we go. And then I ended up closing, and then we ended up taking out the Asia highs. So all in all, across the board, I think this was about $250, something close to that. I took out
Nice.
$470, and then NASDAQ was, again, even more textbook. This was beautiful, but I was only risking like $80, and I took out about just over 200. So really, really nice risk reward. Again, we got this low, we got this high, we got a higher low, then we've got this further higher high breaking above all this structure here, consolidation, and then a pullback, and then it sort of consolidated a little bit. But we on the 1 minute we did start forming nice structure. On the higher time frame we were a little bit sort of bearish. On the 5 minute, 15 minute, we were looking nice. The 1 minute, I know I don't take 1 minute entries, but I did use it this time as a confluence. And then we had this 3 wick rejection, as well as a bullish, Fibonacci retracement, and then again a full 2R risk reward ratio.
Nice. You've
So yeah,
been
That's nice. I
nicely
think it,
busy. Go ahead.
yeah, it didn't went too deep in drawdown. I can see one candle just shot up, and I think in 2 candles there I can see really good move, amazing. Yeah,
yeah, it's really nice. Like LJ mentioned, I should have held to the Asia highs. It would have given me 6R, so it would have given me around 3%, or not 3%, but it would have given me a 3R trade. Because, like I said, I was risking $100 on this, and I got 2 to 1. So it was nice, and I could have held it. I probably should have held it, but I was happy with the risk to reward ratio of 1 to 2.
What is your TP placement rule? How do you define that?
Low hanging fruit, I call it. So the nearest available highs, or a 1 to 2 risk to reward ratio.
How do you
The
decide
only
which
time
of the two?
whichever one's lower, if I'm honest.
Okay, fair. That's good.
So my low hanging fruit is there because it is literally low hanging fruit. And I actually back in the LLTF days, I made a short on YouTube of me going on my land, and I went to this apple tree, and I literally pulled off this literal lowest hanging apple, and popped off super easily. And I literally said, guys, it is literally this easy as taking this apple, opposed to trying getting the apple at the top of the tree. It is about getting the lowest hanging fruit. It's the easiest probable move. So to me, the lowest hanging fruit is the lowest probable move that I can get my profit out. However, if the highs are pretty high up, they're at a pretty distance, then I'll usually look to see if I can get a 1-to-2 risk to reward ratio.
I see. I see. You mentioned your land. You're talking about figuratively, I suppose.
No, literally.
Good for you. So, the yeah, I understand that. I have it's a very common, uh, very wise and commonly practiced idea. You go for the very next level, right? The next one, the very next one. I call that FTA, first trouble area, but it's basically the same thing. Low hanging fruits. The first thing
Yeah.
that you will see, that you will come against when you're going price going in your direction. That's where you want to be loading it off, because that's the first chance price will likely have for a possible reversal or a retreat, a retracement into where you entered. Makes a lot of sense.
Yeah, I think a lot of people like to dress things up and be like, oh, I want this strategy, I like that strategy. They're all the very similar strategy, just dressed differently. Like my low hanging fruit is something that I like to identify it as, but like you've just given your terminology for it. So exact same idea though. The ideology behind it is the exact same concept. It's just worded very differently.
Mm, I like that. And I think it makes a lot of sense, right? How many times have we seen price go, make the move, make the reversal or the breakout? But it doesn't goes very close to the target, but something happens in between, the sentiment changes and it comes back down. And in
Yeah.
retrospect, you would say, actually, that was the last one that I should have gotten. The first one, the second one, they were nicely hit. Why didn't I take profit there? Why didn't I close my position there? That's the whole thing about it. It's the first thing, the highest probability area that's going to be hit after getting into the trade.
Yeah, literally exactly that. Right, guys, I'm gonna have to love you and leave you. So I shall speak to you guys tomorrow. I shall leave you in the very capable hands of these two handsome devils down here. So, guys, thank you very much for joining. Make sure that you do smash out that like button and do click the subscribe button if you're not already a subscriber. Make sure you are, because next week we have a subscribers only giveaway. So make sure you do subscribe to the channel, click that like button, and come have a chat with these guys. If you do want to know anything to do with the markets, any analysis or whatever, feel free to pick these guys' brain. But for now, I'm out. Peace.
Take care, Will.
You will.
Thank you. I hope you
All
have
right, Victor, how
lots
are
of.
you?
I hope Will has lots of juicy apples today and many days.
Yeah.
All right. So, um, what are you looking for on your charts, Samir?
Yeah, definitely. I'll share
There's
my
about
point of view. Before that,
there's about. Go
I
ahead.
took a trade yesterday. I told the viewers that I'm not gonna be taking trades, but there was a lot of confluence around this area that I discussed with our viewers yesterday to go long around this area. So I took risk here on my, of course, the Fivers account, and I secured some profit. Now I'm not gonna be trading. Now I'm not gonna be trading. But anyways, let's
That
discuss
was
about this
yesterday.
buy. Yeah, it was yesterday. First, I can
And
explain this buy. Then let's discuss
sure.
about today's buys. What I will be planning for today. Let me delete everything. First thing is this trend line. Price was at this trend line. First confluence for me. Okay. Second thing, I use support resistance horizontal zones. So this was a kind of a support area. We was having this area, and let's go to the 4 hour time frame. Let's see if we can work with some other areas. Let's just keep it a little bit below because we have more touches this way. Yeah, these two are the zones which we was dealing with in the previous session, which was yesterday's NYSE session. And if I go to the lower time frame, now I just want to go to the 5 minute. uh, I can go to the 1 minute even. Let's go to the 1 minute. Let me show you the behavior of the price around these areas. So, what kind of nature you guys are noticing here? It is not the impulsive nature. Price is fading away. Basically, the volume to the lower side, it is fading away. And once I see the momentum shifting to the upside, I took a trade. So I took the help of trend line to guide me if the momentum is shifting or not. This was the guideline for me, or a trend line for me. Once it break to the upside, I took two lots here. you know I got a more bullish candle, took two lots here. I think my overall risk was $600. My stop loss was somewhere around here. And once we started to retest this area, and we broke this another structure with the impulsive, these two candles, then I added more lots here. So my overall risk here was 1.2%. Actually it was 1% only, but my account is scaled up, so I'm saying 1.2%. But this is 1% risk here. So my TP was this area right here, this high. So this was my TP, and I closed around 1 to 1 somewhere around here. So that netted me in like 1% profit. So I am up like very decent percentage. So I don't want to risk my withdraw now. I'll just sit back, relax. I do have some other accounts that I will be trading today, which is in evaluation for today. Now you know the plan. This is what I did yesterday. For today we have to reanalyze what the market can do today. We can draw our guideline areas where the price goes, or if price prints what we plan, then maybe we can execute in today's NYSE session. So this is the first support area for me. I will not draw that trend line again, because we already have taken a support, but just for the reference point I can draw it for you guys. So this is the trend line, this is the support. What areas we have for today where price can trade? So this is the area, nearest area. I like to draw like 3 4 areas max where the price can potentially go in that particular trading session. So these are two areas that I have. Let's draw one area more, which can be this area. I think these three areas are fine, but just for the reference point, if price goes to if price decides to go below, so we have let's say this reference point area. Okay, we have like 4 areas which we can use, which we can enter off of. But we will not enter blindly. Once price gets at this area, we need to observe the nature of the price in this particular area. If we go to the 30 minute now, 30 minute we are printing lower lows. As you can see, this was a lower high, lower low. Maybe this can be the lower high point. And how will we know that? Let me give you a few my plan for today. So this can be a potential lower low, but if price decides to go up, maybe we can take opportunity for longs here. Step by step, let's discuss about few scenarios that this NYSE session can give us. So let's discuss about first scenario. Let me draw this trend line as well, because this is the trend line. EMA is bearish on the 30 minute. One thing we can see, okay, and this is the reference point to go short. Once price gets here, we will look for some kind of consolidation. Once we break out, then we can enter, putting the stop loss maybe here, targeting this area. This can be the first game plan. Okay, the second game plan can be, if price comes here, made a double bottom type of thing, and do some kind of consolidation, we can take the trade. Second plan for the day, it is this. Third plan can be, if price liquidate this low, maybe tap these areas, and then we can take a buy. This can be the third plan for the day. To me, this plan looks solid. I will get a little bit more confidence if I get this third plan that I discussed. Now the fourth plan can be, in today's session we can have more than 8 to 9 plans. Let's see what kind of scenario gives me the most confidence, so that I can enter in that particular trade. I'm forgetting the number. I think this was fifth plan. Okay. So if price impulse to the upside, this can be the shorting area. I'll just be a little bit quick. Okay. So if price, you know, um, What can be the other scenario? If price impulse to the downside, retest, this can be the shorting scenario. So these are a couple of 6 7 scenarios that I gave you guys. So now all we need to do is wait for our session and see how price behaves in these kind of areas. Okay, for me, I am neutral for today. I will observe what price can do. Maybe it can go to the upside or to the downside. I will take the sign from the market, then I will execute on that sign. For today, I am very neutral. Price can go to the upside also, to the downside also, but we have to see where there is more strength, we can act accordingly. So let me see if we do have any more information, so that we can use that in our favor. Let me draw this trend line as well. Okay, we are bouncing from here. I do like the plan for longs, to be honest. Why? Because we are on the trend line. We already have bounced from the trend line. So today I do want to consider longs. For longs, this area is good or this area is good. I want to take longs. That will be my preference. But now let's see what market gives us. I will not be acting impulsively on these areas. I will wait for something like this, like we saw in this area, which was price showing slowing down the momentum in our area. So that's what I like, and that's what I will be trading. And trend lines can be my guidelines, where if it breaks, or if it rejects, I can plan my trades accordingly. So this is the game plan for US 30. Let's see what we get today. We have like 30 minutes left for the NYSE to open. So you can sit back, relax. You can get your information together, and you can make few plans. If price do this, then I might can act like this. Few 2 3 plans, and then you can act accordingly. So yeah, let's see, these are my guidelines, or support resistance lines. Let's see how price reacts from this area. And let's take a look at NAS 100 also. I will not be trading NAS 100, because yeah, somebody just mentioned that as well. NQ, yeah. So for that also, we need to see the daily. We can draw support resistance. This can be the support area, and this can be the resistance area. What else can be there? Let's go to the 4 hour now. Okay, this can be the area which maybe we can utilize for today's session. Let's draw one more area which can be, let's say, this area. Okay, so price is rejecting from this area, as you can see. If we go to the smaller time frame, let's go to the 5 minute. Okay, let's go to the 1 hour if we do have anything. Okay, we have some kind of order block right here, as you can see, this kind of area. So for NAS 100 also, this area is good for shorting opportunity. This to this, if price decides to take support from here, then you can buy. But again, don't enter aggressively. That is gonna only cause you a loss. So you have to wait for some kind of confirmation. For me, the confirmation is some kind of trend lines, consolidations, patterns, head and shoulder pattern, some kind of double bottom, double top, trend lines, all these things. So I do like the plan of shorting this pair somewhere around here. I don't mind if it can, go a little bit up also. It's okay. I do need some kind of, confirmation. For me, confirmation might can look something like this. So then I will be executing this trade. So let's see what we get today. And yeah.
All right, that's that's nice. I like how you break down, you simplify the chart by having a couple of scenarios. And because if you don't have these scenarios beforehand, we
Hmm.
might think anything is possible. Like there are hundreds of possibilities, and yes, anything is possible. But
Yeah,
if
yeah.
you group these possibilities into a couple of discrete scenarios, and each one of them will have you trade or not trade in one direction or the other, you simplify what's expected, what you are expecting of the day, of your actions, of your performance to do on that particular day, right? On this specific day, you could say, well, if this happens, then I'm supposed to be looking for a long. And if that option or that area fails, I'm going to be looking for a short. I'm not going to be trading at all. And that
Mhm.
simplifies. I think that's important for our, you know, mindset, having simplify things as much as possible. We have a
Yeah,
couple of
exactly.
yeah, we have a couple of requests, EU, UJ Gold. So I'm gonna go to my screen if that's okay with you,
Yeah, yeah,
Samir.
completely fine with it.
Let's let me find myself in on the screen. All right, so on EU, it's
Before you continue,
quite
I'll be back in like 30 seconds. I just need to drink some water. You can
take your
explain our
time.
viewers.
Take your time. All right. Perfect. All right. So let me zoom myself out a little bit. Right, something like that. Okay, so let me take a look. So we have on the monthly time frame, we are retesting a fresh order block, which is was created by this outside bar. I all the time talk about the dynamics, the price action dynamics of the both side of the the market, the sellers and the buyers, what an outside bar is and how powerful it can be. But eventually, or the ultimate intention is to actually use it in your understanding, in your narrative, and understanding what's like more likely to happen so you can capitalize on it. And this is such a moment potentially. So we have a outside bar that is being retested, and that was yesterday. It's a monthly, so it can still go below the lower border of that order block and may or may not respect it. But as long as that line is in limbo, right, the validity of that order block is in limbo, you will see reactions as it interacts with that lower border, and that's something you can use. So we have on the weekly as well, we have the quasi that we talked about before. Actually, it's not a quasi on the weekly. It is just a fresh order block that was retested yesterday. But on the daily time frame, we do have two structures. Actually, three, but for now, only two are relevant. This is the third one, the last one. The first one didn't react to it at all, so there was nothing there to be had. But the second one we are getting, and it's not a we I discussed this on in our workshop on the Discord. The fact that we are hitting that 200 EMA on the daily, a time frame that is seen by just about anyone, everyone. The fact that we hit that 200 EMA tells you that likely we're going to have some slowing down of that bearish movement and possibly even a little pop. This is the daily, so it could be a candle, could be two candles. And on the lower time frame, that gives you plenty of opportunity if you can see that reversal coming up, or at least likely to happen in the near future. And that's what we're seeing as well, right? So we have multiple reasons to expect price to be either a little pop, a reaction, or at least a deceleration of this impulsive move we have seen since Monday. So we have the fresh. Well, it's not fresh. It's a quasi actually, which is this uh, quasi here, this structure. This is the head, left shoulder, the neckline broken, and we're left with two structures. This one belongs to a much bigger quasi, which is valid and should be watched, but it's not relevant right now. And this current pattern that I'm displaying is big enough for us to capitalize. So we have the first structure wasn't reacting. On the second one, we can see that the market did have a reaction, left a lower wick, and is currently showing a bullish candle. We don't know how that candle, the current candle will finish. Um, in order for this current candle today to create a new order block, price would have to close all the way up here, which is not impossible, but as we now see, not entirely very likely to happen, right? We still have to, there's still a lot that it would mean price would have to travel 111. The ATR currently sits at 88, so it's not even 100 and less than 150%. But current price action does not really indicate that. It doesn't seem like that's going to happen, but who knows? Maybe that will change. We did have ADP coming out about 45 minutes. The market's reaction was quite mute, and there is at about 50 minutes that there is that service PMI. So who knows? Maybe there is some more explosive moves coming up, but I don't see it. I don't see it yet developing, at least not yet. So if we go to the, so that means that what we'll likely see is perhaps just a continuation of that pop, of that reaction, of that order block, but not necessarily an an explosive V-shaped recovery that we'll be seeing creating daily order block right now. So that means that no, we have to manage our expectations and not expect something that is unlikely or not very likely to happen. If we go to the H2, let's see, we can see here how the market squeeze that order block. We talked about that extensively, how the how you could read these moves, these reversals, even if you don't have a market an entry model, by understanding the different levels and different parts of price action as it is going in the other direction, using other indicators like the ATR, you can understand and have a at least pieces of the puzzle to understand that something is happening. Maybe this is the moment, maybe of a big movement, and that could be the reversal. That was this point. It didn't really trigger, considering the quasis, but let's let's continue. So that's EU. On EU, the order block or that big candle that we have yesterday that created that V-shaped recovery I just showed you guys on the lower time frame, that left in a fresh order block on the H4, which was and still is fresh. However, it didn't trigger anything back then. There was some reaction, but it was right outside of my trading window, so I didn't capture it. You can actually see I was waiting and watching for price to reach that level, but it was before my time, so I wouldn't have been able to. Even if it did trigger, I wouldn't be able to trade it anyways. So because of my rules, that is. So we do have a fresh order block here. We should be looking for how price comes back. If it comes back, although that doesn't seem like it wants to do that, if it comes back to that area, how and if it gets ready for if it is developing and transitioning back into the bullish order flow, not looking like it's very interested in. If you look at the hourlies, what do we see? We see price actually breaking out of these previous high of yesterday's at the end of the day, and it's holding up, giving us a sense that it's actually giving us mixed signals, because if you look at these wicks, you will understand that price is not convincingly going up. It's going up and holding up, but leaving these big upper wicks, telling us that it's getting into selling pressure and it's being sold on each the last 4 hours. And if that keeps on, if that continues, automatically that means that eventually you'll see price going lower. However, the fact is that it did break and it is holding that line previously, intermediary or an interim breakout line, which is holding quite nicely. So it's giving you mixed signals on the total. I would say I would expect price to be pushing forward. Why? Because we did have quite a big movement without any meaningful retracement. As you can see on with the EMA, these EMAs are just for example, or to give you an idea of what price is doing. It's a very fast EMA, and we have changed direction. We are on the we have broken above this 12 EMA that this is, and there isn't anything to the left, as you can see, to stop us on that. That's on the hourlies, let alone on the H4, right? So the next level that we can expect some price supply being encountered with some supply, and actually it's a little bit higher because you have two order blocks there. It's that level. So between now and then, there's plenty of space for price to push a little bit higher, may or may not reach this before, perhaps this impulsive move it starts again and resumes its downward path, or not, right? So there's plenty of room, and we're just leaving this age for, so to speak. I think it is, I'm not interested at the current level, because we are basically at the middle of nowhere. This is where you want to be looking for the short, and this is where you want to be looking for the possible long, for the continuation move. So you're in the middle, you're in no man's land, right? That's treacherous. It can do both. It can go up, go down, and you really don't have anything yet, right? So that's why I think it's not clear right there in the middle, in the middle of the two levels on the H4. You want to be waiting for a price reaching one of them, so you have the advantage of that structure pushing you in the direction you think, or you expect, right? Going higher from this level and going lower from this level. So that's what we have currently. I'm waiting for this H4 to be retested. There's something similar on GU. Also, we have a level left behind that hasn't been retested yet. That could be interesting. But looking at the EMAs, you would see that price has started. It was trailing that line quite nicely, and is seemingly wanting to break out of it. And so we'll have to see. I don't see a clear path, or a clear level which I can trade from yet. Price needs to come back to these demand zones, or reach the next level for me to be looking for that short. In between, it's best to just leave the market. Just same thing as with breakouts. When the market is right at that trend line and hasn't broken out yet, and hasn't reacted as a fake out yet, it can go anywhere. You can get in, right? No one's gonna forbid, you know, prohibit you from getting into that trade. But you'll be best served if you wait for the market to actually make a move, whatever that move is, coming back and showing you some maybe lower time frame pattern, maybe something else happening, or actually breaking out, retesting, and then you're at a much favorable position, because you have more information, you have more data, you understand that the market is actually already started the breakout, and you're going with something, not you're not just going blindly, hoping for that breakout to happen. So that's a GU in a very similar place, coming also from a daily order block the uh, on the daily time frame. You can see that shadow right there. Let's take a look at it. Right, that's the power of these order blocks. Right, price comes to them, reacts, very strongly, squeezes them, reacts, and the third time as well. So if you were buying these levels as a swing trader, or even as a intraday, and you recognize that price is likely to be pushing up because of that daily order block, you know that alone on itself could have kept you, or made you profitable without many bells and whistles to your strategy. All right, so that's GU. Let's take a look at gold. We have people asking for them in no problem at all. That is what we are here for.
No more
Samir,
futures.
Richard,
Thank you.
Will,
Made your
and
money.
everyone here. Perfect. Let's take a look at gold. Yes, we have gold indeed. Let's take a look at that. On the higher time frame, nothing here to look at. There's no fresh order block, nothing on the quasi. And the weekly, same thing. The next weekly structure is all the way down here, and up here there's nothing to trade. There was, however, an almost outside bar. I, I I mentioned this before, but it's not an actual outside bar. Still, you can see how the market reacts to these, almost structures. Look at that, comes back and reacts out of it very nicely. But there isn't officially, like, per the definition that I use, there isn't any structure on the weekly, so we can continue lower time frames. Nothing else. What we can see here is that the market has been, from the creation of this order block, moved quite nicely in the direction you would expect after the retest, which is this, right? It creates the order block, comes back, retest, and moves away, hitting that area. That's fine. However, despite the fact that that's a very obvious move, and it's a nice reset kind of a scenario after we had this comet like move, which is healthy for gold coming for the coming sessions and weeks and months to keep on growing, because it had its reaction, its reset, and it didn't really break anything, right? They just come retested some broken highs all the way. Actually, it didn't really reach this, but very closely, almost reached that level, and it's now clear for that continuation move. And I think that this is just the same. This candle here we have here is very similar to what you see on a bigger scale, which is this whole movement here. Why do I say that? Because you have the market positioning and structuring itself very bullishly, making great strides in one direction, in this case, to the upside, but then it kind of resets itself without breaking any structure, without changing the sentiment, without you know signaling that it's going to go much lower. Same thing as this movement. If you were to market structure from what it's been doing, that's basically the move. It makes a huge move, comes back for the retest, for the reset, but actually doesn't really break anything. It just comes back into a area of consolidation, confirming that this move has still some future to go. Still, we can still expect in the future for this to continue, because it didn't break any structure. So that's a nice thing. And if you see that on a smaller scale, if you go to the H4, you can see that it is quite similar. I'm going to take off these EMAs because actually I don't use them in my trade plan. Let's see. So if you notice, let's mark this. All right. So marking the swings to just give you an idea of what we're doing, right? You could say this is the move, right? Coming back to maybe do something like this, right? So what is this showing us? Price is making higher highs, higher lows, and had a consolidation, had a breakout, and comes back. And you could consider this on the lower time frame as a break of structure. And my quasi line would be right here on the H4, but on the daily, you will see that it really didn't change anything. And if you look closely, where is it at? Same area that we had before. So what does that tell us? It did come down, break a structure on the lower time frame, but if we really as a swing trader, it just holding up. It's nicely coming back to equilibrium, and it can go both ways from here, especially as well that if you consider, let me give you the idea. If you go on the daily, you would see that there isn't really anything here that was broken, even though that was a very nasty move. And, this could be the beginning of, a lower top, totally. However, the way that it did it and the extent and the fact that we are already, as long as we're pushing on this candle and we keep on closing, keep on for the rest of the day and close as a bullish candle, I think we have the market has reset, come back, and is ready presumably for that continuation. Maybe not directly, maybe come back and hit some lower level, but eventually breaking up and continuing, because of everything I just mentioned. If we had if we still want to look at the break of structure that we had on the lower time frame, not on the daily, then that would be the following, right? That would be the left shoulder, the head, neckline, and the possible areas where you'd expect some kind of a reaction are all the way up here. So that's something you want to be taking into account. And the next one would be the head of that move. right? But that's it. To me, it's holding up quite nicely, coming back into zones of demand and reacting nicely. We'll have to see how it continues. But I think gold is, it's very, gold is very, the move down it had on Tuesday is looks impactful. It looks nasty, but technically it's not really that impressive. It's just a retrace of a much bigger move, which is the move we had from here.
That's awesome.
There you go,
Yeah,
right
to
here,
me
right? So it's
also, I
coming
think,
back.
yeah, that was
It
a
looks.
the the marking that you have.
Mhm.
I think that is a liquidity move. Then maybe we can go to the upside, as you explained.
We have one more left, which is the dollar yen. Is the market open? Not yet. About 6 minutes for the U.S. equities
Yeah,
to open. Your with your finger ready, Samir, for some action. Getting no, you said you're not going to be trading. You said
I have
you have
evaluation.
too much. You have too much money. You don't need money today, right? That's what you said.
Yeah, exactly.
All right. We're just making fun here. All right. So the on the daily time frame, we have the market uh, creating bearish order block on top of each other. So that's something you want to be you want to make note of the monthly. So if we get alignment for shorting this on the weekly, in the daily, then for sure we should take notice of it and look for a possible entry there, short that is. What else do we have? That's on the fresh order block on the monthly that is being retested, and on the weekly we are. It looks like price is not at all impressed with the structure it left behind, and I would assume that price needs something else and not the current supply zone. So I would be more interested in the top order block to look for a possible rejection. If it happens, then I'm gonna be a sell, but I'm not gonna be selling that just because there is a structure there. Why? Because the market has been very bullish, and it can, even though it creates these structures, it can continue further. I just want to have the order blocks in case um, I want to be in a position that if it reacts as according to the order blocks we see, that you are in the right side and the right direction of the market. But you don't want to be getting in before anything is confirmed. On the daily time frame, you can see that I mark the structures for supply zones ahead we have, and that's this area, which sits within the weekly, which also sits within the monthly. So there you have, when price comes to this area, you can start looking for possible reactions and be um, watchful for reversal, deceleration, and then reversal patterns, double top, breaking of structure. And if it does all of these or a couple of them, then you can start getting ready for that possible move short, I mean. And you want to be there, but we're not there yet, right? We're not there. The other reason why I think um it shouldn't be, the daily shouldn't be closing above that swing high, right? To me, that's a sign of strength. That means that the buyers are ready to continue higher. Maybe today, maybe in a couple of days, to push to the next level. The next level being that structure we have above. That's what we are currently seeing on UJ. And let's take a look at. You mean this one? Yes, I understand. Okay, so there is an undertone of bullishness to the to dollar yen, but currently we are showing intraday, we're showing some weakness, right? If you look at the open of last day, of the previous day, you can see that we are below that area. Whenever intraday we're below that level, it's going to be perceived as weakness, and you can expect price to continue. If it reacts something like this, you can expect it to continue to go lower, right? And on the contrary, if we're able to perhaps break this again and come back to retest, then you can expect this to happen. Maybe not today, maybe tomorrow, but basically that line will serve as a delineation between how when the switch is from bearish to bullish to be perceived by the market. That's the H4. I don't see anything. Nope, I don't see anything here. Um, there is actually an outside bar here. Price hasn't been at all very impressed by the fact that it easily went quite far away from that level. Retesting another outside bar below here, as you can see. Let's measure it. Yep, that's another outside bar. So I would think that that's the actual area to be mindful of. Okay, not this one, but this one. On the daily, on the H2, I mean, do we have anything else? All right, so this one has been taken out, invalidated because of that close on the daily, and this is the structure we have on the daily time frame. So as you can see, we have plenty of place and space for price to push lower with or without touching that order block before continuing. That's the likely, that's a likely path for price to continue. What else do we have? This is not a break of structure to me, meaning this isn't a left shoulder. That's not a neckline or that one, because it's weaker in comparison to this leg. And that's it. Actually, I don't see anything to go lower. I mean, lower time frame. Yeah, I don't see anything to go lower from. There is actually a nice reaction here. For a scalper, I'd be going long this area because of the price action we're seeing here. Let me indicate what I mean. You can see that the market is coming back to these structures and reacting quite nicely to them. Right, that's a very nice bullish reaction. Let me mark that as an hourly, and let's go to the 5 minute to see if there's anything we can trade. There is, yes. So that's the quasi. And so you look for the quasi in the area in described, and that would be this. It's without the H4, so technically, not technically, I'm not being able, I won't be able to trade anything that is without the H4, but that's just me. That doesn't mean that this reversal will, right? So you had one area here, didn't react and didn't use that one, and the next one would be this. So if price comes to this level, then it's a great place to look for a long, right? Confirming there's only two levels there. These are the levels to be traded, or the structures to be traded for that push. And if that were to be a trade, then the next level would be, you only have two structures. They're not very far away, but that would be one area and the second area right here. Very simple. there, right? So it'll be something like a long from this level and targeting that level or that one, depending on, time of the day, the something like that. As the market is changing posture, breaking these highs, coming back and retesting, that seems to be a nice move to do or to take. Very, very low time frame, because the market isn't exactly creating huge structures, right? If you look at the H4, it still hasn't switched back to bullish. This is still part of just a second bar of a reaction off of this H4, meaning it's not something you want to be holding for a very, very long time, but it can certainly work and make sense on a lower time frame. You get in on the retest and just target that move as long as price hasn't reached it before. If it already reached it, then I wouldn't be taking it. So this is fine, right? This move is fine, but this isn't. If it goes all the way to this level and comes back, then I don't want to take that, because I expect then price to continue lower. All right. Okay, so that's UJ. Really, a little opportunity there on the hourlies, not the hourlies, based on the H1 without the H4 alignment. And we can see what we talked about, that EU is looking still holding that level, even though it's not advancing either. It's looking like it wants to go lower, but it's still holding the level. So who knows? I think Samir is trading in the background. I see him focused. There you go. He broke
I
that
see.
level
I'm just,
on EU.
yeah.
Okay, so there isn't anything to trade. I would be waiting for price to get to this level, to this area, and there isn't anything there yet. We could be looking for this level as the market comes back into it. But that's it. It's not much, but that could be a trade. As the market is getting ready for that move, I'm not interested in the first order block that is shown there, because it's not overlapping with the H4. This is the area that I'm interested in. Just this. Just that. Nothing else. Doesn't get there, I won't do anything. There is a Yeah, I like the area. I actually like the area. There is a quasi and an entry order block here, right there. So that makes this area double. I have two reasons to get in. That's a nice thing. So I'm interested to look for price, what it does here. If it comes back, that's where I want to see some kind of a reversal on EU. Right? It can go through it, um, as long as it creates the pattern. Doesn't have to respect it. It doesn't have to be something like this, or on the line necessarily, but it has to create that structure on the lower time frame. And if it does, then we can take a look. And I don't think we can trade it in this session, but who knows? We'll see. Let's double check the ATR for current session, or the range, I should say. The range is 80. We just checked the ATR to be 88, meaning it basically did all its move for the whole day. So you shouldn't expect any expansion, right, outside of the current range. Meaning that's just to get your expectation in checked. We shouldn't be targeting for any breakouts of any kind. So if there is a trade where we should be looking for Let's see if we can find something here. All right, so there are three, three. That's nicely. That's exactly what we want to be seeing. We get one here, and that's the only one I'm interested in. Why? Because this one is also valid, but there's no way price can reach, the area of interest without invalidating that one. So we already know that's not going to be an area that we want to be trading. This one is, and the one at the bottom. But at the bottom, I'm not interested in this either because, well, price could come down wicked without invalidating this area. That could happen. That could happen. So actually, both of them, these two, I would be. So let me mark it with an alert. When price comes there, I'm gonna be alerted, and maybe if it happens in the current session, uh, then we can certainly take the trade off of that. We are 9 minutes into the open, Samir. What do you have for us? Is there something happening on the breakout, that Dow Jones that you were looking, that very attractive looking pattern? Has it been moving as you expected?
I'm just waiting for some kind of consolidation. I do like the price. It is on my one of the area. I just want some kind of consolidation here so that I can go long. I think 200 points stop will be fine. Yeah, I just need some kind of consolidation here so that I can take longs. We already saw a pause here and a little bit of more pause, and I like this small amount of pause here. Just a little bit more pause, then I might can build the confidence around this area and I can go long here. But again, right now we don't have any confirmation. We just have the area, and I'm just waiting for some kind of confirmation here. And for the confirmation, I want some kind of trend line breakout, which we don't have right now. Let me see what kind of stop loss that I have. I'll be having like 230 point stop loss. Okay.
That's nice.
So
How
let's
long?
see.
How
I'm just
many points you said?
waiting. It is 230 point stop loss, somewhere around that range, if any
Okay.
pattern prints around this area. But right now we are impulsing to the downside. There is no confirmation for me to go long here. So let's see. If we break this area, then this can be the next area. Just small pause here. That will be good. Let's see.
Nice. I
Yeah,
like
we are
that.
impulsing to the impulsing to the downside.
Okay.
What about you? Are
Ooh.
you focusing on any pair for this NYSE?
I'm looking at the NASDAQ, but I'm trying to get uh, I have my chart on the delay, so I'm trying to get my real time price feed,
Okay, okay.
but apparently that's not possible. Let me double check this. Okay, so I think I know how to fix it. Okay, hold on.
Okay, right now we don't have any confirmation to go long, so we are just waiting. I'm just waiting. On the trading view, the data feed is a little bit delayed, but if you use,
Yes,
the
I've noticed
platform
that.
that you are, yeah,
Trading view is always just uh, for analysis anyway, so I don't mind that. always been the case
Yeah,
with
yeah.
MT5 as well, and MT4. I don't trade on TradingView, so it's okay. Okay, so now I got real time price feed. Yeah, I'm looking at the NQ as well. There's a look. You're looking for a long. That is the 1 minute.
Yeah, it is the
Okay.
1 minute. This is a good area actually on the 4 hour. On the other area, we also swept this low right here.
Mm-hmm.
All I want is some kind of behavior that I've seen in past that I can relate to, so that I can build my confidence around it. Little bit down and then up. Beautiful. I'll be taking this trade. But if it breaks to the upside, for me it is 50-50. Let's see.
Mm.
I just
20
want one
some
more,
seconds
yeah,
for the close of
something
that
like this.
candle.
Yeah, then I'll be happy to take a trade here. Then my stop loss placement, yeah, is still 230 points or something like that. I think there is a news also. Yeah, this is news now. ISM.
Not yet, right? Is there news?
I think it is.
Oh
Yeah,
yeah, final
but
service
no, it is
PMI, but
8:30.
it's a yellow.
It is
It's a yellow
8:30. It is
folder.
still 15 minutes left. Yeah,
Mm-hmm.
but I think it's
Still have.
okay. We can. ISM is not gonna cause that huge of a volume or
Mm-hmm.
anything like that. I've seen in past. You will get a little bit of momentum, but I'm not expecting a huge momentum like big events like interest rates or maybe NFP or CPI.
Yeah.
Okay, I like this pause here. All I want is to break this trend line, which will indicate yes, buyers are stepping in. Right now, sellers was aggressive, but here, if you try to understand what price is doing, sellers are in decision right now. They are like, should I go to the downside or should I reverse from here? So for me, trend line will guide me what I have to do. And even on the 15 minute, I think EMA is kind of bullish only. Actually, on the 30 minute, it is bearish. But on the 4 hour, we have too much distance on the EMA. If you observe, this is also the order block right here. I just noticed it
Mm-hmm.
now with you guys. Yeah, this is order block. So yeah, that is also the confluence. Okay, we are kind of trying to go up. We are 24 seconds away from this candle to close. So I'll be placing the order at 1 second. Once the 1 second is left, that will indicate the candle is closing bullish. Because if I place right now, I don't know, this is 1 minute candle, it can always flip. So let's take a trade here with you guys.
I took a
Oh, we
long
have
on
closed.
and I took a long on NQ with a 60 stop, 60 point stop, 50 55 actually.
Okay, I also took a long here on US 30. So my stop loss is 230 points, as I mentioned, 230. Okay, I'm just adjusting on my platform here.
We have 169 likes. You guys can do better.
Let's go, guys. We are doing live trading with you, sharing our insights. I think we deserve a like. Yeah.
All right, I'm checking gold in the meantime. Let's see. We have gold. There is a nice area. Maybe I can talk about it later after you, Samir.
I'm already in this longs right here. Actually, the Monday was also winning day. Tomorrow, yesterday was also a winning day. If today it turned out to be a winning day, it will be a 3 day winning streak. So yeah, let's see what price uh, gives us, or this pair gives us for today. I'll be targeting 1 to
Mhm.
1.5 here. My stop loss is also very decent below this low, and we have multiple confirmations. We have this order block, and we saw other confirmations as well, and the trend line, support, resistance, all these things. So now all we have to do is just wait. 4 hour wise, we can target this area. Let me see where it is that. Okay.
I bought the retest of a 5 minute uh, structure. Maybe I can show my chart.
Yeah, you
Um,
can share your views.
you are on the you're on the low time frame. This is a trade long on NQ that I got in. Has a my stop. Actually, let me adjust my stop is at 5, around 5, and my entry, let me double check that, how much that is. Um, my entry is at 59, 25, and my stop is at 04, actually, 0450.
All right. I think the charts are different on future platforms and in this platform. Or is it same? Like
No,
the
no, there's a
values and
difference. No, there's a difference.
yeah.
There's definitely a difference. Okay, so that's the trade, and it's more of a feeler. It's not a quasi with uh with the order blocks on the H4, H1, as you can see, is just on the 5 minute. And the reason behind is just a little breakout. I expect price to be. We've had from the higher time frame, right? We are on a daily time frame. We are in a demand zone that we are retesting, even though we had a two. Let me check if my screen is showing. Yes, it
Yeah, we
is.
can
Okay,
see
so
it.
we have price did come back and retest made a double tap here, retasting successfully the daily order block. However, we came back, right? We came back to the structure, created, uh, um, came back to another demand zone that was left behind recently, that was still fresh, and it seems like we could be, all right, with given the lower wicks that we are seeing here, we could be have that there's that low probability but high reward scenario where we could be having a breakout, and if we even can get a little bit higher, right, something like that, uh, which is at all not that much of a deal for NQ, then on the higher time frames, things will look much cleaner, because that would be looking like the market is ready for getting pushing out of this daily order block, which you can
Hmm.
see we've been having a nice run, right? A nice run that
Yeah,
it seems like we're breaking out of it, and possibly, if we have an opening range drive, then we can easily be retesting these levels. I might take the trade off there, but depending on how it continues, maybe something more, maybe something higher. And if it's not if it's it's a small position, so it's not a big deal. So we'll see how it continues. Let's take a look on EU is still way out of the area that I'm interested in. This is the area that I'm interested into buying. That's the order block that creates the area for me. I'm interested in that area. It needs to reach that area, and afterwards, after it reaching that, I can start looking for a setup. It's not there yet, so it's not going to happen on GU. Same thing. It's not there yet. We do have an H4, but it's much lower. On gold, let's take a look on gold. We do have a little area here on gold that could be interesting for price coming back to. Let's see the H2. Yeah, I would say right there, although that's not fresh. That's hardly going to be fresh by the time it gets there. So that's something we cannot, probably will not be able to use. Let's take a look. What else we have? How about crude oil? Maybe you can take a look at crude oil, because we were looking at it yesterday, and I think
Yeah,
you had some trend lines. Actually, there's a retest here. Now that I see it quite nicely, we after the break came back very, very nicely, touching that. That happened yesterday night, though. Not exactly the time I would be trading, but I'm gonna switch to yours, Samir. What do you say?
yeah, yeah. You can share to my screen, and I can share my thoughts on crude oil. Then I can come back to my trade. If you go delete everything and going to the daily. Okay, daily, as I mentioned, we have already broken this trend line. So we have a couple of resistance areas or support areas. Okay, this is a very strong area. Why? Because price just reverse from here, and we have couple of bounces from here. Price is reacting in that from that area. If you want to take longs, now I will suggest you to wait for this bigger pattern to break out. If this breaks out, I think that can be a move. What can be the target? The next key area, which is I think this can be the area. Okay, this can be the area. So that is the analysis on oil here for you guys. But let's take a look at US 30 going to the 1 minute. So we have broken that trend line also. If I wouldn't have taken a trade here, I definitely would have taken a trade here. So I'm not doing anything wrong here. I am following my plan. I would have done 110%. I would have entered long here. So I'm okay with this trade. So now let's see. There is no reason I
You
wouldn't
entered.
have gotten. Yeah,
So you entered before confirmation, or
I
you
entered
had
a
you had
little
two
bit, this
confirmations?
choppy pattern, but still it was a trend line breakout. But if I was not involved here, I definitely would have involved here, somewhere around here. So I am in the right side of the market. According to me, I would have entered here according to my trading plan. So now whatever outcome is, I accept it, because from my side, I haven't done anything wrong. I know I am doing everything as per my plan. I'm fine with the outcome now. Here I was, little bit, okay, kind of a little bit risky, but now I am okay with the outcome, because I know these type of things work over the time. So yeah, I can sit back, relax now. It's okay. And my TP is also very logical above this high, and that 4 hour resistance that we have. These kind of pink areas that we have. So yeah.
I see them. You're watching from the 1 minute.
Yeah, but my stop losses are on the 15-minute structure. Levels are on the 4 hour, and
Hmm.
demand and supply areas also on the higher time frame, 2 hour, 1 hour, and 4 hour. My entry technique is on the 1 minute.
Yeah, I see that.
Yeah, it
It
is
looks
consolidating. I think it is waiting for the news that we have on the 8:30 according to my time zone. We have 3 minutes left for the news, and sadly, that is also the end of the stream. But let's see, where the price goes in that particular news. Yeah,
nice. All right. We have 2 minutes and some seconds to go. Let's uh, remind everyone that we have a Discord community ready to receive you with open arms and to keep you company while you're trading your funded account or your evaluation account, and while you're learning about trading. And that's what we do, right? That's what we love. Same as you, I assume. Trading is our passion, same as you. So join us on the Discord community. and share your experience, whether it be positive or not so positive. That's all part
Hmm.
of the journey. We're not Samir didn't win on day one or in year one. Same goes for me. It took me some time before I start seeing results, and even more time before I start seeing consistency. So um, yeah, you're all invited to our workshop. We have one in about 45 minutes from now in the Discord community. If you don't know how to get in, it is on the dashboard, so you have to buy an account with the Fivers. We are celebrating next week the 100K subscribers. Yoo-hoo! We actually reached that
100K.
level. Yes, we reached
Amazing.
it, and
What if we gather crowd?
so we're gonna be giving away a lot of accounts. It's gonna be a nice celebration. We've had these many times before, but this is going to be bigger. Why? Because 10, 100K is just bigger, right? It's a nice round number that we would like to celebrate it large, have a big celebration about it. So you're all invited to keep on tuning in next week as well. Mm, do we have
4, 3, 2,
how's the
1. Now is the news. Okay, news is coming. We are going to the upside. Now we are going to the downside.
how
And
is the
yeah, let's see
how is the
uh, the numbers.
no, I mean, how is the how's the Hindi community coming?
Hindi community, we have the cricket event, guys. It is gonna be
Yeah.
awesome event. So you guys can play cricket with us, and whoever wins, we have multiple teams. Our marketing manager on Twitter, he has shared the details. And if you want to know more about it, make sure you are joining our Telegram channel, and there I will we will post the details about this tournament that we will be having. Basically it is going to be in Indore, so if you are close to that city, you are all invited. And if you want to know about more about this particular tournament that we will be having, of course we will be doing giveaways also in that particular tournament. Whoever wins or have the best performance. So the details you can find it in our Instagram, which is the Fivers India. And if you go to the bio of our Instagram, there you can find the Telegram community as well. So if you're from India, make sure you join our Instagram, which is the Fivers India. You can find the Telegram link in our Instagram, and make sure you are subscribed to our The Fivers India YouTube channel as well, so that you can see success stories and all the educational content in our native language, which is Hindi here. So
Nice.
I can see very good momentum here on US 30. We are going in my direction. I think on NAS also, NQ. It is going in
Mhm.
decent direction. But sadly, we are about to end this stream for today. But don't worry, guys. We will be back tomorrow, same time, same energy. These type of analysis, live trading, you will see tomorrow as well. So with that being said, guys, we'll see you tomorrow. And this trade, whatever happens in this trade, I will update you guys tomorrow about this. So loss or win doesn't matter. I'm following my plan. That's what I want you guys to do. Follow your plan. I think results will be in your favor over the period of time. With that being said, guys, thank you so much for being here. And yeah, see you tomorrow.
All right, that's a nice wrap. Samir, take care and see you tomorrow. Bye bye.